Good morning everyone. So in our previous class we completed up to input tax credit fully, and we are now going to discuss value of supply. You can look into page number 87. Page number 87. Value of supply is important for the purpose of determining the GST payable, because in GST we follow ad valorem method. Ad valorem method means we will take some value and that value we will multiply with a rate, so we will get the GST payable. So that value is nothing but the transaction value. Section 15 subsection 1 says the assessable value. Assessable value means the value on which GST is assessed is known as assessable value. The assessable value is nothing but the transaction value if two conditions are satisfied. What are the two conditions? Price must be the sole consideration. Supplier and recipient are not related. So price must be the sole consideration means apart from price there should not be any other consideration. For example, you are going to an electronic shop and you are buying a new TV in exchange of your old TV, and you pay some 20,000 rupees. Now whether price is the sole consideration? No, because for the shopkeeper along with 20,000 rupees he is also receiving the old TV. So old TV will be non-monetary consideration. So that is this. So price must be the sole consideration. In this example, is the price the sole consideration? No, there is some other consideration in the form of old TV. So therefore transaction value not possible. Then again, related party transactions, already we saw who are related. In case of related party transactions also we will not take transaction value. First of all, what is transaction value? Transaction value means the price involved in the transaction. For example, I am providing you a service for 5,000 rupees, that 5,000 is the transaction value. I am selling a product for 2,000 rupees, the 2,000 rupees is the transaction value. The price involved or the price actually paid or payable will be taken as the transaction value, and that is the meaning. Then inclusions, if you see, so here, so we have 5 inclusions in total, 15(2)(a) to 15(2)(e). So first there is a supplier who is making supply of goods or service or both to the recipient, for which recipient will make the payment for supply. This payment for supply will be taken as the transaction value. And 15(2)(a) says taxes, duties and cess by whatever name called other than GST shall be included in the value. So for example, entertainment tax which is paid will be added to the value, and on the top of that only GST will be computed. For example, when you go to a cinema theater, 190 rupees will be the ticket price and entertainment tax is say 19 rupees. Now we need to add that 19 rupees and 209. On the 209 we will be paying GST at the rate of 28%, which means while computing GST we are going to add entertainment tax. Same way on import, when you are paying IGST you need to add customs duty. Remember, GST is the last tax, means while computing GST, that is value for GST, all taxes, duties and cess by whatever name called should be included in the value. But very important point, if it is charged by the supplier to the recipient, for example, there is one question, property tax is paid by the property owner and the property tax is not recovered from the tenant, will it be included in the value or not included in the value? Definitely not included in the value. Why not include in the value? Because even though property tax is paid by the property owner, is it charged to recipient? He did not charge it to recipient. That's why it will not be included in the value. That is this. So any tax other than GST shall be included in the value as per 15(2)(a). Then 15(2)(b), if you see, recipient is incurring the expenditure. On whose behalf? Recipient incurs the expenditure on behalf of the supplier, then it will be included in the value. If recipient is incurring the expenditure on his own account, it will not be included in the value. For example, I am a supplier and I have to deliver the goods to your location, and I deliver the goods to your location, fine. Now suppose if I am not able to deliver the goods to your location and you are incurring the transportation cost, actually I should incur the transportation cost, on behalf of me you are incurring the transportation cost. Will it be included in the value? Yes, because it is actually supplier's liability which is incurred by the recipient. Who should do the transportation? Supplier. But as you are in need of the goods, you arrange your transportation and you paid separately something, definitely it will be included in my value because the recipient incurring expenditure on behalf of the supplier. Another example, supplier has to buy the raw material. Say I am buying the raw material for 4,000 rupees. Actually, I should have paid to the raw material supplier, but instead of me paying, you are paying it to the raw material supplier, which means you paid my liability. Actually, I should have paid to my raw material supplier, but you are paying it, which means on behalf of me, you are making the payment. So that is an indirect consideration for me. Very simple. My expenditure you are incurring means that is an indirect consideration for me. Na? So definitely it should be included in the value. That is this recipient incurring the expenditure on behalf of the supplier should be included in the value as per 15(2)(b). What if the recipient is incurring expenditure on your own account? Example, say the X factory cost. X factory price means I have to deliver the goods at my location. Now you incur transportation cost. It is on your own account, not on behalf of me. It's not that my liability you are incurring. You are incurring the expenditure on your own account, because the type of the contract is what? X works contract or X factory contract. X works or X factory contract means the product will be delivered at my factory gate. Now you need to take care of transportation, so you incur the transportation cost. Again, it will not be included in the value because you are incurring the expenditure on your own account, so that will not be included in the value. Got it? 15(2)(a) what? First inclusion, taxes, duties and cess by whatever name called other than GST. 15(2)(b) recipient incurring expenses on behalf of the supplier. And next 15(2)(c), that is supplier incurs any expenditure and charges it to the recipient. At which stage that expenditure should have been incurred? Before or at the time of delivery of goods, or before at the time of supply of services, then it should be included in the value. If it is incidental expenses, any time it may be incurred. What is incidental expenses means? Without incurring that expenses, the supply cannot be made, is known as incidental expenses. Example, installation expenditure for AC is an incidental expenditure. Without installation, how the AC will work? So therefore, the dealer who is selling the AC will also do the installation, even though the installation is done after delivery of goods, but it will be included in the value. So incidental expenses will always be included in the value, whereas other expenses will be included in the value if it is incurred before or at the time of delivery of goods. Packing is an example of incidental, installation is an example of incidental, so then it should be always be included in the value, because incidental don't say anything. And what is the thumb rule to decide whether it is incidental or not? Without incurring the expenditure, the supply cannot be made, is incidental. Even without incurring that expenditure, still the supply can be made, but this will just add value to the product, will be other expenses. Example, you go to a restaurant and you order for dosa. Will they give only dosa? No. They give chutney and sambar also. Chutney and sambar is what? Incidental expenditure or other expenditure? Incidental expenditure. Without incurring chutney sambar expenditure, how the product can be delivered? So therefore it is incidental expenditure. Whereas if you are asking for vadakari, so that vadakari or medu vada etc. and all this is what? Other expenditure. Even without that also you can eat. But if you have vadakari, the taste will enhance. So therefore it will be coming under other expenses. You understood or not? So therefore incidental always include. Packing is incidental because packing is essential. Installation is incidental. It will always be included. Transportation cost. So usually delivery charges like that they will charge. Whenever you order a product in some e-commerce website, they will add delivery charges. What is this delivery charges? Incidental or others? Others. But is it incurred before at the time of delivery or after delivery of goods? Before at the time of delivery of goods. Definitely it will be included in the value. Is it clear? Suppose if it is incurred after delivery, will it be included in the value? No. For example, I am delivering a car to you. You have purchased a car and I have delivered the car, I registered the car, everything. But thereafter you did not like the color of the car. So you asked me to change the color of the car. I am changing the color of the car. Now this is called as expenditure, customization charges, color change. Usually lot of people will buy certain colors of car and they will think it will look good because in brochure it will look good. But reality when they see, they did not like that color. Okay. So then mostly copper color. Copper color actually they expect differently, but the reality will be it is like orange color. Orange color means again it will become like a BJP party vehicle. So due to that reason, people wanted to change the color. When they want to change the color, it's a customization charges. Even though incurred by the dealer, is it incidental or other expenses? Other expenses. Is it incurred before delivery of goods or after delivery of goods? After delivery of goods, it will not be included in the value. Then what is the treatment? It will be treated as an individual supply, separate transaction. Okay, that is this. So whenever supplier incurs the expenditure and recovers from the recipient, if it is in the course of supply, such expenditure to be included in the value, and that expenditure can be incidental expenses or other expenses. And what if the expenditure is incurred as a pure agent? Then it will not be included in the value. That already we discussed. Resident Welfare Association will be paying the statutory charges which is paid on behalf of the tenant. Example, property tax I told you, or any other municipal levies which is paid by the Resident Welfare Association and in turn recovered it from the tenant. Will it be included in the value? No. One more example we saw, electricity charges. The electricity bill is in the name of the tenant, but which is paid by the association, in turn recovered it from the tenant. Will it be included in the value or not? That electricity charges will not be included in value. Why it will not be included in value? Because all these cases, it is the liability of the recipient which is incurred by the supplier, so it will not be included. Got it? So this point, so last time they have tested related to that MCQ, municipal taxes, some point where property tax is paid by the association, in turn recovered it from the tenant, it should not be included in the value. That point it is. Then next one, 15.2c we have seen. 15.2a, taxes, duties and cess by whatever name called other than GST. 15.2b, recipient incurring expenditure on behalf of supplier. 15.2c, supplier incurring the expenditure and charging it to the recipient. 15.2d, that is interest, late fee or penalty for delay in receipt of consideration. Remember, we will come across interest in two places. One is interest on loans, advances, deposits in exemptions, that is exempted. Interest on loans, advances, deposits is exempted. The other interest is interest on account of delay in receipt of consideration. That interest on account of delay in receipt of consideration will be included in the value and will be chargeable to GST. Interest received on account of delay in receipt of consideration means I have to receive money from you, have to make payment within 3 months. You did not make payment within 3 months. You are paying beyond 3 months. Now in that case, definitely I will collect some interest from you. That will be included in the value. Interest late fee for delayed payment shall be included in the value. Then next one, 15.2e. 15.2e talks about subsidies. Who will be giving these subsidies? Subsidy will be given by government or others. First, subsidy you should divide into two. Subsidy directly linked to the price, subsidy not directly linked to the price. Subsidy directly linked to the price means what? Subsidy is with respect to my outward supply. For example, subsidy fees for every product sold or every service rendered. If you remember, I was telling, for sale of EV vehicle, some subsidy will be received from the government. That is directly linked to the price. For every vehicle sold, that will be received. Same way, one NGO is giving some money for a coaching center because the coaching center is offering coaching at a reduced rate to below poverty line students. So this is per student they are giving. So this per student or per product, per unit, like that related to our outward supply, if they give the subsidy, that is directly linked to the price. Whereas subsidy which is given, no way connected to our outward supply, generic subsidy. For example, subsidy for setting up a project in a backward area, subsidy for promoting green energy initiative, subsidy for giving employment to women. All these are general subsidy, no way connected to our outward supply. So then what should be the treatment? This general subsidy, not directly linked to the price, that is subsidy irrespective of the outward supply, ignored and it will not be considered in the value. So don't consider it in the value. For example, if you see these terminologies like this, subsidy for setting up a plant in backward area, subsidy for giving employment to women, like this, no way connected to our outward supply. If you are getting the subsidy, you just ignore it in the valuation and you write a note that these are not directing to the price and not considered in the value, full stop. It will be treated as donations. Actually, it will be treated as donation. And donation already we know, conditional donation, unconditional donation. If it is a conditional donation, that will be treated as consideration for which supply will happen. If it is unconditional donation, not treated as consideration, consequently it is not a supply at that point. Ignored and not considered in value, so it is treated as donation. What if the subsidy is directly linked to the price? If the subsidy is directly linked to the price, means the subsidy is with respect to our outward supply, then again you need to divide into two. Is it from CGSG or is it from others? If it is from central government or state government, it is to be excluded from the value. If it is from others, then it is to be included in the value. So from central government or state government, don't include in the value. Because why we should not include? Because it is not treated as consideration. If you remember consideration definition, consideration excludes subsidy from CGRSG, therefore it should not be included in the value. Whereas if it is from others, then definitely it should be included in the value. From others means who? NGO or foreign government or local authority or any other person. Then that is the treatment of this subsidies. And usually whenever you get the subsidy, you will be having a doubt with respect to what we need to do. So depending upon the question, we need to alter it accordingly. For example, there is a price, that price is somewhere like 2000 rupees. Subsidy from state government. So we'll just take this question, you will understand. Say this. So price of the goods, price of goods is 2000. Price of goods is 2000. Subsidy from state government is somewhere like 500, and subsidy from NGO is somewhere like 300. Now what will be taken as the value of supply? Depends. What will be taken as value of supply? That will be depending. So first we should see whether the given price is after considering subsidy or without considering subsidy. If the given price is after considering subsidy, then we have a different treatment. If the given price is without considering subsidy, then we have a different treatment. Okay, what is the meaning of price after considering subsidy or price without considering subsidy? View 1, price after considering subsidy means price after considering subsidy. Price after considering subsidy, like that it will be given in question, or in question they will give price net of subsidy, like that. What does it mean? It means that there is some X as the price. From that price we reduce the subsidy that is given in the question, so we got the given price 2000. That is the meaning of this statement. Price after considering subsidy means some original price is there. From that price we reduce the subsidy, so we got some balance. What is that balance? That balance is the given price. That is the meaning of price after considering subsidy. Whereas price without considering subsidy, what does it mean? View 2, price without considering subsidy. Price without considering subsidy. Price without considering subsidy, which means that the subsidy, that X itself is 2000, means we have not reduced the subsidy from the price, original price. The original price itself is the given price. That is price without considering subsidy. Now let's analyze depending upon the view or depending upon the assumption that is given in the question. But sir, will it be given in the question itself? Yes, it will be given in the question whether the price is after considering subsidy or price without considering the subsidy. So see here, first the price of the goods is 2000, subsidy from state government 500, subsidy from NGO will be 300. First we need to take the price. What will be taken as the price? 2000 rupees will be taken as the price. Price will be 2000 rupees. And after this 2000 rupees, first is subsidy from state government. Subsidy from state government. So what is the treatment of this? If it is view 1. So first as per provision, what is that we need to do? Subsidy from central government or state government is to be included or to be excluded? To be excluded. Subsidy from state government is to be excluded. And in the given price already we excluded the subsidy. So therefore ignore it and don't consider, because already it is excluded. See, it is to be excluded as per the provision. In the given price, what is the assumption? Price after considering subsidy means while arriving at the price we reduce the subsidy. as per provision it is to be excluded. In the given price it is already excluded, so therefore we don't have to do anything, just ignore. Then subsidy from NGO, subsidy from NGO as per provision, what is the treatment? As per provision it is to be included in the value, but in the given price it is reduced, so therefore we need to add. What is that? We need to add this 300 rupees we need to add. So now you will get value of supply. So the value of supply will be 2300 will be taken as the value of supply. This is the treatment to be followed. First we need to see whether the price is after considering subsidy or without considering subsidy. If the price is after considering subsidy, which means while arriving at the given price, the subsidy given in the question has been reduced, so therefore accordingly the treatment will change. If it is subsidy from CGRSG, it is to be excluded as per provision. In the given price it is already excluded, so just ignore it. And if it is subsidy from others, it is to be included, but the given price it is excluded, so we need to add. First you need to see as per provision, second what they have done in the given price, and third what is the treatment to be followed. Then view 2. Suppose if the price is without considering subsidy, then that X itself is 2000 rupees. Now we need to see subsidy from state government. As per provision what we need to do? Subsidy from state government as per provision, it is to be excluded. In the given price we have not yet excluded, because the given price is original price, so we have not yet excluded, so we need to deduct. We need to deduct, that is 500 rupees. Again I am repeating, subsidy from state government is to be excluded. In the given price it is not excluded, so we need to deduct. Then subsidy from NGO, to be included or to be excluded? To be included. In the given price it is already included, because we did not reduce anything. The given price itself is 2000, so therefore you ignore it. So how much will be taken as the value in this case? 1500 will be taken as the value. Sir, answer will change? Definitely answer will change, because the assumption you are changing, na, definitely it will change. And in the absence of information in the question, which assumption we need to take? This is the usual assumption. This is the usual assumption, which means when the question is silent about whether price is after considering subsidy or without considering subsidy, you write the assumption that the given price is after considering subsidy, and you need to follow view 1 always for the purpose of exam. Got it? So say this. That's what I have given. If the question is silent, consider the given price as after reducing the subsidy amount given in the question, that is original price minus subsidy will be taken as the given price. So this is the usual assumption that we need to follow while solving the questions. Okay, the logic is simple, pa. In case of view 1, you know what is the logic behind it. So from the customer we are getting 2000, and from state government we are getting 500, and from NGO we are getting 300. So whatever money we receive from customer we will take, from state government we will not take, because that is not consideration. Whatever we receive from NGO we will take, so that it will be 2300. Now you understood the logic behind this. Why are we taking like this? Then whereas in the second view, what is the money received from customer? The money received from customer is not 2000, because that 500 and 300 rupees when we receive, 500 and 300 when we receive, we need to give that benefit to the customer. See, first 2000 we collected from the customer, then whenever we receive 500 and 300 we will pass on that to the customer. We have these two types of models. If you take electric vehicles, at the time of sale of electric vehicle itself we know how much subsidy we will be getting from the government, so therefore they will reduce it at the time of collecting the money from the customer. Whereas in case of solar panels, first they will sell the solar panels, collect the money, then you need to log in into the website and you need to place the request for subsidy. Then you may get or you may not get. Suppose if you are getting the subsidy, then the dealer will pass on that benefit to you. So that is the reimbursement model. Okay, so therefore in that case, what is the net amount collected from the customer? 2000 minus 800, that is 1200 we collect from the customer, because the view 2 is what? Price without considering the subsidy, means first we collect 2000, thereafter whenever we receive the subsidy we pass on it to the customer. So which means net amount from customer 1200, from state government it will be, so 1200 only, na, because 2000 minus 500 minus 300, that will be, so 800, 1200, correct. State government will be 500, from NGO it will be 300. So whatever money we receive from customer we will take, state government will not take, from NGO we will take. So therefore, the value will be 1500. That is the logic behind this. But this logic you cannot write in exam. This is for your analysis or remembering purpose. But reality is what you need to do. First you need to follow this. As per provision, what we need to do. In the given price, what they have done. Based on that, what is the treatment. As per provision to be included. In the given price already included. What you should do? Ignore. As per provision to be included. In the given price it is already included. So ignore. Second, as per provision to be included. In the given price not included. So what you should do? Add. As per provision to be excluded. In the given price it is already excluded. Ignore. As per provision to be excluded. In the given price not excluded. So you need to deduct. Okay. That is with respect to this. Next, there is one clarification in this regard. Whether incentive paid by Ministry of Electronics, usually for low value UPI transaction or RuPay debit card transactions. So that is low value means what? Up to 2000 rupees. I am the shopkeeper and you are coming to my shop and you are scanning the QR code and you are making the payment. So what is the payment? Less than 2000 rupees, because you are all purchasing the revised book and practice manual, and what you did, you scanned through our QR code and you made the payment to me. Correct? Now in this case, so what will happen? Whether I will be required to pay any processing fee on this? No, I don't have to pay any processing charges on this, because right now on UPI transaction, the acquiring bank, what is the acquiring bank? So did you scan, did you see the bank? Paytm it was. Okay, so Paytm scan only you did and you made the payment. Now in that case, Paytm is the acquiring bank. Whether they are going to charge any money from me, for example, you purchase this book for 300 rupees. When you scanned and paid 300 rupees, whether I will receive 300 rupees? Yes. So will the Paytm charge anything to me? No. Why they will not charge anything to me? Because they get the incentive from Ministry of Information Technology and Electronics in order to promote the RuPay transactions or UPI transactions. But provided the transaction amount is up to 2000 rupees. If the transaction amount is beyond 2000 rupees, definitely they will charge some money to me. But if the amount is up to 2000 rupees, they will not charge any amount. They will not charge any amount. Who? Acquiring bank, because they get an incentive from central government. Whether this incentive which is received by them from the central government, is it treated as subsidy? Yes, it will be treated as subsidy from central government. And what is the treatment of subsidy from central government? To be included in value or not to be included in value? Not to be included in value, to be excluded from value. That is this. Usually such incentive is provided if the amount in a transaction is up to 2000 rupees, it is considered in the nature of subsidy by central government and not included in the value. Consequently, GST is not payable. Sometimes what will happen, this particular subsidy which is received by the Paytm will in turn give it to other members. So who are the other members? Say for example, so we have this voice box providers, or we have some other merchant onboarding agencies. Like that, lot of people will be involved in this system. In this UPI ecosystem, lot of people will be there. To all of them, the Paytm will, already Paytm got an incentive, that they will in turn share it with others. Whether the incentive which is shared by others is also excluded from value of supply? Yes. That is also deemed as, deemed as subsidy from central government. Actually it is not received from central government, but it is deemed as subsidy from central government. You understood? Then here also you can sit, front and all, lot of space is there. Okay, if you are sitting in the front, you have any feeling like I will scold you, etc. and all, nothing of that sort. Okay, you happily sit. Then see this. Sharing of incentive by acquiring bank, at least in life you have to come front, correct? So how many days we will be in the back bench only? So coming to the front is an opportunity, we have to use that. Sharing of incentive by acquiring bank with various stakeholders in the digital payment ecosystem. What is that I told you? First there will be this acquiring bank, which will in turn share the incentive with others. What is the treatment of the incentive which is shared with others? That is also deemed as subsidy from central government. So sharing of incentive by acquiring bank with various stakeholders in the digital payment ecosystem, that is Paytm, Pine Labs, merchant onboarding agencies, as approved by NPCI, is also considered as subsidy and it will not be included in the value. Then look into this. Expenses incurred by supplier and recovered from the recipient. We need to check whether it is as a pure agent or in the course of supply. I told you. If it is as a pure agent, that will not be included in value. Correct? Huh? If it is in the course of supply, and when it is pure agent, actually it should be whose liability? Recipient liability, which is incurred by the supplier. If it is a pure agent, it will not be included. If it is in the course of supply, divide into two. Is it incidental expenses or other expenses? If it is incidental expenses essential to make supply of goods or services, will it be always included in value? Yes. Always it will be included in the value, whatever may be the case. Example, packing charges and installation charges I gave you. Suppose if it is other expenses, not essential but adds value to the supply of goods or services, and if it is incurred before at the time of delivery of goods or supply of service. Example, transportation charges I discussed with you. So before at the time of delivery of goods or supply of service, then it is to be included. If it is after delivery of goods or supply of services, then it will not be included. I gave you example of customization charges. So that is after delivery of goods or supply of service, that will not be included. Whatever I discussed, it is there in that, including the examples. Then look into exclusions from the value of supply. What we have seen so far, 15 subsection 1, meaning of supply, assessable value, meaning of value, value of supply, that is assessable value equals to transaction value, price included or price involved in the transaction, actually received or receivable, provided two conditions are satisfied. Price must be the sole consideration, supplier and recipient are not related. And then we have seen 5 inclusions. 15(2)(a) taxes other than GST, and then 15(2)(b) recipient incurring expenses on behalf of supplier, 15(2)(c) supplier incurring expenses and charged it to recipient, and then 15(2)(d) that is interest, late fee or penalty for delay in receipt of consideration, 15(2)(e) subsidy from other than central government or state government, but that is directly linked to the price. Okay, so these 5 inclusions. Then we are moving on to exclusions. 15 subsection 3 talks about exclusion. In that exclusion, they are talking about discount. Discount is divided into 3. Discount given before or at the time of supply, discount given after supply, but the terms are agreed before at the time of supply. Third, discount given after supply, but the terms are not agreed before at the time of supply. See the first one. When the discount is given before or at the time of supply, in short it is known as pre-supply discount. So what is the treatment of pre-supply discount? It is allowed as deduction. It is allowed as deduction provided it is duly recorded in the invoice. Example of pre-supply discount is trade discount, volume discount, quantity discount, regional discount. These are all examples of pre-supply discount. Means at the time of supply or before that itself the supply is given. For example, 10,000 rupees is the price of the product and you do the bargaining. When you do the bargaining, I may give a discount of 1,000 rupees. Then what should I do? 10,000 minus 1,000, so 9,000. Like that I need to give you invoice. So I will pay GST on 10,000 or 9,000, only on 9,000. So it is allowed as deduction. Whereas if the discount is given after supply, supply over, I prepare the invoice and thereafter I give you the discount. Whether the terms are agreed before at the time of supply? Yes, terms are agreed before at the time of supply. Example, cash discount. In case of cash discount, usually what we will do, first we will tell you have to make payment within 10 days. If you make payment within 10 days, then I will give you discount, like that I will tell, correct? Now in this case, so the discount is given after supply, but the terms are already agreed. What is the treatment of that? Even then it is allowed as deduction, but the problem is already we prepared the invoice and already we paid the GST. Then what we should do in this case? Simple. First you prepared an invoice, say same example, 10,000, 1,000 rupees. First we prepared an invoice for 10,000. So I will give the invoice for 10,000 rupees and thereafter 1,000 rupees I gave a cash discount. For the 1,000 rupees I will give a credit note. Why credit note? Recipient shows what balance in supplier's books? Debit balance. Debtor shows debit balance. Now I am giving you a discount, means your debit balance gets reduced. Means what should I do? I need to make you credit. So which means credit note will be given by supplier to recipient. Is it clear? When the credit note is given by supplier to recipient, as a recipient what you need to do? You need to reverse the ITC. Why you need to reverse the ITC? For example, say this. If the transaction is for 10,000 rupees, if the transaction is for 10,000, so price is 10,000 plus GST at 18%, 10,000 plus 18%, that is 11,800. Now what is the entry in the books of supplier? In the books of supplier, what is the entry for this transaction? Recipient account debit, recipient account debit, how much? 11,800 to sales. So supplier will record the sales for 10,000 to sales account 10,000 to GST payable account. What is it? GST payable account 1,800, correct? Now same way, what is the entry in the books of the recipient? In the books of recipient, so it will be purchases. So purchase account debit, purchases account debit, that is 10,000, and ITC account debit, ITC account debit 1,800 to supplier account. To supplier account is how much? 11,800. Now this is at the time of issuance of price, invoice. And now what happens? There is a discount, cash discount. And what is that cash discount? Say that cash discount is at 5%. So 5% cash discount means how much? 590, correct? How 590? You calculate 11,800 into 5%. 590 will be the cash discount. In that cash discount, how much is the discount towards the value? 500 rupees. How much is the discount towards the GST? 90 rupees. Now what is the entry for this? In the books of supplier and in the books of recipient. In the books of supplier. Now definitely supplier has to give a credit note. Why credit note needs to be given? Because the recipient balance gets reduced now. The recipient balance gets reduced. So far the recipient account will be showing 11,800. Now that 590 rupees, it gets reduced. When 590 gets reduced, so what is the entry to be passed? And moreover, it is a loss to the supplier. So debit all losses. So therefore discount account debit. Discount account debit. What is the discount account debit? 500 only. 500 only. So because this 90 rupees is not their loss, to that extent their liability gets reduced. So therefore already they recorded a liability of 1,800. Now to the extent of 90 rupees, their liability gets reduced. Liability shows what balance? Credit balance. When the liability gets reduced, what we need to do? We need to make a debit. Okay. So therefore GST payable account debit. GST payable account debit, that is 90. Okay. You can sit before also. GST payable account debit 90. So to recipient account. So what is it to recipient account? That will be 590. Okay. So GST payable is showing a credit balance that get reduced. So now tell me, what is the consequence of credit note? Whenever credit note is issued, what happens to the liability of the supplier? Liability of the supplier gets reduced. And for the recipient, in the books of recipient, what is the entry because of this credit note? Come on. And the discount is a income for them. And when recipient account got credited, then the supplier account should be debited, correct or not? So supplier account debit 590 to discount is a income. So income we need to credit. So to discount account 500 to ITC account. ITC actually shows a debit balance that needs to be reduced to the extent of 90. Now tell me what happens to the supplier because of credit note. The liability of the supplier gets reduced. Liability of supplier gets reduced. And what will happen to the recipient? The recipient's ITC gets reduced. Means the recipient should reverse the ITC. Okay. That is the impact. So therefore that's what it is given. Suppose if the discount is given after supply, but the terms are agreed before at the time of supply. Example, cash discount, it is allowed as deduction provided two conditions are satisfied. Condition number 1, credit note is issued and recipient should reverse the proportionate ITC. Recipient should reverse the proportionate ITC. And how will supplier know that the recipient will reverse the proportionate ITC? For that they have given one clarification, that is, after every financial year the recipient should check what is the ITC that is reversed with respect to that supplier. For example, I am the supplier, you are my recipient, and throughout the financial year I have given you multiple credit notes. For all these credit notes, you need to reverse the ITC. What is the total of this ITC? If the total of this ITC to be reversed by you against this supplier is up to 5 lakh rupees, then you need to give me a declaration to me stating that you have reversed the ITC. On the strength of this declaration, my liability has been reduced. So department will not question me. Suppose if the ITC component that you need to reverse is more than 5 lakhs in a financial year, then in that case you need to get a CA/CMA certificate from your CA/CMA, and that should be given to me. So which means that you have reversed the ITC. So tomorrow department, when it asks me whether your recipient has reversed the ITC or not, I will either show this declaration or I will show the CA/CMA certificate. So they will not touch my liability. Is that clear? So when it is CA/CMA certificate ITC to be reversed against the credit notes which is issued by the supplier, ITC to be reversed against the credit notes to be issued by the supplier in a financial year, means total of all credit notes. Say this. How to ensure recipient has reversed the proportionate ITC? ITC does not exceed 5 lakhs in a financial year. It's not 5 lakhs per invoice, 5 lakhs in a financial year. Against each supplier or all the suppliers? Against each supplier. Then supplier shall obtain a certificate or undertaking from the recipient. Suppose if the ITC exceeds 5 lakhs in a financial year, then supplier shall obtain certificate from recipient's CA/CMA. And this certificate or undertaking includes details of invoices along with the supporting details, like you reverse the ITC, how you reverse the ITC, where you reverse the ITC. Usually where you need to reverse the ITC, GSTR 3B. So that GSTR 3B of yours, copy of yours, should also be annexed to that particular certificate, or DRC 3. And this CA/CMA certificate shall contain UDIN. UDIN means unique document identification number. Otherwise you will take their letterhead and you will type it to whomsoever it may concern. So I have reversed, my client has reversed the ITC. Signature only na, what is there? You can sign. And stamp, what is there? That rubber stamp is available anywhere. If you pay 10 rupees or 15 rupees, you will get a rubber stamp. Got it? So they will put it, and therefore it is easy job. But whether this document is genuine document or not, we will know only through UDIN, that is unique document identification number. That will be given by whom? That will be given by the institute, ICA. ICA will give that document identification number, means I need to upload the document, and when I upload the document they will be giving a UDIN, and that UDIN should be mentioned in that, and I need to give it to that, so that when you enter that UDIN number in the ICA website, so you will know, yes, it is a genuine document only. That is this. So certificate of CA/CMA, either CA or CMA, shall contain the UDIN, and ITC reversed in a financial year is the sum of all the heads, C, GST, SGST, IGST and compensation cess, and certificate or undertaking not required to be uploaded in the portal. We don't have to upload it, but make it available to the officer during any proceedings. Then whether GST is applicable on additional or penal interest on the overdue loan. Listen, generally when a EMI is not paid, what will happen when a EMI is not paid? So there will be some penal interest, correct? So whether that penal interest is chargeable to GST or not. First, the interest involved in EMI is taxable or exempted, you check. If the interest involved in EMI is exempted, then the penal interest is also exempted. If the interest involved in EMI is taxable, then penal interest is also taxable. For example, you take a housing loan, education loan, or you take any personal loan, etc. All these loans, the interest will be exempted. Why it is exempted? It will come under interest on loans, advances, deposits. Therefore, it is exempted. Now, you did not pay EMI of a housing loan or personal loan. Now, for non-payment of EMI, they will be levying a penal interest. What is the treatment of that penal interest? As the main interest is exempted, the penal interest is also exempted. Whereas, in case of credit card EMI, you will swipe the credit card, convert into EMI. In every EMI, there will be interest portion. Whether that interest involved in credit card is taxable or exempted? Taxable. Generally, interest on loans, advances, deposits is exempted, but interest involved in credit card will be taxable. As interest involved in credit card is taxable, so for non-payment of the EMI of credit card, there will be some penal interest. That penal interest is also taxable. Got it? Instead, if the bank levies penal charges, then what is the treatment? Suppose if they levy penal charges, then penal charges will be like penalizing in nature, that will not be treated as consideration. You got it? penal charges like that. Instead of calling it as penal interest, they have to levy penal charges for loans, etc. and all, because RBI gave a circular that instead of levying penal interest, please concentrate. It's a very important amendment for September exam. This is not tested in exam so far. Very, very important. That is, instead of penal interest, the bank should charge penal charges in case of loan. In case of loans or other transactions, they have to charge penal charges. What is the treatment of the penal charges? That penal charges will be treated as penalizing in nature. Liquidated damages which are penalizing in nature, treated as consideration or not treated as consideration? Not treated as consideration. So please make note, that is, amount collected by banks, amount collected by banks or financial institutions or NBFCs. Okay, amount collected by banks or financial institutions or NBFCs on account of overdue loan, divide into two. It can be called as either penal charges or penal interest. Okay, when penal charges, when penal interest. So penal charges is levied in case of all loans or advances other than credit cards or any other borrowings. Okay, so external commercial borrowings or trade credits, etc. So usually penal charges will be levied on loans or advances, whereas penal interest will be levied on credit cards or external commercial borrowings or trade credits. And suppose if it is penal charges, usually on loans or advances, what is the treatment of these penal charges? Treated as consideration or not treated as consideration? Not treated as consideration. Why it is not treated as consideration? It will come under liquidated damages which are penalizing in nature. So therefore it will not be treated as consideration. Consequently, will there be GST or no GST? When there is no consideration, while there will be GST, so consequently there is no GST in this case, no GST. Suppose if it is penal interest, then you check whether that penal interest, the main interest involved in EMI is exempted, interest involved in EMI is taxable. Okay, if interest involved in EMI is exempted, if interest involved in EMI is exempted, then penal interest also exempted. Suppose if interest involved in EMI is taxable, if interest involved in EMI is taxable, then penal interest is also taxable. If the interest involved in EMI is exempted, penal interest also exempted. If interest involved in EMI is taxable, penal interest is also taxable. So this is the treatment that you need to adopt. And when this penal interest will be applicable in case of credit cards, external commercial borrowings and trade credits. And what is the example for this? Example, trade credits. Generally in trade credits, the interest involved in EMI is exempted, whereas in case of credit cards, the interest involved in EMI is taxable, so penal interest also taxable. Okay, so this is a very important area. Definitely it will be tested in exam, trust me. You finish now writing this, then say this: whether GST is applicable on additional penal interest on the overdue loan. There are two transaction options involving EMI that are prevalent in trade. In view of the provisions of law discussed above, these two options along with applicability are as follows. If it is a hire purchase transaction, as the EMI in hire purchase transaction is taxable. What is hire purchase transaction means? There will be two parties, hire vendor, hire purchaser. The hire vendor only will give the finance. Now in that case they will be collecting the EMIs, that is installments, and this interest is on account of delay in receipt of consideration, and this interest is taxable. Please try to understand. In hire purchase transaction there will be two parties, hire vendor and hire purchaser, and the hire vendor will collect the installments. In that installment one interest will be there, that interest will be on account of delay in receipt of consideration, that will be taxable. As this interest is taxable, penal interest is also taxable. Whereas in hire purchase financing there will be three parties, hire vendor, hire purchaser, and one financier will be there. Now what financier will do? For example, Bajaj Finance. What Bajaj Finance will do? First they will make payment to me, and in turn they will be collecting money from you. Okay, in turn they will collect money from you. So now financier collecting EMI, in that EMI interest will be there na, that will be exempted. Why? Because they are giving the financing, the interest is exempted. So what you need to remember, interest involved in hire purchase is taxable, interest involved in hire purchase financing is exempted. As interest involved in hire purchase is taxable, for non-repayment of the EMI some penal interest is collected, that is also taxable. Whereas hire purchase financing is exempted, so as that interest is exempted, for non-repayment of EMI in hire purchase financing some penal interest is levied, that penal interest is also exempted. That is this. As this interest is included in the value, even penal interest for delay in payment also include in value. Whereas this interest is exempted, so penal interest is also exempted. Then next one, what is the treatment of inclusions or exclusions in the given price to arrive at the value? First we need to see, as per provision, whether an amount is to be included or to be excluded. Already I told you. Say as per provision it is to be included, in the given price already included, ignore. Same way as per provision it is to be excluded, already excluded, you ignore. For example, packing charges to be included, in the given price it is already included, so ignore. Then subsidy from central government or state government to be excluded, it's already excluded, so ignore. Then an amount is to be included, example, transportation charges or delivery charges to be included, but in the given price not included, so we need to add. And amount is to be excluded, in the given price it is not excluded, example, discount is to be excluded, but the given price is without deducting discount, so therefore we need to deduct. Then what is the treatment of no claim bonus? No claim bonus is usually given by the insurance companies to the insured whenever they are renewing the policy. So when you renew the policy, for example, first year you have taken the insurance, second year you renew the policy. In case of renewal, you will not pay full amount. Say renewal premium is 4,000 rupees, you will get some 800 rupees as a no claim bonus. Means you don't have to pay 4,000, you have to pay 3,200. Now in this case, what is the treatment in the hands of the insurance company? Very simple. This no claim bonus which is given by the insurance company to the insured will be like a pre-supply discount. So therefore in the premium receipt they will mention renewal premium 4,000 minus no claim bonus 800, so balance 3,200, like that they will mention. So therefore GST will be payable only on 3,200. So this no claim bonus is like a pre-supply discount allowed as deduction. Got it? And as you are getting this 800 rupees as a discount, is it treated as consideration in your hands? Because if this no claim bonus is not there, how much you would have paid out of your pocket? 4,000. Now how much you are paying? 3,200, means 800 rupees you are saving. So income saved is income earned. So 800 rupees you are earning. Whether you need to pay GST on that 800 rupees, whether you need to pay GST on that 800 rupees, no, that will not be treated as consideration in your hands. Why it will not be treated as consideration in your hands? Because this particular 800 rupees what you are getting, is it because you did not lodge the claim you are getting in expectation of this 800 rupees, or you not lodging the claim? No, whether you are lodging the claim or not lodging the claim is not in expectation of this 800 rupees. Just because accident did not happen, so we did not lodge the claim. If the accident has happened, we would not have lodged the claim. You understood? Are you getting this? If the accident happened, we would have lodged. Accident did not happen, so we did not lodge. Definitely not in expectation of 800 rupees. 800 rupees is peanuts. For the sake of that, we are not doing. So that 800 rupees should not be treated as consideration in the hands of the insured who is getting that money. Okay, say this. It shall be claimed as deduction as pre-supply discount from the value if the same is shown in the invoice as per section 15 subsection 3. Okay, here you can sit. Then next one, so you understood the treatment of no claim bonus. So what is the treatment of no claim bonus? Is it allowed as deduction? Yes, it is allowed as deduction because it will be treated as a pre-supply discount. So therefore it is allowed as deduction. Then next one, TCS. TCS under Income Tax Act. TCS under Income Tax Act, should it be included in the value or not included in the value? Usually under Income Tax Act, whenever there is a sale of car, sale of motor vehicle beyond 10 lakh rupees, 1% will be collected as TCS from the recipient. For example, I am a car dealer. You are buying a car and the car is for say 15 lakh rupees. When you are buying a car for 15 lakh rupees, then you have to pay 1% as TCS to me. When you are paying this 1% as TCS to me, should I include it in that 15 lakhs while computing the GST? No, I don't have to include it. Here they can sit. There also is there, first bench. Say this. So TCS, so say this, TCS, so 15 lakhs, 15 lakhs into 1% is how much? 15 lakhs into 1%, 15,000. So therefore, how much I am collecting from you as a dealer? 15 lakh plus 15,000, that is 15 lakh 15,000. Should I pay GST on 15 lakh 15,000 or only on 15 lakhs? Only on 15 lakhs. Because this 15,000 which is collected as TCS will not be included in the value, because first of all, this TCS under Income Tax Act is an interim levy not having the character of tax, because whenever this 15,000 rupees is collected from you, it is not a tax on your income, it is a tax on your expenditure, because you are buying the car, you are not selling the car, you are buying the car. So when you are buying the car, when that 1%, that is 15,000 is collected, it is not at all a tax on your expenditure, it's a tax on your income. So tax on your income will not be included in the value. Got it? Clear? So because it is not a tax, first of all it is not a tax. Income tax is what? Tax on income. Income tax is not a tax on expenditure. That's the reason why it is an interim levy. Why are they levying TCS? Just to catch hold of the person. Say you are buying a car for 15 lakhs. From where you got the money? This 15 lakhs worth of car you are buying, from where you got the money, they wanted to know. That's why. So what you need to remember, one line, TCS under Income Tax Act, under section 15(2) of CGST Act, any taxes, duty shall be included in the value, but TCS is not includable in the value because it is an interim levy not having the character of tax, so it should not be included in the value. Then next one, in case of business facilitator and business correspondents, usually business facilitators and correspondents are appointed by the bank as agents, and whether that will be included in the business correspondent or agent, business facilitators consideration, or it will be included in the consideration of the bank. For example, say this, banking company appoint a business correspondent or facilitator. This business correspondent or facilitator will provide the services to the customer on behalf of the bank. Means whatever charges that the bank has to collect will be collected by business correspondent or facilitator from the customer and will pass on these charges to the banking company. Now the question is whether these service charges will be included in the value of business correspondent or facilitator or banking company. Ultimately, who is going to get that money? Banking company. So they should include it in their value. Then what is the benefit that business correspondent or facilitator will get because of this? They get a commission. That commission will be included in their value. So value of supply will be commission. And already we discussed yesterday that commission, if it is rural area exempted, urban area taxable, in that also business facilitator to banking company will be RCM, business correspondent to banking company will be FCM. So in case of business correspondent, GST payable under FCM on the commission. In case of business facilitator, GST payable under RCM by the banking company on commission. Then, so this CBSE circular on molds and dies is not there, pa. It is not there in the study material. You just ignore it. So we don't have to learn this. The CBSE circular on value of molds and dies to be included, because of late many students are finding it difficult to clear CA intermediate itself. So for that reason, they have removed all difficult concepts which you cannot understand. They have removed literally. TDR FSI concept they removed, import of services they removed, and even this molds and dies circular they removed. All easy things only they have kept. In that also, if you are not able to write and clear, you should look your face in the mirror. Okay, seriously. This they have reduced it. All these objective is for one reason. They wanted to make you clear in the exam. So now CA Institute is following a inverted triangle. Foundation they are controlling a lot. So pass percentage in foundation they have drastically reduced. And thereafter intermediate they have wanted to give more pass percentage and final more pass percentage. That is the idea. That's the reason why minimum to minimum effort if you put and little bit push if it is there, definitely you will clear. It's not that very difficult. 3 years before clearing CA intermediate was very difficult, but it is not the case now. If you honestly put the effort, definitely you will clear. And surprisingly, a student who got exemption in one paper, in other papers is getting 38, 39 like that. 1 or 2 marks they are putting and they are making them clear. So yes, I have seen that situation also. That's the reason why I am telling you, in one group at least ensure that one paper you are strong enough, so that you will be getting exemption there. So 60 plus. And in other 2 papers, if you aim to get at least near to 40s also, you will be in the verge of clearing the paper. Okay. Then look into this. Input tax credit already we completed, and we will see questions later. We will complete composition scheme also. Page number 122 you take. Page 122. Composition scheme. Composition scheme is basically a simplified scheme for payment of GST at reduced rates. Rather than paying GST at the regular rate, a person who is opting for composition scheme will pay GST at the reduced rates. What is that reduced rates? Like 1%, 5% like that. We have the reduced rates, and this composition scheme is mandatory or optional? Definitely it is optional. A person who wanted to go for composition scheme can opt to pay for that scheme, or they can continue in the normal scheme also. And if composition scheme is opted, there are 2 types of composition scheme: 10(1) composition scheme and 10(2)A composition scheme. 10(1) composition scheme is applicable for manufacturer, trader and supplier of food service provider, whereas 10(2)A composition scheme is applicable for manufacturer, trader and any service provider. If composition scheme under 10(1) is not applicable, then they can opt for 10(2)A. And what are the disadvantages of composition scheme? 2 major disadvantages. Number 1, they cannot avail ITC on their inward supplies, and whatever GST that they need to pay out of their pocket. Okay. and they cannot charge that GST to the customer. That is a disadvantage of composition scheme. You can see. Ram, don't send anyone thereafter. Enough. Disadvantages of composition scheme is that they cannot avail ITC on inward supplies and cannot charge GST to recipient. Suppose if I want to pay 5% or 1%, that I have to pay out of my profit. I cannot charge at 1% or 5% to the customer. So this is the disadvantages of composition scheme. Disadvantage of composition scheme is that they cannot avail ITC on inward supplies and cannot charge GST to the recipient. And what are the advantages of composition scheme? See, if I am not charging GST to you, so what will happen to the consumer? As a consumer, you have two traders, trader A, trader B. Trader A is charging you GST. Trader B is not charging you GST because trader B is under composition scheme. Whom will you prefer? Definitely you will prefer trader B only, not trader A, correct? So therefore, sales volume of trader B will increase. When the sales volume of trader B increases, definitely the total profit will increase. Even though profit per unit is less for trader B, but the total profit will increase. That is the advantages of composition scheme. Sages. Advantage of composition scheme is that total profit increases as the sales volume increases, and also it will lead to reduction in compliance cost. How there is a reduction in compliance cost? A normal scheme person is required to file 2 returns in a month, GSTR1 and GSTR3B, and in a year 12 into 2, 24 returns. But a person who is under composition scheme is required to file only 4 returns, that is 4 quarterly returns. Therefore, automatically the filing cost, if you see, it got reduced. Apart from that, a person who is under normal scheme is required to maintain lot of accounts and records, but a person under composition scheme is not required to maintain that much accounts and records. So the compliance cost will automatically be reduced for a person under composition scheme. That is also one of the advantage, as tax is payable quarterly, and this also there. That is, a normal scheme person is required to pay monthly tax, but a person under composition scheme will pay tax on a quarterly basis. So when you get a question, if at all, a theory question, and write a short note on advantages and disadvantages of composition scheme, you need to write this and explain it in detail. Next, look into this composition scheme under 10.1 and 10.2a. First we will see 10.1 composition scheme, and 10.1 composition scheme is applicable to whom? To manufacturer, trader, supplier of food service provider. However, if I want to provide, I am a manufacturer or a trader or a supplier of food service provider, I am under 10.1, but I want to provide some other service also. Can I provide some other service also? Yes. To what extent I can provide the services? To the extent of 10% of turnover during the previous year or 5 lakhs, whichever is higher. To that extent I can provide the services. For example, previous year it is 120 lakhs. 120 lakhs into 10% will be 12 lakhs. 12 lakhs or 5 lakhs, whichever is higher, 12 lakhs. Current year, to the extent of 12 lakhs, I can provide the services and still I can be into composition scheme. So main business should be what? Trading, manufacturing, supply of food. And this will be other services, any other services up to this limit. What will happen if I cross this limit? I cannot continue in the composition scheme under 10.1. And what should be my aggregate turnover during previous year, so that current year I can opt for composition scheme? My aggregate turnover during the previous year should not exceed 1.5 crores, or in lakhs if you see 150 lakhs, then only current year I can opt for composition scheme. Should we check this aggregate turnover for previous year or current year? Previous year. And in case of special category states, it will be 75 lakhs. What are the states for which 75 lakhs is applicable? I discussed it in the first class itself. MMTN, USAM, MMTN, USAM, MMTN, Manipur, Mizoram, Tripura, Nagaland, U for Uttarakhand, S for Sikkim, A for Arunachal Pradesh, M for Meghalaya. For that, what is the limit, pa? 75 lakhs is the limit, okay. And what is the benefit of reduced rates? If I am a manufacturer, the rate applicable to me is 1% of total turnover. But 1% you should not write in exam. You should write it as 0.5% CGST and 0.5 SGST, because a person under composition scheme cannot make interstate supplies. they should make only intra-state supplies due to that reason. So 0.5 CGST, 0.5 SGST on what turnover? Total turnover in case of manufacturer. However, trader what rate? 1%, the same 1% only, but at on what? Taxable turnover. See this, 0.5 on total turnover, here 0.5%, 0.5% on taxable turnover. In case of trader or service provider up to the limit, here up to 10% we are providing the services na, that up to 10% limit also. So this 1% on taxable turnover is applicable. Whereas supply of food service provider, what is the rate applicable? 5%, that is 2.5% CGST, 2.5% SGST on what? On total turnover in case of supply of food service provider. This is the benefit of reduced rates. And what is the current year limit for the reduced rates? Current year also up to this 1.5 crore or 75 lakhs, they will be under composition scheme. The moment they cross this limit, they will be going into normal scheme. What is the difference in condition? First we need to understand to whom this composition scheme is not applicable. So this is an important theory question. Composition scheme under 10.1 is not applicable in the following cases. Page number 124 you see. That is, remember this mnemonic S9 RCM. Section 9 is RCM. S9 RCM. Okay, like that you remember. S for service provider other than supply of food or beyond 10% limit. If you are providing services other than food, you cannot be in 10.1, or beyond the 10% limit, then also you cannot be in 10.1. All these restrictions is for the previous year or current year? Current year. Following restrictions are for the current year in which composition scheme is opted. What is the S point pa? Service provider other than restaurant service provider or service up to a limit. Then N for non-resident taxable person. Who is that non-resident taxable person? A person who is coming from outside India to India and he is not having any physical place of business in India. He cannot go for composition scheme. Then I for interstate supplier of goods or services. Suppose if I am making interstate supply of goods or services, I cannot opt for composition scheme, whether it is taxable or exempted. Then N for non-taxable supplies. Suppose if I am making non-taxable supplies, what are non-taxable supplies? Alcoholic liquor for human consumption and petroleum products. I cannot go for composition scheme. Example, generally restaurant can go for composition scheme, but if the restaurant serves liquor, they cannot go for composition scheme. Same way, a petrol bunk cannot go for composition scheme. Why? Because they are making non-taxable supplies. So if you are making non-taxable supplies, you cannot go for composition scheme. Then E for supply of services through e-commerce operator, not goods, not supply of goods through e-commerce operator, supply of services through e-commerce operator. So for example, there is a restaurant and that restaurant is eligible for composition scheme, but if they sell food through Swiggy or Zomato, then they can opt for composition scheme or they cannot opt for composition scheme. They can because that e-commerce operator is not liable to deduct TCS. Suppose if the e-commerce operator is liable to deduct TCS, why TCS not applicable for Swiggy, Zomato? Because Swiggy, Zomato, they have to pay GST under 9.5. Whenever they pay GST under 9.5, so section 52 TCS is not applicable. So supply of services through e-commerce operator liable to deduct TCS, liable to deduct TCS. Okay, be careful pa. In case of restaurant which is supplying food through Swiggy, Zomato, can definitely opt for composition scheme. Why they can opt for composition scheme? Because Swiggy or Zomato is not liable to deduct TCS. Why it is not liable to deduct TCS? Because they are liable to pay GST under 9.5, and yesterday class I told you section 9.5 and section 52 are mutually exclusive. So if 9.5 is there, 52 is not applicable. So definitely they can go for composition scheme, not a problem. Suppose if the e-commerce operator is a e-commerce operator liable to deduct TCS, then I cannot make supply of services through that e-commerce operator. Then if I make services, I cannot go for composition scheme. Then R for RCM under 9.4. What is RCM under 9.4? Promoter, builder, making purchase from unregistered person. If that stock is with them on which GST is not yet paid under RCM, means they made purchase from unregistered person that they kept in the stock on which GST is not yet paid, they cannot go for composition scheme. RCM under 9.4, non-paid stock held as on the date of opting for composition scheme. Then C for casual taxable person. Who is a casual taxable person? A person who is coming from another state to this state and is not having any physical place of business in this state is known as casual taxable person. And usually lot of people from north, they bring the garments to south and they will be opening up a factory outlet kind of. So they take a marriage hall and they will mention flat 50% off, stock clearance sale, buy 2 get 3 free, like that and all they will be selling. So these people are called as casual taxable person because they don't have any physical place of business in India. Temporarily they will take one place and they sell the goods and they will leave the state. So these people are required to register, but they cannot go for composition scheme. So that is his casual taxable person. Then manufacture of certain notified goods. What are those notified goods? Remember, ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. These goods, if they manufacture, they cannot go for composition scheme. And if a trader is making sale of ice cream, for example, Ibacco ice cream shop, can they go for composition scheme? Yes, definitely they can go, because this restriction is only to the manufacturer. For a trader, this problem is not there. Trader can definitely go for composition scheme. Only manufacturer of these goods cannot opt for composition scheme. Only manufacturer. Then the above non-applicability is same for 10(2)(a) also, except that service provider cannot, because 10(2)(a), what I told you, any person, any service provider can go for composition scheme under 10(2)(a). So for 10(2)(a) also same restriction, except that service provider, any service provider can go for composition scheme. So what is the difference in condition? For 10(1) it is S9 RCM, for 10(2)(a) it will be 9 RCM. The remaining, the only S point is different, remaining and all restrictions is common between 10(1) as well as 10(2)(a). And all these restrictions again we need to check for which financial year pa? Current financial year. Then look into 10(2)(a). 10(2)(a), come back to page number 122, look into 10(2)(a). When 10(2)(a) composition scheme is applicable, if your aggregate turnover during the previous year does not exceed 50 lakhs, then current year you can go for composition scheme under 10(2)(a). To whom it is applicable? Manufacturer, trader or any service provider, any service provider. What is the benefit of reduced rates? 6%. 6% on what? Total turnover. And what is the current year limit for the reduced rates? 50 lakhs. Means once they cross 50 lakhs, they cannot be continuing in the composition scheme and they have to come out of the composition scheme. What is the difference in conditions? So that is, manufacturer of notified goods cannot opt for composition scheme, that is same. Extra they gave supplier of notified services, but that notified service is not yet notified. Only manufacturer of notified goods is there, common for both. That's what I told you. So here S9 RCM, here 9 RCM, and these are the notified goods. Then see the next page. What is the meaning of aggregate turnover for determining the eligibility of composition scheme? What is the general meaning of aggregate turnover? General meaning of aggregate turnover is that we need to take 4 plus and 3 minus. Taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies. These 4 we need to add. See, the general meaning of aggregate turnover is that 4 inclusions, 2 exclusions. What are the 4 inclusions? Taxable supply, exempted supply, non-taxable supply, zero rated supply. What are zero rated supply? Export of goods or services, supply of goods or services to SEZ, that is zero rated. So these 4 should be taken in aggregate turnover. And 2 minus. What are the 2 minus? Inward supply under RCM. Basically, turnover means outward supply. So if you have some inward supplies, means it is your purchases. Why purchase will come in sales? So even though you pay GST under RCM, the inward supply under RCM will not be included in your aggregate turnover. And also taxes, that is CGST, SGST, IGST, UTGST will not be taken in aggregate turnover. You understood the regular meaning of aggregate turnover? 4 plus 2 minus. What are the 4 plus pa? Taxable, exempted, non-taxable, zero rated. What are 2 minus? Inward supply under RCM and taxes. Which taxes? GST taxes. Okay. However, what is the meaning of aggregate turnover? For determining the eligibility to opt for composition scheme. Take page number 126. Take page number 126. What is the meaning of aggregate turnover? For determining the eligibility for composition scheme. Here, for determining the eligibility for composition scheme, whether we need to take previous year aggregate turnover or current year aggregate turnover. Previous year. Current year, whether you are eligible or not, depend upon your aggregate turnover of the previous year. So we need to check the aggregate turnover of the previous year. Whether aggregate turnover is computed state wise or all India basis. All India basis. And what and all should be taken. This general meaning of aggregate turnover is same here. That is taxable supplies you include, exempted you include, non-taxable you include, zero rated you include. Also interstate. And inward supply under RCM will be excluded. GST also will be excluded. Extra 2 points you need to remember. What are the 2 points? Pre-registration turnover is included. Interest on loans, advances, deposits is excluded. So tell me, what is the meaning of aggregate turnover for composition scheme eligibility? 5 plus 3 minus. What are the 5 plus? Taxable, exempted, non-taxable, zero rated, and pre-registration turnover. What is pre-registration turnover? Before getting registered, you will have some turnover now. Only after crossing the threshold limit for registration, you need to register. Say for example, you commence a business and after crossing 40 lakhs, you register, and post registration, your turnover is 120 lakhs. Now what is your aggregate turnover? 120 plus 40, 160. So next year you cannot go for composition scheme. Is it clear or not? So therefore pre-registration turnover should be included. And what are the 3 minus? Inward supply under RCM, taxes, and interest on loans, advances, deposits. This is the meaning of aggregate turnover for determining the eligibility for composition scheme. Now from this aggregate turnover to turnover for computing 10% limit. From this aggregate turnover to turnover for computing 10% limit, what is the difference? So why we will take the turnover for computing 10% limit? Current year, if you are under 10(1), being a manufacturer, trader or supplier, food service provider, you can render any services up to 10% of turnover during previous year. So what is that 10% of turnover? Turnover meaning is what? Ditto, copy paste. Copy paste, only one difference is there. What is that? Here it is all India, here it is state or union territory wise. Remaining and all same. So this also we need to check for the previous year. This also we need to take 5 plus 3 minus, and only difference is that aggregate turnover we compute for all India basis, but this we will compute state wise or union territory wise. And next, what is the difference between this turnover for computing 10% limit versus turnover for payment of GST under composition scheme? So what is the difference? Definitely this turnover is for the current year, because current year only now you need to pay tax under composition scheme. This 10% turnover is for previous year, but this turnover is for current year. And you should not have non-taxable supplies or zero rated supplies or interstate supplies. Why? If you have, you are disqualified from the composition scheme. In that S9 RCM visa, that if you are making interstate supplies, you are not eligible. If you are making zero rated supplies, you are not eligible. If you are making non-taxable supplies, you are not eligible. Sir, previous year you can have non-taxable supplies, but current year after opting for composition scheme, you should not have non-taxable supplies. Okay, so that is this not applicable. And inward supply, rest of the things and all same. Extra one more point, here pre-registration turnover included, here pre-registration turnover is excluded. Why pre-registration turnover is excluded? Because current year only after registering you need to pay GST. Current year only after registering you need to pay GST. For example, previous year you did not start the business, current year only you started the business, and current year first 40 lakhs you don't have to pay GST at all, or first 20 lakhs no need to pay GST. After crossing that only you need to pay GST. So therefore you are under composition scheme. Means even though current year you are under composition scheme, current year can we opt for composition scheme? Yes, because last year we don't have business. Means what was our turnover? Zero. 0 means it does not exceed 1.5 crores. So current year definitely we can go for composition scheme. But up to the date of registration, first of all you are an unregistered person, from where you will pay tax. Neither regular scheme nor composition scheme, nothing is applicable. After getting registered only, regular schema, composition schema, like that it will differ. If it is regular scheme, you need to pay GST at the normal rates. If it is composition scheme, you need to pay GST at the reduced rates. That's the difference, okay? That is this. So that's why pre-registration turnover is excluded. These are the differences between turnover, aggregate turnover, etc. And what is the meaning of aggregate turnover? For determining the eligibility for composition scheme we discussed, and also this point we have discussed. Person opting for composition scheme can provide service up to 10% of turnover, and the tax rate applicable for this service is 1% of taxable turnover. Look into this other procedural provisions. That is, when you can go for composition scheme, if you are not registered already, now only you are getting registered. Anytime you can go into the composition scheme. Along with registration application, you opt that you want to go for composition scheme and you enter into the composition scheme. If you are getting registered now only, this year only, anytime you can enter into composition scheme. But if you are already registered under normal scheme, then you wait till the commencement of the financial year. For example, this financial year 25-26, you are registered under normal scheme. Now you want to go for composition scheme. Right now we are in which month? December month. Is it possible? No. You need to wait till March. In March 2026 only you can go for composition scheme for the financial year 26-27. So if you are already registered, then apply in CMP2 before commencement of the financial year. And if you are not already registered, apply in REG1 and select composition scheme at any time during a financial year. Okay, then every person who is under composition scheme should display composition taxable person in every notice or signboard displayed at the principal place of business and additional place of business. Then only their customer will know that they should not pay GST to the supplier. So they have to display that they are under composition scheme. Next, what is the return to be filed by a person opting for composition scheme? CMP 8 return, and that return needs to be filed on a monthly or quarterly? Quarterly, by 18th of the month following every quarter. By 18th of the month following every quarter, they need to. And GST under composition scheme is also payable along with CMP 8. And on what value they will pay GST? Please listen. First they need to take whatever is the value as per bill of supply. Whatever is the value as per bill of supply. Why bill of supply? A person under composition scheme will not give tax invoice, they will be giving bill of supply. So during the quarter, what is the value of bill of supply they need to take? And they need to add advances received during this quarter for which supplies are made in future quarter, because GST payable on advances by a person opting for composition scheme, because the time of supply in case of composition scheme is due date of invoice, actual date of invoice, or date of payment, whichever is earlier, which means a person under composition scheme is required to pay GST on advances. That's why we need to take value as per bill of supply during the quarter, add advances received during the quarter for which supplies will be made in the next quarter. So that we need to add. Then we need to deduct advances received in the last quarter for which supply is made in current quarter. Why? Because on that advance last quarter already we would have paid tax. So we need to reduce. Is it clear, pa? First we need to take whatever is the value as per bill of supply during the quarter, add advances received during the current quarter for which supplies are made in the future quarter, minus advances received in the past quarter for which supplies are made in the current quarter. So this adjustment we need to make, and on that we need to multiply that 1%, 5% or 6%. And a person under composition scheme is required to file an annual return. That annual return will be in GSTR 4 by 30th June of the succeeding financial year. They need to file this annual return. So what is the time period, pa? 30th June of succeeding financial year. And next, previously it was 30th April and they have amended it to 30th June. And all in or all out. What is that all in, all out means? Suppose I have three registrations in Tamil Nadu, Andhra Pradesh and Karnataka. Now should I go for all these three registrations composition scheme? Yes. One registration normal scheme, other registration composition scheme is not possible. Okay, so either composition scheme or normal scheme for all registrations of a person. They cannot choose normal registration for few registrations and composition scheme for other registrations. Also remember this point, once they go for composition scheme under 10.1, the 10.1 only should be taken for all three. For example, 3 registrations, one registration 10.1, another registration 10.2a, possible? No. All the 3 registrations should be under 10.1 composition scheme, or all 3 registrations should be under 10.2a composition scheme. Mix and match is not possible. Okay, you write there. Also few registrations under 10.1, also few registrations under section 10.1, and remaining registrations in 10.2a, and remaining registrations of a person under section 10.2a is not possible. Okay, so also few registrations under section 10.1, also few registrations under 10.1 and remaining registrations of a person under 10.2a is not possible. Okay, then composition scheme validity, you take validity of composition scheme. To whom composition scheme not applicable, already we discussed. Look into the validity. If all the conditions are satisfied, you can continue in the composition scheme for indefinite period, no problem, if the conditions are satisfied. If you breach the condition, example for breach of condition, you cross the limit, or maybe you are making interstate supply, or you make supply of services through e-commerce operator, like that, when you breach the condition, you need to exit from the composition scheme. What is the grace days available for you to exit from composition scheme? 7 days. 7 days. So pay tax, conditions not satisfied, pay tax as a normal taxpayer, issue tax invoice for taxable supply, within 7 days file GST CMP4 as intimation. For what? To exit from composition scheme. Within 7 days from the date you committed the breach. That's the grace days that you have. 7 working days or 7 days? 7 days. And self withdraw. Voluntarily also, at any time you can withdraw from the composition scheme by filing CMP4 anytime. So when you will withdraw voluntarily, maybe you feel like composition scheme is not viable for you, or you are planning to make huge purchases, now you cannot take ITC, so you need to exit from the composition scheme, so voluntarily you can exit. But remember, when you exit from composition scheme and go into normal scheme, you can avail the ITC on closing stock 18(1)(c), that is, you are moving from composition scheme to normal scheme, and before the date of migration there is some closing stock, input as such held in stock, input in WIP held in stock, inputs in FG held in stock, and even on capital goods, whatever GST paid can be taken as ITC for capital goods after reducing 5% for every quarter or part thereof. That is ITC 1. So I have given there a statement in ITC 1 within 30 days of intimation or application. Furnish the details of stock of inputs in semi-finished or finished goods and capital goods for availing the ITC. Then next, suppose you breach the condition and you continued in the composition scheme, and the proper officer came to know that you breached the condition but continued in composition scheme. What they will do? First they will give a notice. Proper officer has reason to believe taxpayer not eligible or contravene the act or rules, they will be giving a notice. That notice will be in CMP 5. And after that notice, within 15 days you need to give reply, that is in CMP 6. Thereafter within 30 days they will either pass an order to continue in the composition scheme or denying the composition scheme, that is CMP 7. Within 30 days either accepting reply or denying the composition scheme. Okay, now what are the forms that we have in this regard? Listen, CMP 2 and CMP4 is there. CMP2 and CMP4. CMP2 is for what? Entry into composition scheme. CMP4 is for what? Exit from composition scheme. And CMP1 we don't have. We don't have CMP1 and we don't have CMP3. Instead we have ITC1 and ITC3. ITC1 is for what? availing the ITC on closing stock. So when you file CMP4 to exit from composition scheme, this is connected to ITC 1. So 1 and 4 is connected. 1 and 4 is connected. So odd forms are ITC forms. 1 and 3 is ITC. Even form is CMP form. So when you file CMP4 to exit from composition scheme, you can avail ITC on closing stock. Same way, when you file CMP2 to enter into composition scheme, you need to reverse the ITC. 18.4 yesterday we discussed. What is that? Normal scheme to composition scheme, you need to reverse the ITC. So therefore ITC will be reversed in ITC 3. You can see that forms. CMP2 is for entry into composition scheme. When you file CMP2 for entry into composition scheme, when you should enter into composition scheme before commencement of the financial year, then you need to file ITC 3 to reverse the ITC on closing stock. So 2 and 3 is combo, 1 and 4 is one combo, 2 and 3 is one combo. So when you enter into composition scheme, you need to reverse the ITC on closing stock. So ITC 3 should be filed within 60 days from the commencement of the financial year. Then CMP4. CMP4 is for exit from composition scheme. When you exit from composition scheme, you can avail the ITC on closing stock. So 1 and 4 is one combo, and when you need to file CMP4 within 7 days from the date when you exit, means breach of condition, and ITC 1 when you need to file whenever you exit from composition scheme within 30 days, you need to file ITC 1. Then CMP5 notice anytime whenever they come to know that you have contravened the act or rules. CMP6 reply to notice, time limit 15 days from the date of receipt of notice. CMP7 issue of order, time limit 30 days of receipt of reply. CMP8 quarterly return within 18 days from the end of the quarter. And whenever they deny the composition scheme to you, whether the denial is prospective or retrospective. For example, you committed the breach on 17th of September 2025 and officer came to know this in the next financial year, that is 2026 they came to know. Now in this case, they will give a notice and pass a order. The order is passed in, say, somewhere 31st December 2026 they pass the order. Whether that order denying the composition scheme to you is prospective from 31st December 2026 or retrospective. It may be prospective, it may be retrospective, but definitely not before the date you committed the breach. On 17th September 2025 you committed the breach na. Before that they cannot deny the composition scheme, because from the date of breach only it should be denied. So whenever they pass an order in future in 2026, that can be prospective from that date or retrospective, but not before the date of breach of conditions. That is this denial of composition scheme. When is it advisable to go for 10(2)(a? You tell me. When is it advisable to go for 10(2)(a)? Whenever you are making services other than supply of food, or you are a manufacturer, trader or supply of service provider and wanted to provide more than 10% of services, then you can go for 10(2)(a). Okay. So that is about composition scheme we have completed. So we have discussed value of supply and composition scheme. We will see some questions and then take a break and then continue with the remaining portion. So look into your practice manual. But you might be having, now should we buy practice manual, what is the use of it, etc. and all. My sincere suggestion to you, please buy. Please buy. It is worth it. Reason, I have given the case scenario MCQs also at the end. Anyhow, you need to solve all these case scenario MCQs. I gave all the case scenario MCQs from your ICI sources along with that answers and the reason I have given. Okay. Plus a separate section I have given for comprehensive questions. These 10 mark questions are there now. For the 10 mark questions, comprehensive questions also, I gave a separate section. So it's like appendix page number 169, computation of net GST payable. I gave all the comprehensive questions in one place. Okay. So Even though you are taking any book and solving all those things, ensure that these are all there. If it is there already, you have a compiler, you go for it, you go with it. If you don't have, better to invest on this, because when you start applying the provisions into the questions, then only you will know, because while taking the class you are able to understand what I am taking, but the problem will be in application. That's the reason why I am telling you, as many number of questions as you solve, that much better your score will be. Okay, that's why. Fine. We will see some questions on value of supply. What's the page number, pa? 59. Okay, see this first MCQ. Discount given after the supply has been effected. Discount is given when? After the supply has been effected, is deducted from the value of supply if such discount is given as per the agreement. Yes. And it is linked to relevant invoices. Yes. And proportionate ITC has been reversed by recipient. Yes. All three conditions should be satisfied. Post supply discount is allowed as deduction if the terms are agreed before the time of supply and it is linked to relevant invoices and the proportionate ITC has been reversed by the recipient. Then look into the next one. Pradeep Traders registered in Haryana sold goods interstate for 2,05,000 to Balram Private Limited registered in Uttar Pradesh. GST leviable at 5% on the said goods. As per the terms of sale contract, Pradeep Traders has to deliver the goods at the factory of Balram. As per the terms of contract, they have to deliver the goods at the customer site. For this purpose, Pradeep Traders charged a freight of 2,400. Now tell me whether the 2,400 will be included in the value or not. Yes, because it will come under expenditure incurred by supplier and charged to recipient before or at the time of delivery of goods. So therefore, as per 15(2)(c), it should be included in the value. So what is the transaction value in this case? 2,05,000. And what is the expenditure incurred by supplier as per 15(2)(c) to be included? 2,400. And this is in addition, correct? It's not included in 2,05,000 and it is in addition 2,400. What would be the net GST liability to be paid in cash? In this case, they are assuming that the amounts given in are exclusive of GST. Now, what is 2,05,000 plus 2,400? 2,07,400. Now, on this, we need to multiply the rate of GST. Which rate should be taken? 5% or 2,05,000 at 5% and 2,400 at 12%. First, two supplies are there. Sale of goods and delivery services. These two are naturally bundled. If they are not selling the goods, this delivery service will not be there. Both are taxable, naturally bundled in the ordinary course of business, and the principal supply is goods. Goods, that is 2,05,000 at what rate? 5%. So we will take the rate of principal supply. So 2,07,400 into 5%. What is that? 10,370 will be taken, and it is given as interstate. So definitely it will be IGST liability. Got it? So like that they will connect the composite supply, mixed supply to valuation. Sometimes they will connect ITC to valuation, and valuation concept they will connect in exemptions. See, there is no hard and fast rule that if they need to ask a question from that chapter only they need to ask a question. Indirect tax is not like that. So indirect tax, they can connect different provisions and give the question, because what students will do, they will make a selective preparation and go for exam. That exemptions, RCM and input tax credit, like that few chapters they will read and go. And definitely other students who read it fully, what is the benefit incentive for them? That's why nowadays what they are doing, in a normal question they will connect place of supply, they will connect in regular question, or in a regular question they will connect interest provision. You got it? So that other topics also you should read and go. That is the objective. Then, so 10,370 will be taken as the GST payable. During the month of May, Z Limited sold goods to Y Limited for 2,55,000 and charged GST at 18%. However, owing to some defect in the goods, Y Limited returned the goods by issuing debit note of 40,000 in the same month. Actually, supplier should give the credit note for that. Recipient giving debit note is of no use. Supplier should give the credit note. Z Limited records the return of the goods by issuing a credit note for 40,000 plus GST. In this situation, sir, same month or different month, sir? Same month, means in this month itself, the liability will be reduced, correct? First, what was the liability? 2,55,000 into 18%. First, what is the liability? 2,55,000 into 18%. How much? 4,900. Now, there is a sales returns. To that extent, our liability will be reduced. So, minus sales returns. What if it is in the next month? This month liability will not be reduced. The next month liability will get reduced. So, minus, what is that? 40,000 into 18%. What is 40,000 into 18%? 7,200. That gets reduced. So, 45,900 minus 7,200, 38,700. Now, sir, what if the liability becomes negative? For example, 2,55,000 into 18%. Last month sales, this month got returned. So, total 3 lakhs. Sales returns is 3 lakhs this month. How, sir? Sales itself is 2,55,000 means how sales returns is 3 lakhs. Last month we would have made 10 lakh sales. Out of that 3 lakhs got returned. Then the liability will become negative. How liability will become negative? 2,55,000 into 18 minus 3 lakhs into 18. It will become negative. In that case, what is the recourse available? Remember, negative liability means we can claim the refund. You understood? Whenever the liability is negative, we can claim the refund. So, you write somewhere over there, note, if the liability is negative, because of credit note, if the liability is negative because of credit note, only because of credit note, not because of ITC. Not because of ITC. Because of ITC also the liability may be negative. For example, liability 4 lakhs, ITC I have 5 lakhs means 4 lakhs minus 5 lakhs, negative 1 lakh will come. No, that is not allowed for refund. The refund is only in case of credit note. If the liability is negative because of credit note, then supplier can claim refund. Then supplier can claim refund of such negative liability. Refund of such negative liability. If the liability is negative because of credit note, then supplier can claim refund of such negative liability. Is it clear? Next. So, this point not yet tested in exam. If they want, they can try. Okay. I told you, no, every attempt 50% will be known questions. 50% will be unknown areas, not a task. So, therefore, we prepare only for first 50% and go for exam. In that first 50%, we will write superbly. And because of that, we will not get full marks. So, maybe we will be getting some 15 marks like that. We write only 25 marks. In that 15 marks we will get. And income tax also somewhere like 10 marks, 15 marks like that. That's why our score, majority of the cases will be 30s, 25, this range only. And it will never go beyond 50 because that unknown areas are there na. From that unknown areas when they are asking question, we don't know what to do. Okay. So, ensure that our target is 100% we should write the paper. 100% we need to write the paper means 100% coverage should be there. Yes, it is difficult only. Learning everything is difficult. So is the pain of a mother also. Mother also will have pain while giving birth. But she gives na, correct? Because she thinks that one life I am giving, otherwise you will not be here, correct? So painful, everything in life is painful only. But no pain, no gain. So when you put the pain now, thereafter happily it will be like your career is settled. Because right now what is your qualification? Nothing. Nothing. Your qualification is CA foundation, that is equal to 0. You don't have any qualification. At least semi qualification you should be getting. Then only job you will get. Otherwise, only Swiggy, Zomato, Rapido, that delivery only you will be able to do. You understood what I am telling? So till CA intermediate you are qualifying na, proudly you can say semi-qualified. Little bit pain only, take that pain, it's worth it. We have to take that pain, got it? So read, try to read everything without skipping any chapter. Try to cover 100%, okay? Then see this question, mostly on value of supply you will get questions like this related to computation. You take page number 72. Page number 72, have a look into question number 9. XYZ Private Limited provided the following particulars relating to goods sold by to ABC Private Limited. List price of the goods exclusive of taxes and discount. What is the meaning of exclusive of taxes and discount? Exclusive means before, not excluding. Exclusive means not excluding. Exclusive means before, not excluding. Before tax, before discount. That's how we need to treat it. 50,000. So this 50,000 will be taken as the transaction value. Tax levied by municipal authority on the sale of such goods. First, as per provision, what we need to do? To be included or to be excluded? As per provision, to be included. Why? Section 15(2)(a), taxes other than GST should be included in the value. So to be included. In the given price, what has happened? In the given price, is it included or not included? Not included, because the given price is before taxes. Therefore, you need to add. Therefore, you need to add. That is 6,000 rupees you need to add. Then next, packing charges not included in the list price. Packing charges to be included or to be excluded? Packing charges is to be included. And in the given price, it is not included. So what we need to do? We need to add packing charges to be included. In the given price, it is not included. Therefore, we need to add. Then subsidy received from NGO directly linked to the price, including the list price above. First, as per provision, subsidy from NGO directly into the price, to be included or to be excluded? To be included. NGO, not central government, state government. So therefore, to be included. In the given price, it is already included. So therefore, ignore it. You don't have to do anything with respect to that. Paid to one of the vendors by ABC Private Limited in relation to the service provided by the vendor to XYZ Private Limited, not included in the list price above. So ABC Private Limited is the seller pa. XYZ Private Limited is the buyer. Yes, XYZ Limited provided the following particulars regarding to goods sold by it. Sorry, XYZ is the seller and ABC Private Limited is the buyer. Paid to one of the vendors by ABC Private Limited. Means recipient is making payment to some other person on behalf of the supplier. So should it be included in the value as per provision? Yes, 15(2)(b), it should be included. Recipient incurring expenses on behalf of supplier. In the given price, it is not included. So therefore, we need to add. Then XYZ Private Limited offers 2% turnover discount on the list price. After reviewing the performance of ABC Limited, the discount was not known at the time of supply. Is it allowed as deduction or not allowed as deduction? Not allowed as deduction, because it's a pre-supply or post-supply discount. Post-supply discount. After reviewing the performance they are giving, post-supply discount, terms are not agreed before at the time of supply. Consequently, is it allowed as deduction or not allowed as deduction? Not allowed as deduction. So accordingly, what we should do in this case? So ignore it. ABC Private Limited delayed the payment and paid 5,000 rupees, including GST of 18% as interest to XYZ Private Limited. What is this 5,000 rupees? Interest, late fee or penalty for delay in receipt of consideration. To be included or to be excluded? To be included. In the given price, it is not included. How you know that it is not included? Because this is in addition. This is in addition. So therefore, we need to add. Because at the time of sale, it is not collected na. At a later point of time, it is collected, it should be included. But remember, this 5,000 rupees is inclusive of GST. Usually, interest is assumed to be inclusive of GST in the absence of information in the question. Even if they are not giving this line inclusive of GST, we would have taken the assumption that this 5,000 is inclusive of GST. So interest always assumed to be inclusive of GST. Here they have given specifically inclusive. What if it is given as exclusive? Then it is exclusive. See, this assumption and all we take only when the question is silent. When the question has specifically something, we go by that. Okay. So here 5,000 into how much should be taken? 100 by 118 into 18 by 118 is GST. But how much will be added to value? Into 100 by 118. Please do that. 5,000 into 100 by 118. 4327. So therefore 4237 and take 50,000 plus 6,000 plus 2,500 plus 2,000 plus 4237. How much? 64,737. Understood? And suppose if you know the date on which this amount is received. This ABC Private Limited delayed the payment and paid 5,000 on, like that one date will be given. Then what we should do? Then when the date is given, you compute that separately, that for that we will give a debit note. Because first at the time of sale we give invoice. For interest we will not give invoice, for interest we will give a debit note. So in exam you should separately show. As per invoice, this is the value. As per debit note, 4,237 is the value, like that you need to show. Invoice dated one day, debit note will be on the date on which interest is received. Is it clear? When we don't have the date on which this interest is received, you do like this. Normally you add the value and determine value of taxable supply. Understood, pa? Next. This. Okay, we will see question number 10. Shri Krishna Private Limited registered supplier furnishes the following information relating to goods sold by it to Shri Balram Private Limited. Price of the goods excluding taxes and other charges mentioned in 3, 5 and 6. So 3, 5, 6 is excluded from the given price. First 1 lakh will be transaction value. Municipal tax as per provision to be included or to be excluded? To be included, because it is 15(2)(a) other than GST, to be included. In the given price it is not included because it is given as excluding taxes. Excluding taxes. Therefore we need to add inspection charges. When inspection, incidental, before delivery itself they will do the inspection, and it should be included in the value as per 15(2)(c). In the given price it is not included because third point is not included, so therefore we need to add. Then subsidy received from Shri Ram Trust, subsidy directly linked to the price from other than CGST, as per provision it is to be included. And go to the last line, price of the goods is net of subsidy. Means what? Means what? While arriving at this 1 lakh, they would have reduced the subsidy. Net of subsidy means while arriving at this price, they would have reduced the subsidy. So we need to add first. As per provision it is to be included. In the given price it is reduced. How you know? Because the price is net of subsidy. So we need to add. How much? 5,000. Then late fee for delayed payment inclusive of GST. Shri Balram Private Limited paid the late fee. However, these charges were ultimately waived. When it is waived means not collected. When it is waived means not collected. So should it be included in the value? No, it will not be included in the value. Remember today, interest, late fee or penalty for delay in receipt of consideration is always taxable on receipt basis. Whenever they are actually receiving it, it should be included in the value. Otherwise it will not be included in the value. So when they waive off, there is no question of receiving it. That's right. Because the time of supply in case of interest, late fee or penalty is only on receipt basis, not on accrual basis. Is it clear? Next, weighment charges. Weighment charges is what? Incidental, correct? Or other charges before delivery. Definitely wait, when will you do? Before delivery only. So it should be included in the value. And in the given price, Is it included or not included? Not included. So therefore we need to add. And we don't have anything else. 1 lakh, 5, 6, 7 plus 5, that is 12, 14. 1 lakh 14,000 will be taken. Got it? This is the usual typical questions that we will have, and wherever there is this subsidy etc. and all, those questions you focus, because the only place where you make mistake is the subsidy. Wherever subsidy is there, there only you will make a mistake related to this. Okay. Then, so we'll take a break. We'll take a break. How much time you need break? You had breakfast in the morning? Hey, seriously, you did not have? Saripa, how much time you need? 20 minutes? Half an hour? Okay, half an hour. Then afternoon break I will cut down by 15 minutes. Okay, 45 minutes. Done. Okay, we'll meet after half an hour. Okay, we'll start. We'll start with time of supply. So please look into page number 64. Page number 64. The objective of time of supply is to determine the due date of payment of GST. That is, for a particular transaction, if time of supply falls in a month, then by next month 20th we need to pay GST with respect to the transaction. So the basic objective of time of supply is to determine the rate of GST as well as due date of payment of GST and the exchange rate. There are three objectives. Number one, to determine the due date of payment of GST. For example, if the time of supply for a transaction falls in this month, by next month 20th we need to pay the GST, that is due date. Number two, rate of GST. There are different dates at which the rates of GST may change. So which date rate of GST should be taken, that again depends on time of supply. Number three, exchange rate. In case if the transaction is denominated in foreign currency, it will be converted into Indian rupees. For converting into Indian rupees, again we need to take the rate at which the time of supply happens, and that time of supply for a transaction in case of goods is given under section 12, in case of service it is given under section 13, and due date of invoice is relevant to determine time of supply. If you are unable to determine the due date of invoice, you cannot determine the time of supply for the transaction. So see here, due date of invoice. So due date of invoice is given under section 31. So this due date of invoice, total 6 points we have. In case of goods we have 3, normal cases, continuous supply of goods and sale on approval or return basis. In case of normal, we need to check whether supply involves movement of goods or supply does not involve movement of goods. If supply involves movement of goods at the time of removal, if supply does not involve movement of goods at the time of delivery, that will be taken as the due date of invoice. So normal cases, goods, supply involves movement of goods at the time of removal, supply does not involve movement of goods at the time of delivery. Then in case of continuous supply of goods, we need to take date on which account statement is issued or the payments are received as the case may be. And what does it mean? So in case of continuous supply of goods means there will be successive supply of goods for which the payments are settled on a periodical basis. Example, I am delivering the goods to you successively, and monthly once or quarterly once or fortnightly once we do the settlement. That is an example of continuous supply of goods. And in case of continuous supply of goods, it so happens that 3 months once we will do the settlement, whereas I will raise the invoice 3 months once, but the payments may be collected on ad hoc basis, like monthly also I can collect the money. So in that case, what should be taken? So we need to see first, for that much amount which is received, irrespective of the account statement, the payment received date will be taken. When the money is received based on account statement, then we need to take account statement date. Okay, so say this, it is simple concept only. So first we need to take, say for example, if the contract is entered by one person with another person, wherein April to June quarter, April, May, June, and April to June, and we need to see what is the payment received. What is the payment received? For April we are receiving 2 lakhs, for May we are receiving 2 lakhs, for June we are receiving 2 lakhs, and for the quarter total amount is 6,56,000. So therefore 56,000 rupees is on a quarterly basis. So for this 56,000 we need to see the account statement. So the account statement is issued. That account statement is issued on 3rd of July. That account statement is issued on 3rd of July. So now what should be taken as the due date of invoice in this case? Again I am repeating, I enter into contract with you. As per the contract, I have to collect the money from you, and I will be collecting money on a monthly basis, but the settlement will be on a quarterly basis. So therefore for the first quarter, April to June, total 6,56,000 rupees is what I should get from you. But 2 lakhs already I received from you in 3 installments, April, May and June. Whereas April to June 56,000, account statement will be on 3rd July. What is the date on which payment is received we need to take? Say for April month, the payment is received on 5th May, and for May month, the payment is received on 6th of June, and for June month, the payment is received on 7th of July, and for this April to June, the payment is received on 25th July. Then what should be taken as the due date of invoice in this case? So first part, if the 2 lakhs is received, is based on account statement or irrespective of account statement? Irrespective of account statement, the payment should be received. So therefore due date of invoice is the date on which payment is received. So 5th May will be taken. Next to 2 lakhs and next to 2 lakhs also, irrespective of account statement, that payment will be received. So we need to take the date on which payment is received, that is 6th June, and 7th July will be taken. Whereas with respect to this April to June 56,000, this 56,000 is receivable based on account statement. So therefore we need to take the account statement date. So what is the account statement date? 3rd July will be taken. That's what I told you. If the payment is received irrespective of the account statement, the payment received date will be taken as the due date of invoice. If the payment is received based on account statement, then the account statement date should be taken as the date of invoice, due date of invoice. Suppose in this case, what if it so happens that we are raising account statement for 2,56,000, because account statement is 3rd July. As on 3rd July, we have not received the 2 lakh rupee amount na. As on 3rd July, this 2 lakh rupees of June is not received, because 2 lakh rupees is going to be received on 7th July, means as on 3rd July, we are not receiving this 2 lakhs. So it so happens that the supplier may raise the account statement for 2,56,000. Then what will happen in this case? Then for entire 2,56,000, 3rd July only will be taken as the due date of invoice. That's what I told you. For an amount that is mentioned in the account statement, the account statement date will be taken. Irrespective of that account statement, if the payments are received, the date on which payment is received will be taken as the due date of invoice. So what is the first point we discussed? Normal cases, supply involves movement of goods at the time of removal. Supply does not involve movement of goods at the time of delivery, and continuous supply of goods. Now we need to see whether the payment is based on account statement. Yes, the account statement date. Payment is irrespective of account statement, the payment received date. Sale on approval or return basis. In case of sale on approval or return basis, the invoice to be given within 6 months from the date of removal or date of supply, whichever is earlier. First I will hand over the product to you. Today it is not sale, you will use it, and thereafter if you accept it, the day on which you accept, it is considered as the date of sale in my hands. So on that day only I need to raise invoice in your name. So therefore 6 months from the date of removal or date of supply. What is the date of supply here? Date of acceptance by buyer will be taken as the date of supply. So 6 months from the date of removal or date of supply, whichever is earlier. And what if 6 months over and you have not accepted the product? Then I have to consider it as sale and I need to raise invoice on expiry of 6 months. Example, we have this Yamaha mattress. Yamaha mattress, you can use it and you like it, you buy, otherwise you return. That's the best example of sale on approval or return basis. 6 months over, still you are not responding, then in that case on expiry of 6 months it is considered as sale and I will raise the invoice. Thereafter you return on 8th month. So what should I do in that case? I need to raise a credit note. I need to raise a credit note in your name. Thereby it will be like a sales returns for me. Is it clear? So 6 months from the date of removal or date of supply, whichever is earlier. This is due date of invoice in case of goods. And what is the due date of invoice and what is the meaning of supply involves movement or supply does not involve movement of goods? Under the contract of supply, if the goods are taken from one location to another location, then it is supply involves movement of goods. For example, you place an order, the product will be taken from one location and will be transported to your place now, then it is supply involving movement of goods. Okay, so supply involves movement of goods. Supply does not involve movement of goods means you come to my place and the seller, you come to my place, you take the product, you purchase the product, even though you are moving the goods, but that movement is not under supply, it is after supply. So it is supply does not involve movement of goods. So depending upon the question, you need to identify whether it is supply involving movement or does not involve movement. If it involves movement, see when they have removed, that date is the due date of invoice. If supply does not involve movement, see the date on which they delivered the goods, that date will be taken as the due date of invoice. Whereas in case of services, and should we remember the subsections? No, just remember the situation, that is sufficient. All due date of invoice will be section 31. All invoice related provisions will be section 31. You remember that section 31, that is enough. And three situations we saw, that is in case of goods, normal cases, continuous supply of goods, sale on approval or return basis. Whereas in case of services, you see normal cases, banking or insurance, that is 45 days from the date of completion, others 30 days from the date of completion, that will be taken as the due date of invoice. So for banking sector, whenever the service is completed, from there within 45 days invoice to be given. In case of others, from the date of completion within 30 days the invoice needs to be given. Then in case of continuous supply of services, we need to see whether the due date of installment is ascertainable from the contract, then the due date of such installment. Example, I enter into contract with you for the purpose of giving my immobile property on rent, and the rent will be for 11 months. This is a case of continuous supply of service. Why? When a service takes more than 3 months to complete and involves periodic payment, in case of renting of immobile property, how the rent will be received? Monthly the rent will be received. So the service takes more than 3 months and involves periodic payment obligation. So it is a case of continuous supply of services. Now in this case, whether the due date is ascertainable from the contract? Yes. Usually in case of rental agreement, what they will tell, by 5th of the month following every month, you should make the payment, like that they will tell, correct? The rent should be paid by 5th of next month, like that. So that 5th of next month will be taken as the due date of invoice, because the due date of installment is ascertainable from the contract. That due date of installment will be taken as the due date of invoice. Then in case of construction contract, you take construction contract, how the payments will be, like when you complete the first floor you have to pay this much, when we complete the second floor you have to pay this much, and when we do the tiling work, plastering work, you have to pay, at the time of handover of the building you need to pay this much, like that. They will be deciding the installment, or they will be connecting the installment to completion of an event. Whenever that event is completed, that is the due date of invoice. So if the payment is linked to completion of an event, then the date on which event is completed will be taken as the due date of invoice. In other cases, as and when the installment amount is received, so due date of installment not ascertainable as and when the payment is received. So 3 points. Point number 1, if due date of installment is ascertainable from the contract, such due date of installment is the due date of invoice. Number 2, if the payment is linked to completion of event, as and when the event is completed. In the absence of that, as and when the payment is actually received, should be taken. Whereas in case of cessation of service, immediately upon cessation, the invoice needs to be issued. For example, you enter into contract to provide the service for 50 days, and after 5 days you stop the contract, which means for that 5 days you are required to receive some money. For that you need to raise the invoice immediately after that 5 days, immediately upon cessation. If you normally complete the service, 30 days from the date of completion you need to give, or 45 days from the date of completion. In case of cessation, abruptly stopping the service, immediately upon cessation the invoice needs to be given. That is this. So these are the 6 provisions we have. That is invoice, due date of invoice. Means what? By that date the invoice needs to be issued. Then you have continuous supply of service, a service which takes more than 3 months to complete and involves periodic payment obligation, is known as a continuous supply of service. And now we are going to discuss time of supply in case of goods or services. First, in case of services, section 13, in case of goods, section 12, and the situations are same. So first, subsection 1, both 12.1 and 13.1 talks about liability to pay GST based on time of supply, whereas we have subsection 2 which deals with time of supply in case of FCM, subsection 3 time of supply in case of RCM, subsection 4 time of supply in case of vouchers, subsection 5 residual cases, and subsection 6 time of supply in case of interest, late fee or penalty for delay in receipt of consideration. In this, for goods FCM, service FCM, we have 2 separate provisions. Goods RCM, service RCM, we have 2 separate provisions. So total 7 points you need to remember. Point number 1, goods under FCM, then service under FCM, then goods under RCM, service under RCM. but for vouchers, the provision is same. So you need to remember time of supply in case of voucher. And next you need to remember time of supply in residual cases. That is common. Vouchers, residual cases, interest, late fees common between goods and services. So vouchers, residual cases, then interest or late fee on account of delay in receipt of consideration. Those 7 points only I have given here. The 7 points you need to learn. You got it? So subsection again, you don't have to remember. You write the main section, that is sufficient. Section 12 is time of supply in case of goods. Section 13 is time of supply in case of services. And first we need to see situation 1. What is the first situation you need to know? Time of supply in case of goods FCM. In case of goods under forward charge mechanism, how do you know it is goods under FCM? If it is not given as RCM, then it will be FCM, because RCM will be notified. Other than RCM, balancing figure will be FCM. Same way, if it is not given as exempted, if it is not exempted, then it will be taxable, because balancing figure is taxable. So first, whenever you see the transaction, you need to check whether it is exempted or not. If it is exempted, leave it, no need to pay GST. If it is taxable only, GST will arise. And whenever it is taxable, again you need to check who is liable to pay GST. So RCM is defined. So if it is RCM, then recipient will pay, balancing figure will be FCM. So when the question is silent and they have given goods, you need to take that it is goods FCM. If it is RCM, it would have been specified in the question that it is goods RCM. So goods FCM, what should be taken? There are two provisions. Number 1, suppose if it is person opting for composition scheme or specified actionable claims. What are specified actionable claims? HC block, horse racing, casino, betting, lottery, online money gaming and gambling. In these two cases, we need to take 3 dates, whichever is earlier, that is due date of invoice, actual date of invoice or date of payment. Whichever is earlier will be taken as the time of supply. For others means other than those opting for composition scheme or other than specified actionable claims, we need to take due date of invoice or actual date of invoice, whichever is earlier. So these are the two provisions you need to remember in case of goods under FCM. Whereas services under FCM, first to check whether the due date of invoice and actual date of invoice, where actual date is within the due date. So whether the invoice is given within the due date. If it is yes, invoice is given within due date, then what should be taken? Actual date of invoice or date of payment, whichever is earlier. Suppose if it is no, invoice is not given within due date, then what we need to do? Date of completion or date of payment, whichever is earlier. For example, say this. The date of completion is 13th March. What is the time limit by which invoice should be given? Normally 30 days. For services, it is 30 days. So within 30 days, from 13/3, the invoice should be given. So say the invoice is given on 12/4, means is it within 30 days? Yes, the invoice is given within 30 days and the payment is 34. So which should be taken? Invoice date, that is actual date of invoice, or date of payment, whichever is earlier, that is 12/4 will be taken as the time of supply. And if the time of supply is 12th April, what is the due date of payment of GST? Next month 20th. That's what I told you. If time of supply for a transaction arises in a month, the next month 20th will be taken as the due date. So 12/4, the due date of payment of GST will be 25. Now you have not given the invoice within 30 days. Say for example, the invoice is given on 13th of April, means beyond 30 days. Invoice not given within 30 days. So what should be taken? Completion date or payment date, whichever is earlier. So which is earlier? 13/3. Completion date or payment date, whichever is earlier, 13/3 will be taken as time of supply. If 13th March is the time of supply, what is the due date of payment of GST? Next month 20th. So next month 20th means 20th April will be taken. So you gave an invoice just by 1 day delay. So therefore the due date got preponed by 1 month. That is a disadvantage of this. So if invoice given within the time, the actual date of invoice or date of payment, whichever is earlier. Invoice not given within the time, completion date, some back date, completion date or payment date, whichever is earlier will be taken. This is in case of goods FCM, service FCM. Then goods RCM, you see goods RCM, what should be taken? The goods RCM, the date on which goods are received by the recipient, because in case of RCM, from whose perspective we need to see? From recipient point of view. The date on which goods are received by recipient, or the date on which recipient is making payment to supplier, or 31st day from the date of invoice by supplier, whichever is earlier should be taken. So the date on which recipient has received the goods, or the date on which recipient is making payment to supplier, or 31st day from the date of invoice given by whom? Given by the supplier, whichever is earlier. Whereas in case of services under RCM, we have two provisions. First provision, check whether invoice is given by recipient to supplier. If invoice is given by supplier to recipient or recipient to supplier, we have a different provision. For goods RCM, we don't have like that. For goods RCM, always it is the same provision. That is the date on which goods are received, the date on which payment is made, or 31st day from the date of invoice by supplier, whichever is earlier. What if invoice is not given by supplier? If the invoice is given by recipient, then you cannot determine time of supply as per 12.3. When you cannot determine time of supply as per 12.3, we have one proviso that we will see later. So that says the date of receipt of goods by the recipient will be taken. That is the date on which recipient passes the journal entry in his books will be taken. Date of entry in the books of recipient. I'll connect that point little later. Just wait for some time. And what we are discussing is that this particular 12.3, that is goods under RCM, is applicable only in case the supplier is giving the invoice. What if it is services RCM? Then check whether invoice is given by supplier to recipient or recipient to supplier. If supplier is giving invoice to recipient, then the date on which recipient is making payment to supplier, or 61st day from the date of invoice, whichever is earlier should be taken. So date on which payment is made to supplier, or 61st day from the date of invoice by supplier, whichever is earlier. Suppose if invoice is not given by supplier but the invoice is given by recipient, why will recipient give invoice? When the supply is covered under RCM and the supplier is unregistered and the recipient is registered, then the recipient will give invoice to the supplier. Then in that case, date on which payment is made to supplier, or date of invoice to supplier, date of invoice to supplier, date of invoice by recipient to supplier, whichever is earlier. Here 61st day, see date of payment same, but here 61st day, here date of invoice to 61st day from the date of invoice, here date of invoice to supplier, whichever is earlier. And when there will be self invoice, whenever the supply is covered under RCM and the supplier is unregistered, then self invoice will be given by recipient to supplier. What is the time limit within which self invoice needs to be given? Within 30 days from the date of receipt of goods or services. That should be taken. Then next one, 5. So first 4 provisions: goods FCM, goods services FCM, goods RCM, services RCM. Then next 3, vouchers. In case of vouchers, first of all, we need to understand some special points in relation to voucher. Voucher is neither goods nor services. So vouchers, so related to vouchers, you just make note of few points. So in your book itself you write down. So GST implications on vouchers, GST implications on vouchers, GST implications on vouchers, GST implications on vouchers. Vouchers are divided into 2 broadly, that is vouchers recognized by RBI, vouchers recognized by RBI. What are the vouchers recognized by RBI? Called as prepaid vouchers. Prepaid vouchers. Prepaid vouchers, example, gift vouchers, Amazon gift card, Flipkart gift cards, all these are examples of prepaid vouchers. Usually if you want to gift anything to any person, so rather than, now 1 second. Yes. So vouchers recognized by RBI, prepaid vouchers, usually gift cards and all will be purchased. Amazon gift card or Flipkart gift card or Shopper Stop gift cards. So whenever you want to gift something to a person, rather than buying the product, you can buy the gift card and give that gift card to the person so that they can go and buy anything of their choice. So these are called as prepaid vouchers. So any vouchers which are recognized by RBI, that is prepaid vouchers, it will be treated as what? treated as money. As it is treated as money, which means it is neither goods nor services, consequently it is not a supply. Is it clear, pa? Vouchers which are recognized by RBI treated as money, consequently it is not a supply. Number 2, vouchers not recognized by RBI. Vouchers not recognized by RBI. Example, gift vouchers. When you go to this shopper store, like Reliance or Max Garments, etc., when you buy for 2000, 3000, they will give one 500 rupee voucher. So next time when you are coming, so you can redeem that like that. So that is called as gift vouchers. Did you buy in Reliance? Every time they will give one 500 rupee voucher. Even Max also, after you make purchase, so some 10-20 vouchers they will be taking print and they would have given. You would have seen that slips. All these are examples of gift vouchers. Is it recognized by RBI or not recognized by RBI? Not recognized by RBI. So these gift vouchers will not be treated as money, but it will be treated as actionable claims. It will be treated as actionable claims. Already I told you this point. It will be treated as actionable claims, and it is other than specified actionable claims. Correct? Therefore, it will be not a supply, excluded from supply, because only specified actionable claims are covered under supply. Means from these two, what is the point that we can conclude? Therefore, vouchers, issuance of vouchers, therefore issuance of vouchers is not chargeable to GST. Why issuance of vouchers is not chargeable to GST? Because vouchers are divided into two, recognized by RBI, treated as money, so it is not a supply. Vouchers not recognized by RBI, gift vouchers that are treated as actionable claims, even then it is not a supply. Therefore, issuance of vouchers is not chargeable to GST. Then what is the impact of the voucher? Such voucher is treated as consideration against supply of goods or services. A voucher is not a supply, but some goods or services we are supplying against this voucher. So whenever you are redeeming the voucher, that voucher towards some product, for example, you go to Reliance Trends and you give that 500 rupee voucher and buy one garment. So for Reliance Trends, they are selling the garment, and part consideration is in the form of voucher and part consideration is in the form of money. Means this voucher will be treated as consideration. Okay, so write down, vouchers are treated as consideration. Vouchers are treated as consideration. Vouchers are treated as consideration against supply of goods or services. Vouchers are treated as consideration against supply of goods or services. Against supply of goods or services. Okay, so whenever I am supplying goods or supplying services, you give part of the money in the form of vouchers and part of the money in cash. That voucher is also treated as my consideration. Example, I am selling a garment to you for 2500 and 500 rupee voucher you gave and 2000 rupees in cash you gave. Now tell me what is the value of supply for payment of GST? 2000 or 2500? 2500. 2500. That voucher is also treated as consideration and I need to pay GST on that. Is that clear? The supplier has to pay GST on that. Then next, suppose if the vouchers are being distributed on principal to principal model. Okay, there is a voucher issuer, there is a voucher issuer and there is a voucher distributor or reseller, and there is a customer. There is a voucher issuer, and there is a voucher distributor or reseller, and there is a customer. Voucher issuer is selling the voucher. To the voucher distributor. Say sale at 80 rupees. Then again, voucher distributor is making sale to the customer at 100 rupees. So thereby the voucher distributor gets a margin of 20. is there any GST payable or not payable? GST payable or not payable in this case? What is your answer? GST not payable in this case. Why GST not payable in this case? Because sale of voucher is not a supply and not chargeable to GST. So this sale at 80 rupees, there is no GST. Even on the sale of 100 rupees also there is no GST, because sale of voucher neither goods nor services, consequently GST not payable on that. Is it clear? Even though the voucher distributor or seller is getting a margin of rupees 20 rupees, but they are not required to pay GST on that. Literally they are buying and selling the vouchers. Okay. However, means this is on what model? Principal to principal model. Principal to principal model. So this will come under P2P. Principal to principal model. Principal to principal model. Principal to principal model. Whereas principal to agency model is also there. What is that principal to agency model? Wherein instead of voucher distributor acting as a reseller, they will be acting as a agent. Okay. So principal to agent model. Principal to agent model. So wherein this voucher distributor will become like a agent. So first there is a voucher issuer. There is a voucher issuer and there is a voucher distributor, and this voucher distributor is an agent. Voucher distributor is an agent, and there is a customer. There is a customer. The voucher issuer will be giving the voucher to the agent, and the agent will just pass on the voucher. So like say they have given the voucher to voucher distributor, and the voucher distributor passed on to the customer, for which voucher distributor gets a commission. Whether this commission is subject to GST? Yes. This commission is chargeable to GST. This commission is chargeable to GST in the hands of the agent. So if it is principal to principal model, no problem. If it is principal to agent model, then they will get a agency commission. On that agency commission, the voucher distributor or agent is required to pay GST. Then next point, what if there is a breakage of voucher? What is meaning of breakage? Breakage means that the voucher is not redeemed. We gave a voucher, but he did not redeem the voucher. So but we got some money against that. I sold a voucher to you for 2000 rupees and you did not redeem that voucher. You gifted it to one person. That person did not come to my shop and redeem. Then I got 2000 rupees, but against that 2000 rupees, I did not give any product or service. Should I pay GST on that 2000 rupees? Never. So which means it will not be chargeable to GST, because it is consideration without involving any supply of goods or services. Is it clear? So write down, in case of breakage of voucher, breakage of voucher in brackets means that is unredeemed vouchers, comma, supply not made against that voucher, against such voucher, therefore GST not payable. In case of breakage of voucher means what? That is unredeemed vouchers. Supply is made or not made? Supply is not made against that voucher, therefore GST will not be payable in that case. So these are the 7 points you need to remember, because there is one CBSE clarification related to the vouchers which is given for September 25 exam, and definitely I expect a question they can make out of this. So at least a theory question they will give, right? GST implications on voucher, you need to write these 7 points. Okay pa? Then so look into this. In case of vouchers, what is taken as the time of supply? You finish now making note of this. So what should be taken as the time of supply in case of vouchers? Now say this, vouchers are divided into two, identifiable vouchers or non-identifiable vouchers, for determining the time of supply. Identifiable voucher means what? Today I am giving you voucher, which will be redeemed against a particular product or particular service. Example, Domino's one regular pizza voucher. That is, if you are redeeming that voucher, you will get one Domino's pizza. Means amount is mentioned in the voucher, or the product or service is mentioned in the voucher, product or service is mentioned in the voucher, then it is identifiable voucher. Means today itself I know against which product you are going to redeem the voucher. So on the date of issuance of voucher itself, I need to treat that the pizza is sold and I need to pay GST. So time of supply is date of issuance of voucher. Today itself I need to treat that the supply has happened and I need to pay GST on that. And you will be the last attempt where this subsection 4 is applicable, because from May 26 exam onwards they omitted this vouchers point. This entire subsection 4 is omitted. So in future it will not be there. And in future, in case of vouchers, the time of supply is based on regular provision only. This point they have omitted. So JAN'26 is the last attempt. Okay. So in case of vouchers, identifiable, non-identifiable voucher, identifiable, because for May 26 again lot of amendments are there. Better complete it by Jan itself. May 26 and all, no. Both income tax as well as GST. Lot of changes are there. So better we should complete it by Jan at any cost. Okay. So maybe if you are planning for writing both groups and just like that I will try etc and all, don't do that. Write only one group. It's okay. You apply for both the groups. Done. You have applied. But write only one group. First group you write and try to complete. Worst come scenario, you should get exemption in tax. Again, we cannot sit and prepare tax and all in the May 26 exam. Okay. Who will read that many amendments? Not possible. Okay. So listen. So identifiable voucher, what should be taken at the time of issuance of voucher? And identifiable voucher can be redeemed against a particular product or service. Example, Domino's one regular pizza voucher, date of issuance of voucher. So today itself, I need to consider that the pizza has been sold and I need to pay GST. What if you are not redeeming the voucher? Breakage. Unnecessarily I paid GST. So therefore that I will get as a refund. Then next, number 2, non-identifiable voucher. Non-identifiable voucher means the voucher can be redeemed against any product or service which is supplied by me. For example, Zudio 500 rupees voucher, which means you can buy anything in Zudio, either perfume or garments or wallet or footwear, anything you can buy and you can redeem that voucher. It is a non-identifiable voucher. As a supplier, I don't know when you are redeeming the voucher against what product you will purchase it or you will redeem it. So due to that reason, at the time of redemption will be taken as the time of supply. So time of supply will be date of redemption of voucher. What if you are not redeeming the voucher? When you are not redeeming the voucher, first of all, I am not having any liability at all. So I did not pay, because the time of supply itself is at the time of redemption. If you are not redeeming, the time of supply shall not arise and GST not payable. Whereas in case of identifiable voucher, at the time of issuance of voucher will be taken. Then next, interest residual cases. In case of residual provisions, remember, when residual provisions are applicable, when you are unable to determine the time of supply under other above provisions, then residual provisions will be applicable. Just 2 simple points you remember. Mostly theory question only you will get, if at all you get. What is that? If it is due date of return ascertainable, the due date of return will be taken. Means if you are required to file the periodical returns. Who is required to file periodical returns? Only a registered person is required to file periodical returns. The due date of such return will be taken as the due date of payment, that is time of supply. Suppose if you are not required to file periodical returns, whenever you are going to pay the tax, that will be taken as the time of supply. So if periodical return required to be filed, that is registered person, due date of return. Where periodical return not required to be filed, then date of payment of tax. Why will an unregistered person pay tax? Because he is having liability. Means he crossed the threshold limit, but still he is unregistered. Means he has some liability because of that. Then time of supply in case of interest, late fee or penalty for delay in receipt of consideration, as and when such amount is actually received. So the time of supply is on receipt basis. These are the 7 points you need to remember for time of supply provisions. If at all you are applying time of supply provision in exam, it will be in the 7 points only. Then next, look into the additional points. What should be taken as the date of payment? Because in many places above, we have come across date of payment. What should be considered as the date of payment? In case of supplier, the date on which entry is made in supplier books or date of credit in supplier bank account, whichever is earlier. Whereas from recipient point of view, the date of entry in his books or date of debit in his bank account, whichever is earlier. So date of entry or date of credit in bank account, whichever is earlier. Whereas from recipient point of view, date of entry or date of debit in the bank account, whichever is earlier. Then next number 2, GST on advances. In case of advances, how the GST will be payable? Suppose in case of goods, definitely they need to pay GST on advances except others. So for person, goods, FCM, only composition scheme or specified actionable claim. Why? Because others don't have date of payment. You see this. Only in case of composition scheme and specified actionable claim, due date of invoice, actual date of invoice, date of payment is there. But for others, date of payment is not there, which means they are not required to pay GST in advance. For example, this month they received the money, others, supplier of goods, FCM, other than composition scheme or specified actionable claim. This month they received money, but next month they are raising invoice. Next month only they need to pay GST, because due date of invoice or actual date of invoice, whichever is earlier, is only the time of supply, not date of payment. So are they required to pay GST in advance or not required to pay GST in advance? Not required to pay. So in case of goods FCM, who is only required to pay GST in advance? Composition scheme, specified actionable claim. Services always, because date of payment is there. And in case of RCM also, always they need to pay GST on advance. Then third point, listen, whenever I am raising invoice for an amount, but you have made the extra money to me. For example, I raised the invoice for 13,120 rupees, but you have given me 14,000 rupees round, because that extra money what you have paid, that 880 rupees, see, you have to give me 13,120, but how much you gave? 14,000 you gave, because this 880 will be adjusted in the next month invoice. That's why you gave me extra money. What is the treatment of this 880 rupees? Either I can go for the regular time of supply provisions, means for this 880, this month I have received, but for which 880 I will give invoice in the next month. So invoice or payment, whichever is earlier, is this month. Or I can go based on date of invoice only. So whenever I am issuing invoice for this 880, at that time itself I will take as time of supply. I have the option to choose. Please read it once. Up to 1000 rupees received in excess beyond the invoice price, supplier has the option to choose. What is that? Either pay GST based on invoice issued for such excess amount. Means whenever the invoice is issued for such excess amount, as and when invoice is issued for such excess amount, GST will be payable. Okay, so they have an option to choose. Instead of regular time of supply provision, they can exercise this option, and thereby they will pay GST for that 880 rupees received. But the excess should be within 1000, not the invoice should be within 1000. The excess beyond invoice, that excess amount should be up to 1000 rupees. Okay, then only it is applicable. And to whom it is applicable? This is applicable in case of composition scheme dealer or HC block and supply of services. For these people, this third point is applicable. Then fourth point, you see, goods under RCM. What is the provision for goods under RCM? What is the provision for goods under RCM? The date on which goods are received, the date on which payment is made to supplier, or 31st day from the date of invoice. If you don't know any one date, same way, service under FCM, service under RCM. In these three cases, we have different dates. If you don't know any one date, then time of supply cannot be determined as per provisions. So what we should do? Time of supply shall be date of entry in the books of recipient. This is what I told you. So in case of RCM, goods RCM, date of receipt of goods or date on which payment is made to supplier, or 31st day from the date of invoice by supplier. What if supplier is not giving invoice? Then time of supply cannot be determined as per provisions. So time of supply shall be date of entry in the books of recipient. So which three cases per we need to take this? Goods FCM, RCM, RCM, services FCM and RCM. Suppose if the date of entry in the books of recipient is also not available, then residual provisions. If it is not available, then as per 12.5 or 13.5, that is residual provisions. Then look into this, import of services from an associated enterprise. There is a supplier located outside India and a recipient is located in India, and the recipient is importing services from the supplier outside India. Generally, import of service is covered under RCM. RCM. So what is the provision as per RCM? Date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. But in this case, that 61st day from invoice will not be taken, because between associated enterprises under Income Tax Act, there won't be any invoice concept. Due to that reason, the date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier, that should be taken. But apply these provisions only when you have in the question associated enterprises, import of services from associated enterprises, then only we will apply this provision. Then look into the next one, circulars on time of supply. So here, what is the time of supply in case of construction of hybrid annuity model projects? In case of HAM projects, hybrid annuity model projects means I will do the construction of the road and I will also do the maintenance, repairs and maintenance of the road. And what is the consideration that I get? Not toll charges, I will get money as annuity from the government. So government, National Highway Authority of India is giving me contract, I am L&T, to lay down the road. I will lay down the road, plus I will also do the maintenance of that road, and I will be recovering my money in the form of annuity, that is installment from government. Should I pay GST? Yes, definitely I need to pay GST. And is it a continuous supply of service? Yes. Why it is a continuous supply of service? The contract is for 5 years, 10 years like that, and installments I am receiving. No doubt it is a continuous supply of service. Then how to determine the due date of invoice? So if the due date of installment is ascertainable, the due date of installment. Is it ascertainable? Yes, it is definitely ascertainable, because I enter into contract with National Highway Authority and I will mention by this date you have to pay this much like that. There will be a contract between me and them. So due date of installment is ascertainable. That is the due date of invoice. Is it clear, pa? And what is the time of supply? If invoice is given within the due date, invoice date or payment date, whichever is earlier. If invoice not given within due date, completion date or payment date, whichever is earlier. What will be taken as the completion date? Here, the actual completion date you don't take. For every installment, one due date is there, na? That due date of installment itself will be taken as the due date of completion. So write down date of completion, date of completion, date of completion is the due date of installment, is the due date of installment. Because when this contract will get completed after 5 years or 10 years, actually it is completed. But don't take that. Date of completion is the due date of installment. So already this has been tested. Hybrid annuity contract has been tested. So therefore, if at all they may ask a theory question. So you need to write this 4 points. What is it? You need to write HAM contract is a single contract where supply is responsible for both construction of highway and its operation and maintenance over a period. And what is it? Is it a continuous supply of service? Yes. And due date is determined as per 31/5. So you need to write the due date. What is that? So if installment is ascertainable from the contract, the due date of installment is the due date of invoice. And time of supply as per 13(2). What is the time of supply as per 13(2)? If invoice given within due date, invoice date or payment date, whichever is earlier. If invoice not given within due date, completion date or payment date, whichever is earlier. Installment payable by NHAI will also include interest component. So in every installment there will be interest component, and that interest component will be included in the value for payment of GST, and date of completion will be taken as the date of installment, due date of installment. Then what is the time of supply? What is the time of supply in case of spectrum allocation services by government to telecom operators? Easily remember, the time of supply will be the date on which the payment is made or the date on which payment is due, whichever is earlier. It is common whether you are going for installment model or upfront model, it is same. So date on which payment is made or date on which payment is due, whichever is earlier. Is it clear, pa? So whether you pay upfront amount, whenever that upfront amount is due, or whenever you are actually making the payment of upfront amount, whichever is earlier. And in case of installment also same, whenever you are actually paying the installment or by when you need to pay the installment, whichever is earlier. Through circular, they are creating a provision which means for spectrum allocation, this provision only to be taken. That is the meaning of circulars. Through circulars, they will create a overriding provisions for the act. So in section there is something, through circular they will tell for this situation you need to follow this, means this only we need to follow, okay. And how do we know the payment installment due, when it is due? For that there will be one frequency assignment letter. That frequency assignment letter will be given by Department of Telecommunication to the telecom operator. In that they will mention when the installments are due. Got it? So what you need to remember, in case of spectrum allocation, what is the time of supply? Whenever the payment is made or whenever the payment is due, whichever is earlier. That's it, okay. With this we completed time of supply provisions. So let's see some questions related to this. What is the time of supply pa? Page number 45. Page number 45, see this MCQ 1, page 45. In case of taxable supply of services by NBFC, invoice shall be issued within a period of dash from the date of supply of service. What is the time limit by which invoice should be given? 45 days. The time of supply of service in case of reverse charge mechanism where invoice is issued by supplier, service under RCM, what should be taken? Date on which payment is made to supplier or date following 60 days, that is 61st day from the date of invoice, whichever is. So option D. Sham Limited is receiving legal services from a lawyer, Mr. Gyan, registered. The aggregate turnover of Sham Limited in the preceding financial year is 40 lakhs. The information regarding date of payment, invoice, etc. is as follows. Invoice issued by Mr. Gyan on 15th April, payment received by Mr. Gyan on 5th May, date of payment entered in the books of accounts of Sham is 1st May. What is the time of supply of service? First service. In that service, is it FCM or RCM? RCM. How you know it is RCM? Legal services. Legal services provided by an advocate to a business entity is covered under RCM. So in case of services RCM, whether invoice is given by the supplier or not, you need to check. Check that from the question, whether invoice is given by supplier or not. Yes. Yes. Invoice is given by supplier on 15th April. Means invoice is given by supplier. So what should be taken as the provision? Date on which payment is made to supplier or 61st day from the date of invoice by supplier, whichever is earlier. See, the date on which payment is made to supplier. When the payment is made, what should be taken as the date of payment? Date of entry in the books of recipient. Date of entry in the books of recipient or date of debit in their bank account. That should be taken as the date of payment. See that carefully and tell me. Payment received by Gyan on 5th May, but the date of payment entered in the books of accounts of Sham is 1st May. Which should be taken? 1st May. Very good. So date of payment, that's why we discussed the meaning of date of payment. What is the meaning of date of payment? From supplier point of view, that is when we see from supplier point of view, only in case of FCM. When we see from recipient point of view, in case of RCM. So date of entry in the books or date of debit in bank account, whichever is earlier. So therefore date of payment to supplier. What is the date of payment to supplier? 1st May. Date of payment to supplier 1st May. And then we need to take 61st day from date of invoice. 61st day from date of invoice. What is the date of invoice? 15th April. From 15th April, you count 61st day. Don't include 15th April. You include the remaining days in April. So therefore in April, how many days? 15 days in April. And in May, it will be 31 days. So total 46 days. Minus 61, that will be 15. So therefore, 15th of June. 15th of June. April 15 days pa, May 31 days pa. So 15th June will be taken as the 61st day, whichever is earlier. Which is earlier? 1st May. So option A is the answer for this. Is it clear? Then that's what, like mathematics, you have to remember the formula, apply it in the question, arrive at the answer. That's how time of supply will be. If you don't know the provision, you cannot write, because here there is nothing to write. It's only about application. You need to just apply the provision into this. You need to arrive at the answer. If you have forgotten that provision, you can't do anything with respect to that. So as many number of times as you can, you need to revise that and keep it in mind. Okay. Then next one, in case of supply of goods for rupees 5 lakhs, following information is provided: advance received on 1st April, invoice issued on 15th April, goods removed on 25th April. What is the time of supply of goods? What is the tax payable under forward charge? Goods FCM. For goods FCM, what is the provision? Is it composition scheme? Is it specified actionable claim? So we need to take A, due date of invoice. What is the due date of invoice? 25th April. Very good. Why? Supply involves movement of goods at the time of removal. At the time of removal. B, actual date of invoice. What is the actual date of invoice? 15th April. Whichever is earlier. Which is earlier? 15th April. So 15th April will be taken as the time of supply for this. There is a mistake by giving the invoice in early. Actually due date is 25th April. Who asked them to give invoice on 15th April? If they give invoice early, that will become the time of supply. Is it clear? Next, look into, these are all basic questions. You can try this. Question number 5. Question number 5 you take. Kabira Industries Limited engaged the service of transporter. The transporter is registered for road transport of a consignment on 17th June and made advance payment for the transport on the same day. However, the consignment could not be sent immediately on account of strike in the factory and instead was sent on 20th July, and invoice was received from transporter on 22nd July. What is the time of supply of the transporter service? Now you know that it is service, but you don't know whether it is FCM or RCM. That you need to apply. FCM or RCM? RCM. Why? Sir, CG, Go, Salads. Correct. We discussed the list of services. In that GTA service is RCM, and I told you if they are not opting for FCM, what is the default option? RCM. Means I need to pay GST under RCM. Is that clear, pa? The default option is RCM. Means I have to pay GST under RCM in this case. Okay. However, so services RCM. Service RCM, what is the provision? Time of supply in case of service RCM. The date on which payment is made to supplier or 61st day from the date of issuance of invoice by supplier, whichever is earlier. Do we have information about invoice given by supplier? 22nd July, invoice was received from the transporter. So as invoice is given, we will take date on which payment is made or 61st day from the date of invoice, whichever is earlier. What is the date of payment? 17th June. 17th June, made the advance payment on 17th June. And what is 61st day from the date of invoice? 22nd July. Definitely 61st day will be later. So whichever is earlier is 17th June only. Ennapa? 17th June, invoice is 22nd July, 61st day from 22nd July is later date only. So overall whichever is earlier is 17th June. So 17th June will be taken as the time of supply in this case. Suppose if invoice is not given by supplier, supplier not given invoice, then date of payment no change, but date of invoice to supplier whichever is earlier in case of self invoice. Okay, that we need to check for in the question, don't miss that. Then next, see this question number 9. Meal coupons are sold to a company on 9th August for being distributed to the employees of the said company. The coupons are valid for 6 months and can be used against purchase of food items. These employees use them in various stores for purchase of various edible items on different dates throughout the 6 months. What is the time of supply of coupons? What type of vouchers it is? Identifiable or non-identifiable? How you know non-identifiable? Any item, food items. So therefore, what is the time of supply? Date of issue or date of redemption? Date of redemption. So as it is non-identifiable voucher, time of supply is the date of redemption of voucher. Then next. Say this. Question number 13. Question number 13. Messrs. Pranav Associates, a partnership firm, provided recovery agent service to Neutron Credits Limited, a non-banking financial company and a registered supplier on 15 January. Invoice for the same was issued on 7th February and payment was made on 18th April by Neutron Credits Limited. Bank account of the company was debited on 20th April. Now when they give question like this, actually what they do is that they are connecting two chapters. First RCM and next time of supply. Determine the person liable to pay GST. Who is liable to pay GST in this case? Pranav Associates or Neutron Credits? Neutron Credits, because it is recovery agent service. We discussed 5 agents covered under RCM. Insurance agent to insurance company and recovery agent to bank or NBFC, direct selling agent to bank, business facilitator to bank, agent of business correspondent to business correspondent. So this will be coming under recovery agent to bank or NBFC, which is under RCM. So first we need to write that in the given case liability to pay GST is on the NBFC, Neutron Credits. Then in case of services RCM, so what is the time of supply? Whether invoice is given by supplier or not given by supplier, check there. Yes, invoice for the same was issued on 7th February and therefore we need to take the date on which payment is made to supplier. What is the date on which payment is made to supplier? 18th April, and the bank account of the company was debited on 20th April. So which should be taken? 18th April, because the date on which payment is entered or debit in their bank account, whichever is earlier. So what is the date of entry? 18th April. So 18th April will be taken as the date on which payment is made, or 61st day from the date of invoice. What is the date of invoice? 7th February. You count from 7th February 61st day. So February 28 days minus 7 days, that is 21 days in February, 31 days in March, that is 52 days, minus 61, 9th of April. So 9th April or 18th April, whichever is earlier. 9th April will be taken as the time of supply. Suppose if that 7th February is the date on which invoice is given by recipient to supplier, then 7th February will be taken as the time of supply. The date on which payment is made is 18th of April, no doubt, but the date of invoice given by recipient, the date on which invoice is given by recipient, if it is self-invoice case, is it clear? So suppose if 7th February is the date of invoice given by recipient, then 7th February will become the time of supply, whichever is earlier is 7th February. You got it? Next. See this question number 17. Question number 17. Mr. Lakan provides continuous supply of services to Messrs. TNB Limited. He furnishes the following further information. Date of commencement of providing the service is 110. Date of completion of service is 31/1/2018. Is it more than 3 months? Yes. 2017 October, November, December, January, definitely more than 3 months. Date of receipt of payment by Mr. Lakan 33. Determine the time of issuance of invoice, that is due date of invoice as per the provisions of CGST Act in the following circumstances. If no due date of payment is agreed upon in the contract. Continuous supply of service, what is the due date of invoice? If due date of installment is ascertainable from the contract, the due date of installment. If the due date of installment is not ascertainable but the payment is linked to completion of event as and when the event is completed. In the absence of that, as and when the payment is received. Please check whether the due date of installment is ascertainable in the contract. No. And whether the payment is linked to completion of event. No. Then what will be taken? The date on which payment is received. What is the date on which payment is received? 30/3/2018. That will be taken as the due date of invoice. Second part. If the payment is linked to completion of service, means whenever the service is completed. When the service got completed 31/1/2018, that will be taken. If TNB Limited has to make payment on 25/3 as per the contract between them, means due date of installment is ascertainable. So due date of installment itself will be taken as the due date of invoice. Is it clear? Literally that section 31, due date of invoice. What is the due date of invoice in case of continuous supply of service? They created as a question, okay, for 5 marks. Then next one, you see this question number 18. Royal Sweet Company Delhi, a registered supplier, has furnished the details of the following few transactions which took place in November. 11/11/2000, payment made to an advocate in Delhi. So they have made a payment to an advocate in Delhi. Is it RCM transaction? Yes. Advocate service is covered under RCM. And the date of invoice is 7/7. That is date of invoice given by supplier is 7/7 and amount is 1,25,000. Now tell me, see, only when it is given as self invoice you take self invoice, otherwise don't take. Otherwise invoice will be given by supplier. Now what should be taken as the time of supply in this case? Services RCM. This is service, advocate service. Service RCM. What should be taken? Date on which payment is made to supplier. What is the date on which payment is made to supplier? 11/11. And what is the second date? 61st day from the date of invoice. So count 31 minus 7. So in July 31 days minus 7. 24 days in July. 31 days in August. 55 minus 61. That is 6th September. So therefore 6th September will be taken. 6th September is the due date of invoice. Correct? Now tell, 61st day from the date of invoice. Now which should be taken as the time of supply? 6th September should be taken as the time of supply. Clear appa? And but what they did, they made the payment on 11/11. So definitely interest will arise. Why interest will arise? Sir, 6th September is the time of supply, sir. Then due date will be correct, 20th October. If time of supply is September, the due date of payment of GST is next month 20th. So 20th October will be taken as the due date of payment of GST. Are you understanding? But they are making payment on 11/11, means for 11/11, what will be the due date? 20th of December. Means there is a delay in payment. So definitely there will be interest. Is it clear? So interest also will arise. See here. Interest related provision. The due date of payment of tax in this case is 2010. How 2010? Time of supply is 6/9. So next month 20th. So due date of payment of GST is 2010 with the return of September. However, the payment of tax is actually made on 11/11. Means 11/11 only they are making the payment of tax. Not even 20th December, on 11/11 itself they are making the payment of tax. Thus the payment of tax is delayed by how many days? 22 days. In that case, interest will be computed from which date to which date? For the 22 days at what rate? 18% on what? GST. 1,25,000 into what is the rate of GST? 18% into 22 divided by 365, that will be 1000. So 22,500 into 18% into 22 by 365, that is 244. Okay, so this 1,25,000 into 18% pa. 1,25,000 into 18% is 22,500. On the 22,500 into 18%. Yeah, into 18%. See, first 18% is tax. Second 18% is interest. And thereafter you need to take into 22 divided by 365. So 244 rupees will be the interest. When we should take divided by 365, 366. In the numerator, if you have February month. So here in the numerator, is there a February month? 20th October to 11th November. February is not there, correct? If February of 2024 is there in this, for example, you are computing interest from 15th January 2024 to 31st March 2024, means in the numerator computation February you are taking 29 days, then in denominator you should say take 366 days, 366 days, otherwise 365 only. But income tax is not like that. In income tax, if it is previous year 23-24, then definitely you will take divided by 366. If it pertains to previous year, assessment year 24-25, previous year 23-24, definitely you will take divided by 366. Okay, got it? But what is your current assessment year? 25-26, previous year. So there is no question of 366 days interest. Is it clear? So divided by only 365, because in 2025 previous year 24-25 you don't have February 29 days na. So that's the reason why we will take divided by 365 only. But in GST alone, be careful when they give data, when you are computing the interest, if in the numerator we are taking February 29 days, in denominator we should take 366 days. So you understood this interest, how we got 244 rupees. Next, and whether it is intrastate or interstate, where is the advocate located? Delhi. Where is Royal Sweet Company located? Delhi. Therefore it is intrastate. That's why it is given as CGST, SGST liability. Okay. Next, second transaction you take 2011-2000 paid sitting fee to director from Haryana for meeting held in Delhi on 15/10. Now, again it is RCM. Why it is RCM? Director services to company or body corporate is covered under RCM. So who is required to pay GST in this case? Royal Sweet Company, Delhi. First, what is the time of supply? Date on which payment is made. What is the date on which payment is made? 20th November. And 61st day from the date of invoice. What is 61st day from date of invoice? 31 minus 15, that is 16 days in October, 30 days in November, minus 61 December. So 15 December 2000 will be taken. You tell me which is earlier, 20th November or 15 December? 20th November. So 20th November is the time of supply. No interest in this case, because that is the date of time of supply. On the date only tax is also paid. You got it? So no time of supply in this, like no interest in this case, and time of supply will be 2011, and it is given as interstate supply. So therefore, what is the type of GST? 75,000 into 18%, that will be 13,500 will be taken as IGST. Understood? So this is a very good question. Then next, say this, question number 24. Question number 24, determine the time of supply from the given information In each of the following independent cases, supplier invoices the goods on reverse charge basis to THARUN'S company. 30 days from date of issuance of invoice elapsed on June 3. They gave in the question itself when the 31st day will be over. Suraj & Co receives the goods. Suraj & Co makes the payment. So what will be taken as the time of supply in this case? Date of receipt of goods May 12, date on which payment is made May 30, and 31st day from the date of invoice May 4, whichever is earlier. Which is earlier? May 12. So goods RCM. Directly they will give question sometimes. So like this, taxable under RCM they will mention. You don't have to apply. In case of service only they will make you apply. In case of goods directly it will be given. You don't have to worry about that. Is it clear? Next, see this question number 23. From the following information, see the previous question. From the following information provided by Messrs. Sasta Bazaar, determine the time of supply for the purpose of payment of GST. It issued coupon on 26 worth 2000 rupees, redeemable against purchase of specific plastic items. This coupon was redeemed on 31/7/2023. What will be taken? What type of voucher? Identifiable voucher. So date of issuance of voucher 26 will be taken. Then it issued coupon on 1/8 worth 3000, which is redeemable against purchase of any item. The coupon was redeemed on 18/8. 18/8 non-identifiable voucher at the time of redemption. It received interest of 10,000 for late payment from a customer on 11/11 for supply of goods which was originally made on 24/6. When they are receiving the interest 11/11, even though supply is made on 24/6, but in case of interest always the time of supply is on receipt basis. Whenever they are actually receiving interest, late fee, penalty for delay in receipt of consideration, so 11/11/2023 will be taken as the time of supply. Clear pa? Almost all questions in this will be like simple application question only. But if you remember the provision, you will be able to arrive at the answer. This is the standard in which the questions you will get. Then look into composition scheme, because we completed composition scheme also. What's the page number? Page number 99. See the first MCQ. Exxon company, a registered supplier of Meghalaya, wants to opt for composition levy under 10(1). The turnover limit for composition levy is, for 10(1) Meghalaya, limit is 75 lakhs. MMTN USAM. C and company, a registered supplier in Delhi, opted for composition levy under 10(1). They opted. It sold goods in the fourth quarter in a financial year for 15 lakhs exclusive of GST, and the applicable GST rate on these goods is 12%. Means these are taxable goods. C and company purchased goods from Ramesh and company registered in Delhi for 9,55,000, on which Ramesh and company has charged CGST, SGST. C and company also purchased goods from E and Co registered in Haryana for 2,46,000, on which E and Co charged right GST 29,520. What is the GST liability of C and Co for the fourth quarter of the financial year? Whether ITC is relevant? No. Then why they gave trap? So that you will think liability gross GST minus ITC net liability. That option also will be there. You make a mistake, you will end up with the answer. That answer will be there in option. You will think, Sabash, we got the answer. Correct. Like that you will write. That will be utter mistake. Okay. So be careful. Just because they give every data that need not be relevant, they put lot of traps like this. Listen dear, you are going on a battle with ICI. ICI is our opponent and they will attack us. Sometimes they will do backstabbing. Sometimes they will put a trap. Everything they will do. You be careful. Ultimately, you should win this battle at any cost. Okay. So, this inward supply data is waste. just information waste in the question. Now we need only outward supply. What is outward supply? 15 lakhs. 15 lakhs. On that 15 lakhs, what is the rate of GST applicable to the dealer? He's a dealer. He's a dealer. He sold goods. So he's a dealer. Trader. 1%, that is 0.5 CGST, 0.5 SGST. So 15 lakhs into 0.5%, that is 7,500 and 7,500, that should be taken. Which of the following is not eligible for opting composition scheme under 10(1) of the CGST Act? ABC, a firm selling garments in Ahmedabad having annual turnover of 78 lakhs. What is your answer? Eligible or not eligible? Eligible. First, trader, Ahmedabad, the limit is 1.5 crores. So yes, eligible. Then a startup company operating a restaurant in Delhi having annual turnover of 98 lakhs. Eligible. So this is also eligible. Second is also eligible. A courier company operating solely in Mumbai having a turnover of 90 lakhs. Sir, Mumbai 90 lakhs. Eligible na sir? Not eligible. Why not eligible? Under 10(1), manufacturer, trader, supply of food. But they are courier service. That's why it is not eligible. Next one eligible. Trader. Trader Orissa 95 lakhs eligible. So C point not eligible. Which of the following persons is not eligible for composition levy under 10(1) of the CGST Act even though their aggregate turnover does not exceed 1.5 crores in the preceding financial year in Uttar Pradesh? Person supplying restaurant, eligible na? Yes. And a person supplying restaurant service and earning bank interest, still eligible, because bank interest is to be ignored, will not be taken into account. In all the turnovers, we have not taken interest on loans, advances, deposits. Ignore that. That is not at all relevant. Anyhow, in computation, we will not take. Because in composition scheme, everywhere we have ignored interest. That last table we saw na in composition scheme, there interest on loans, advances, deposits, everywhere it is excluded in all three turnovers. Means literally for composition scheme, interest is not at all relevant. So that's why eligible. Person trading in ice cream, eligible. Manufacture of ice cream only not eligible. Trading of ice cream eligible. Person supplying service of repair of electronic items not eligible, because services other than supply of food. Can a registered person opting for composition scheme collect GST on outward supplies? No, never. They cannot take ITC, they cannot take ITC and they cannot collect GST from their recipient. Then next, mostly in composition scheme you will get computation based question, and second priority will be determine whether eligible or not eligible for composition scheme, like that. In this, 1 second, you see this question number 18, page number 107. Question number 18, page number 107. Swaminathan started the business of supplying shoes in the state of Kerala from 1st April. So means trader supplying shoes. He makes only intrastate supplies and he commenced business this year only pa. This year only he commenced business. Means first year is he eligible for composition scheme? Yes. Because previous year it was 0. So therefore he is eligible for composition scheme. And first he need to register. His turnover for April to June was 20 lakhs. And for July to September was 100 lakhs. Further, 1/4 of his turnover is in each of the quarter was exempt from GST. Being eligible for composition scheme, Swaminathan got himself registered under the composition scheme with effect from 1st July. Up April to June, pre-registration turnover. They have not registered. Correct? Check sir. April to June he commenced business. but he is not registered because he got registered only from 1st July. So April to June, what was the turnover? GST payable or GST not payable on that? Not payable on that. Let it be regular scheme or composition scheme, not payable because you are not at all registered. You got registered from 1st July only. So no need to pay GST on that 20 lakhs. Then for July to September, what was the turnover? 100 lakhs. On that 100 lakhs, they need to pay GST under composition scheme. Correct? Because 1st July they are registering and they are going for composition scheme. See there, registered under the composition scheme with effect from 1st July. 1st July they are registering plus immediately they are under composition scheme, means on this entire 100 lakhs they need to pay GST under composition scheme. And you are required to compute the tax payable by Swaminathan under composition scheme, assuming that he is a manufacturer. Tell me, how much is the GST? 1%. So calculate and tell me how much. 100 lakhs into, that's what, 0.5%. 100 lakhs into 0.5%, that is 50,000 CGST and 50,000 SGST. Okay. Will your answer be different if Swaminathan is a trader? No. Same answer. Correct? So please concentrate. See that properly and tell me. Just like that blindly don't tell. Sir, they are making exempted supplies. A trader is not required to pay GST on exempted supplies. Only on taxable turnover 1%. Correct? Out of that 100 lakhs, what is the exempted turnover? 25%. It is given there, you see. 1/4 of his total turnover was exempted. You know why? They will not give in numbers. 25%, 1/4, like that and all they will not give. They will give in English. You know why? Because student will skip when it is in English. Numbers will be highlighted. Our eyes will go for numbers. But when it is in English, the same number when it is in English, our eyes will miss. So because it is English and we will see only the numbers, because of which we need to commit the mistake. This is another trap. Okay. So be careful. 1/4 means 25%. 25% is what? Exempted. Out of that 100 lakhs, take out exempted. That is 25%. What is the remaining taxable? 75%. That is 75 lakhs. On that only they need to pay 0.5%. So 75 lakhs into 0.5%, that is 37,500. You understood? It's a good question. Next. See this question number 16. Question number 16. Little Smiles, a photography firm, has commenced providing photo shoot services in Delhi from the beginning of the current financial year 23-24. It has provided the following details of turnover for various quarters till December 2023. April to June 2023, 20 lakhs. July to September, 30 lakhs. October to December, 40 lakhs. They commence business this year only. They commence business this year only. Correct? Napa? They commence business this year means they are service provider. First 20 lakhs, no GST. Agreed? Why? Registration. After crossing 20 lakhs only, they need to register. And thereafter, next 50 lakhs. 10-1 10-2A va? 10-2A, services, photo shoot services. How 10-1 will come? 10-2A. Directly it will not be given. You have to search for it. You got it? 10-2A it is. 10-2A. 10-2A means what is the limit? 50 lakhs. Now listen. First 20 lakhs, no GST. Next, how much they will pay GST under 10-2A? 10-2A rate is what? 6%, 3% CGST, 3% SGST, 6% on what? On next 50, on next 50, next 30. Ayya. No, that's okay. 6% on total turnover, okay. But up to 50 lakhs only now you will be under composition scheme. Ennappa? Up to 50 lakhs only you will be under composition scheme. So first 20 lakhs you are not paying any GST. Next 50 lakhs you will pay 6%, or next 30 lakhs you will pay 6%. Next 30 lakhs, because overall limit will be 50. In that overall limit 50, 20 pre-registration, what is the remaining? 30. So on this 30 only you will pay 6%. Okay sir, but on this 40 we will pay regular rate 18%. Understood? So it's also a very good question. First 20 lakhs, no GST. Next 30 lakhs. Why next 30 lakhs? Because under 10(2)(a, the overall limit will be 50 lakhs. In that first 20 lakhs, no GST. Remaining 30 lakhs only we will pay at 6%. Thereafter, we will pay the normal rate. The moment you cross 50 lakhs limit, under 10(2)(a, you will exit from the composition scheme. But under 10(1), 150 lakhs or 75 lakhs. But 10(2)(a, what is the current year limit for reduced rates? Only 50 lakhs. After crossing 50 lakhs, you will exit from the composition scheme. Puridappa. Therefore, see the answer. First 20 lakhs, no GST. Next 30 lakhs, 6%. Last 40 lakhs, it will be 18%. Okay. So, same question can be asked for 150 lakhs also. First quarter 40 lakhs. First quarter 40 lakhs. Next quarter is 120 lakhs. Now tell me on what amount we need to pay GST under 10(1). First 40 lakhs, no GST. Remaining 110 lakhs. Why 110 lakhs? Total 150 lakhs composition scheme. In that 40 lakhs will be pre-registration. Remaining balance is what? 110 lakhs. On that 110 lakhs only we need to pay 10(1). Thereafter beyond that normal rate. So that is this. Next, look into question number 11. Mr. Jafar of Assam provides the following information for the preceding financial year 18-19. You are required to find out the aggregate turnover for the purpose of eligibility of composition scheme and determine whether he is eligible for composition scheme or not for the financial year 19-20. Value of taxable outward supplies out of the above 10 lakhs was in the course of interstate transaction. But this question is about eligibility. Eligibility means we need to compute the aggregate turnover. So for the previous year, current year 19-20, if they are eligible or not depends upon the previous year 18-19 and whether outward supplies both interstate as well as intrastate, everything should be taken in aggregate turnover. Yes. Exempt supplies which includes 30 lakhs received as interest, will it be included or excluded? So 70 minus 30. Why? Because interest on loans, advances, deposits should not be taken while computing aggregate turnover. So that's why. So don't take 30. So you take only 40 lakhs. You take only 40 lakhs. Then next, value of inward supplies on which he is liable to pay tax under reverse charge. Will the inward supplies under RCM be taken or not? No, it will be excluded. So don't take. And exports, interstate, yes. Whether previous year we can have, current year only we should not have. Previous year we can have. So what is your aggregate turnover? 50 plus 40 plus 5, that is 95 lakhs. So you might be thinking, why this idiot discuss this table? For this reason. Okay. Everything I am discussing is for a purpose. That purpose may not be asked in exam, may not be asked in exam in the past, but may be asked in exam in future. You understood or not? So that's why I am discussing all those things. Pa, this much of experience I have, Pa. You got it. And due to that reason, trust me. Then next, Another one, say this. Question number 8. Question number 8. Messrs. Handsome and Like Me company, a partnership firm at Mumbai, is running a mobile phone showroom. Along with mobile phone showroom, it is also engaged in providing health and fitness services. So both mobile showroom as well as fitness services. Turnover of the mobile phone showroom was 78 lakhs and receipts of health and fitness service was 26 lakhs in the preceding financial year. So what was the total? 78 plus 26, 104. And which state they are doing business? Maharashtra. Mumbai is not state, Maharashtra. In Maharashtra, what is the limit? 150 lakhs. So whether their turnover during the previous year exceed 150, does not exceed 150, does not exceed 150. So current year definitely they can opt for composition scheme. Examine whether the firm can opt for composition scheme. Yes. Okay. But they are doing service. Let it be for previous year only. Na? Current year they are not doing. Current year they can definitely provide service up to what limit? 10% of turnover during previous year. But can they opt or cannot opt? Can opt. Can opt. But they should ensure that their service should not be more than 10%. If it crosses from that date onwards, they will be under normal scheme. But how can you say current year composition scheme is not at all possible? Possible, definitely possible, because aggregate turnover during previous year does not exceed 150 lakhs. Will your answer change? And current year up to what limit they should be providing services? 104 lakhs into 10%, that is 10.4 lakhs. 104 lakhs into 10%, 10.4 lakhs or 5 lakhs, whichever is higher, that is 10.4 lakhs. To that extent they can provide the service and still they can be in composition scheme. Okay, va? Will your answer change if the turnover of the mobile phone showroom was 74 and the receipts of health and fitness center was 18 lakhs? Even then it is the same, 74 plus 18, that will be 92. So still they can offer composition scheme. And to what extent they should provide the services? 9.2 lakhs, 9.2 lakhs or 5 lakhs, whichever is higher, that is 9,20,000. First case 10.4 lakhs, second case 9.2 lakhs. If Messrs. Handsome and Like Me company obtain separate registration for their mobile phone showroom and for health and fitness center, can it opt for composition scheme only for mobile phone showroom? Impossible. They cannot, because all the registration should be under composition scheme or all registration should be under normal scheme, but not both. So that is not possible in this case. So remaining all right, repeated based on this only, in line with this only, whatever we discussed in those lines only. And now we will move on to the next chapter, that is place of supply. What, you need break? No, right? We'll complete this and take break. Done? And I want your utmost focus for the next 45 minutes. 45 minutes we will complete this chapter. Just listen, concentrate into this, so that this place of supply you cannot take for granted. Definitely it will be tested as a standalone question, as well as in the first question, that is question number 1, 10 mark question. Place of supply definitely will be applied. Okay, and it is not that difficult chapter and all, it is easy, and whatever is there in your syllabus, that only I will tell you, that only we will discuss. First, we need to understand what is the meaning of intrastate supply and interstate supply. You tell me, what is intrastate supply? If location of supplier and place of supply same state, same union territory, it is intrastate supply. Different states, different union territories, a state and a union territory, it is interstate supply. Super. Next point. What is the limit up to which IGST Act, that is GST Act, is applicable? What is the limit up to which GST law is applicable? In India it is applicable, no doubt. even beyond India in the waters up to 200 nautical miles from the baseline. Nautical mile is the distance measured in the sea. Up to that, GST law will be applicable up to 200 nautical miles from the baseline. And in that, if there is any supply that takes place, it is supply in the taxable territory. What is taxable territory? Up to 200 nautical miles from baseline, that is India. What is outside India? Non-taxable territory, beyond 200 nautical miles. And within this 200 nautical miles also, if there is any country, island or any country which is not belonging to India, that is also outside India. For example, within 200 nautical miles only Sri Lanka is there, but Sri Lanka is not part of India. It's a different country that is outside India. Okay, va? Next, there are 10 transactions which are deemed as interstate supply. Always IGST will be applicable. Don't check intrastate or interstate. What are those 10 transactions? Import of goods, import of services, export of goods, export of services. Super. Supply to SEZ, supply by SEZ. Okay, va? Next, supplier in India, place of supply outside India. First listen, it's there in the book. I will show you where it is. First listen. Import of goods, import of services, export of goods, export of services, supply to SEZ by SEZ, supplier in India, place of supply outside India. Okay, and then supply beyond 12 nautical miles and up to 200 nautical miles. Up to 12 nautical miles is what? Territorial waters. Beyond 12 nautical miles and up to 200 nautical miles. That is also deemed interstate supply. Then place of supply determined under section 13. When place of supply will be determined under section 13? One in India, other outside India. Either service provider in India and recipient outside India, or service provider outside India and the recipient in India. Definitely it will be interstate supply only. Is it clear? Next, supply to a tourist. Whenever we are making supply to a tourist, under tourist refund scheme, who is a tourist? Who come from outside India to India, and he is a non-resident. Means what is his stay in India? As per Income Tax Act, 180, convert into months, in GST 6 months. Okay, va? Income tax la 182 days, in GST it will be 6 months. Then he is a tourist. So a person is coming from outside India to India and he stays not more than 6 months. He is a tourist. For him, if you make sale, that is deemed interstate. Next, transaction in priority sector lending certificate. So priority sector lending certificates are the certificates given by one bank to another bank in order to meet the priority sector lending. So that is treated as supply of goods and it will be deemed interstate supply. It is a transaction between the banks. Okay. And next, security lending scheme. So we have seen RCM, first one, Sir CG got salad. Yes, for security lending. That security lending is also deemed interstate. Last point, you received the advance. And you don't know whether it is intrastate, interstate. It should be deemed as interstate. So advance received, but we don't have the information about intra or inter, then it will be deemed inter. These are the 10 transactions which is in page number 73, which is treated as deemed interstate supplies. So this part you need to remember. What are regarded as deemed interstate supplies, you need to know. These 10 transactions. Okay. So supply to SEZ by SEZ, import of goods or service, export of goods or service, supplier in India, place of supply outside India, supply of goods to a tourist, supply of goods or service beyond territorial waters and up to exclusive economic zone, supplier in India, place of supply India, but it is determined under section 13, security lending under SEBI, priority sector lending certificates. You received the advances, but you don't know whether it is intra or inter. All these 10 are deemed inter. The moment you see these 10 transactions, put it under IGST column. So you prepare a question, computation of GST payable, CGST, SGST, IGST. So we have to keep this liability under IGST column. Next, now see this example. There is a page number 72. There is an architect in Tamil Nadu and Elon Musk in US, and this architect is constructing a property of Elon Musk which is in Tamil Nadu. Now, in this case, whether it is intrastate supply or interstate supply, sir, what is the place of supply, sir? Location of property. For all property related services, the location of property is the place of supply. Okay, va? Now, for architect is for what? Property. Architect is for what, pa? It's a property related service. Construction is a property related service. So therefore we need to take location of property. Now, what is the location of supplier? Tamil Nadu. Supplier, Tamil Nadu. What is the place of supply? Tamil Nadu. Supplier also Tamil Nadu. Place of supply is architect, not architect. Location of property. Supplier is architect, Tamil Nadu. Place of supply is property, that is in Tamil Nadu. Even though both supplier and place of supply is in the same state, but it is not a intrastate supply, but it will be deemed interstate supply. Why it is deemed interstate supply? Because one in India, other outside India, then section 13 will come. So therefore it will be deemed interstate supply. Okay, papa. So be careful, they will be confusing you. You be clear. That is, it will become deemed interstate under 75C. You remember deemed interstate, that is sufficient. This only I have given. Once you determine the place of supply under section 13, that is supplier in India, place of supply also India, but it will not become intra, it will become deemed interstate. Okay, va? So now you see this page number 71, page number 71. India for the purpose of levy of GST extends up to 200 nautical miles from the baseline. Supplier in land, place of supply also in land. What is it? Either intra or inter. Supplier in land and place of supply in territorial waters. Supplier in land and place of supply in territorial waters. What is territorial waters? Up to 12 nautical miles from the baseline. Then what it is? Again, it may be intra or inter. Whenever supply takes place in territorial waters, what should be taken as the place of supply? The nearest coastal state. That is, when supply takes place in territorial waters, that is place of supply in territorial waters, see the nearest coastal state or union territory that will be taken. For example, there is a marine engineer in Tamil Nadu and a ship is in Bay of Bengal. The marine engineer is going to the ship and doing the repairs to the ship, and the place of supply will be location of the ship, but the ship is in Bay of Bengal. So now how to determine the place of supply in this case? See the nearest state. For that ship, if the nearest state is Andhra Pradesh, then the place of supply is Andhra Pradesh. Supplier Tamil Nadu, therefore it will become inter. Suppose if the ship is near to Tamil Nadu, supplier also Tamil Nadu, the nearest coastal state also Tamil Nadu, so it will become intra. So whenever the supply takes place in territorial waters, either intra or inter as per section 9. Suppose if the place of supply, location of supplier is in land and place of supply is beyond territorial waters and up to 200 nautical miles, then deemed inter. Why? We discussed supplier in India and the place of supply. Supply is within 200 nautical miles after 12 nautical miles. Okay. Then supplier in the land and place of supply is beyond 200 nautical miles. Then also deemed inter. Why? Supplier in India, place of supply outside India, then also it will be deemed inter. Is it clear? So only up to 12 nautical miles it will be intra or inter. Beyond 12 nautical miles it will be always deemed inter. Okay, va? Next, intrastate is given in section 8 of IGST Act. Intrastate supply supplier, that is in case of goods or services, if supplier and place of supply same state or same union territory, it is intra, and proviso to 8.1 and 8.2 says deemed inter. Supply of goods by or to SEZ deemed inter. Import of goods deemed inter. supply of goods to tourists deemed inter, that is given here. Already we learned what are deemed inter. And meaning of interstate supply, this also we covered. So this one is supplier and place of supply, 2 states, union territory, state and union territory inter. All other transactions are deemed inter. Correct, Appa? So you don't have to remember these 2 charts. These 2 charts are already incorporated in the deemed inter, that you need to remember mainly. And next, what is the meaning of export of goods and export of services? What is the meaning of export of goods? Logically, you tell me. Taking goods from India to a place outside India. Super. What is the meaning of export of service? 5 conditions should be satisfied. Where the supplier should be? Where the recipient should be? How the consideration should be? Foreign exchange. Wherever permitted by RBI, it can be Indian rupees. What should be the place of supply? Outside India. Supplier and recipient are not two establishments of the same person. This much you remember, that is enough. Beyond this, you don't have to remember anything. And supply in territorial waters already we discussed. This zero rated supplies is not there, pa. They have omitted. This zero rated supplies they have omitted fully. It is not there. And even this entire discussion, this chart also not there, because this is also related to zero rated. They have omitted this completely. They shifted it to final. It's not there. Then look into place of supply. Place of supply, entire discussion, zero rated supplies as well as in the next page, that is not there. Okay, you don't have to learn that. But this discussion is there, place of supply. Now listen. Place of supply is crucial for determining whether it is an intrastate supply or interstate supply. We have 2 sections of place of supply they have given at intermediate level, that is section 10 and section 12. What is section 10? Place of supply in case of goods. What is section 12? Place of supply in case of services where both supplier and recipient in India. And section 10 and 12 of which act? IGST Act, not of CGST Act. So whenever you write place of supply provision related to goods, you write section 10 of IGST Act. Services 12 of IGST Act. Only 2 sections, you remember enough. Okay. In exam when you are writing, the place of supply is this as per section 10 of IGST Act. Okay. And services as per section 12 of IGST Act. That's it. Now, goods related provisions you see. Page number 76. Concentrate. This is the place of supply in case of goods. Total 5 situations we have. First, supply involves movement of goods. Then automatically supply does not involve movement of goods. Then bill to ship to transaction, assembly or installation at site, supply of goods on board a conveyance. Please listen first. It's there. First listen. Total 5 situations. What are the 5 situations? Supply involves movement of goods, does not involve movement of goods, bill to ship to transaction, assembly or installation at site, supply of goods on board a conveyance. Supply involves movement of goods, you can understand na? Under the contract of supply, goods are taken from one location to another location. Supply does not involve movement of goods means there is no movement of goods, recipient is only coming and collecting, correct? Supply does not involve movement of goods means the goods are in the same location, okay? The number 3, bill to ship to, that also you know. What is that? I am delivering the goods to one person but raising invoice to the other person, bill to ship to. Assembly or installation at site, example, AC, generator, etc. you are purchasing, so I have to install it in your site. Then supply of goods on board a conveyance. During the train journey, you are purchasing water bottle, beverages, food items, etc. chips, all these supply of goods on board during the journey. You got it? Now, first, supply involves movement of goods. You tell me logically, when the sale happens really, you placed an order in Amazon. When the sale really happens, only when the product is given to you. Till that time you can cancel, correct? Place of supply is ending point. Okay, wow. What's the place of supply? Ending point. First listen, then we will see. So logically we should remember, Otherwise, when you by heart, you may forget. That's why. Supply involves movement of goods. What should be taken? Ending point. Whenever it got ended. Okay. Up supply does not involve movement of goods. There is no ending concept. So wherever the goods are located. Example, I am selling you a ship. The ship is in Mumbai. I am in Tamil Nadu, you are also in Tamil Nadu. But the ship is in Mumbai. Supply involves movement or does not involve movement? Does not involve movement. What is the place of supply? Location of that ship which is in Mumbai. You got it? So supply involves movement of goods. What is the place of supply? Ending point. Does not involve movement of goods? Location of goods. Bill to ship to transaction. Remember, B for billing address. B for bill to ship to, B for billing address. Okay, bill to ship to what should be taken? Billing address. And assembly or installation. Location of installation. Location of installation. Supply of goods on board a conveyance during the journey. Very difficult to determine. That's why starting point. Starting point of the goods. Is it clear, pa? Then, in case of supply involves movement of goods, does not involve movement of goods, we have one more provision. If it is whatever we discussed is B2B transaction, that is sale to a registered person. If it is sale to an unregistered person, we need to take location of recipient in the records of supplier. Otherwise, that is not available, location of supplier. And what is the meaning of location of recipient in the records of supplier? Need not have full address. At least the state name, if it is there, that is sufficient. Now see, 10(1)(a), supply involves movement of goods. To registered person means B2B, ending point. To unregistered person, location of recipient in the records of supplier, otherwise location of supplier. 10(1)(b), bill to ship to transaction. What will be taken? Always billing address. No need to check B2B, B2C, always billing address. 10(1)(c), supply does not involve movement of goods. B2B, location of goods. B2C, location of recipient in the records of supplier, otherwise location of supplier. Goods assembled or installed at site, location where it is assembled or installed. Supply on board a conveyance, starting point of goods. Now, whenever there is a conflict between 10(1)(d) and E versus 10(1)(a)(b)(c), which will prevail? D and E will prevail because these two are specific cases. Example, I am a person who is selling generator and I am located in Maharashtra, Mumbai, Maharashtra, and you are from Tamil Nadu. You approached me to sell the generator to you, and I said, okay, fine, I will sell the generator to you. And you are asking me to install it in your branch in Karnataka. So I installed it in Karnataka. I raised invoice to you in Tamil Nadu, but I installed it in Karnataka. Okay, it is possible to come under bill to ship to. In a billing address, Tamil Nadu. On a shipping address, Karnataka. Possible? As per bill to ship to, what will be taken as place of supply? Billing address. That is Tamil Nadu. On 10(1)(d), where installed at site, location of installation will be taken. Where is it installed? Karnataka. As per 10(1)(d), it is Karnataka. As per bill to ship to case, Tamil Nadu is the place of supply. As per that location of installation point, Karnataka. But which should be taken? Karnataka, because that installation point is a specific provision. So that will override. Is it clear? That is, in case of conflict between 10(1)(a)(b)(c) over 10(1)(d)(r)(e), then 10(1)(d)(r)(e) shall prevail. So specific provision prevail over general provision. Then next one. What is the place of supply in case of sale to unregistered person through e-commerce operator? Generally, sale to unregistered person, what will be taken as place of supply? Location of recipient in the records of supplier, otherwise location of supplier. Now listen, you are from Tamil Nadu, you have an Amazon account, and in that Amazon account you gave the address as Tamil Nadu, Chennai, Tamil Nadu address. You went to Kerala, Kochi, and in that place you wanted to buy something from Amazon. You can buy? Yes. You purchased, and instead of giving your Chennai house address, you gave your place, Kochi, Kerala, wherever you are staying, that address you gave. So the product got delivered there. You understood? Now from the supplier point of view, supply involves movement of goods or does not involve movement of goods? Involves movement of goods. And B to C, what should be taken? Location of recipient in the records of supplier. But supplier has two locations. What are the two locations? Chennai address is also there. That Kochi address is also there. It is not billed to ship to. Why it is not billed to ship to? Same person, but different address. It's not billed to ship to. Then what should be taken? For which CBIC circular clarified that you take the delivery address, that Kochi only, Kochi, Kerala only will be taken. Is it clear? Whenever goods are sold through e-commerce platform, if the billing address and delivery address match, address recorded in the invoice. If the billing address and delivery address does not match, delivery address recorded on the invoice. Not billing address, delivery address. In case of bill to ship to, it will be taken as billing address. What is the difference between bill to ship to versus this circular? Bill to ship to is applicable when there are two different persons. But here same person, different address, this circular will be applicable. Okay. Now we are moving on to place of supply in case of services. And section 12. When are we applying section 12? If both are in India. 13 we don't have. 13 we don't have in syllabus. Only what we have is section 12. Section 12 only we have. 13 we don't have. Please concentrate. What should be taken as the place of supply in case of services? Easily we will try to remember. First, general provisions you should remember. When general provision, in the absence of specific provision. 90% of the cases, if you don't know the answer, if you apply general provision, it is correct. 90%. But 10% risk you are taking. You understood? So majority of the cases, worst come only we use this. Otherwise, you will have to learn. You learn it. General provision is applicable in the cases where there is no specific provision. Okay, va? When there is no specific provision, general provision is applicable. What is the general provision? B2B, location of recipient. B2C, location of recipient in the records of supplier, otherwise location of supplier. Easy pa? So what is the general provision for services? B2B, location of recipient. B2C, location of recipient in the records of supplier, otherwise location of supplier. Okay. When you will apply this? In the absence of specific provision. Okay. Next. Now we are discussing specific provision. In that you should know there are three services. There are three services. TOT. 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 For these three services, we should check B2B, B2C. Apart from general provisions, there are three services where we need to check B2B, B2C. And in that case, for B2B, always location of recipient is the place of supply. So you don't have to remember separately. Not everywhere we need to check B2B, B2C. Only three places. TOT. What is T? Training and performance appraisal. You can see. Training and performance appraisal. There we are checking B2B, B2C. Correct? Then O. O for organizing an event. Organizing an event. There also we are doing B2B, B2C. Then T. Transportation of goods or passengers. There also we are checking B2B, B2C. Okay, va? So see this. Section 12. B2B, B2C in these three places. What are the three places? Training and performance appraisal, organizing an event, transportation of goods or passengers. And in these three places only we need to see B2B, B2C. And B2B what should be taken? Location of recipient. B2C what should be taken? Location of recipient. No, we need to learn that. Okay. B2B location of recipient. B2C we have to learn. Okay. But B2B location of recipient. First general rule, general provision. In the absence of specific provision, there we will take B2B location of recipient, B2C location of recipient in the records of supplier, otherwise location of supplier. Second point, in three places we should check B2B, B2C, and in that case B2B always location of recipient. What are those three places? Training and performance appraisal, organizing an event, transportation of goods or passengers. Okay. Now let's try to remember the specific provision. We'll try to remember as simple as we can. First, service, don't see book, listen. Service in relation to immobile property, any service relation to property. You tell me logically what should be taken as place of supply? Location of property, location of property. But we have one special point. If the property is outside India, then location of recipient. Same way. Organizing an event, what should be taken? Logically you think and tell. Location of event, super, location of event. Here also the same special point. If the event is outside India, then location of recipient. Okay, wow. Then admission to an event. Admission to an event, entry ticket, admission to an event. Location of event, no special point. Location of event, that's it. Location of event. Next. Transportation of passengers. Starting point of passenger. Transportation of goods. Starting point of goods. In a B2B already we know. B2C only you should remember. Got it? So, immobile property service, location of property. Organizing an event, location of event. Admission to event, location of event. Transportation of goods, starting point of goods. Transportation of passenger, starting point of passenger. Only first two places we have the special point. If it is outside India, then location of recipient. Which case? Immobile property, organizing an event. Okay, va? Next one pa. Services on board a conveyance. That is during the journey, some service will be provided. Then, super, starting point of conveyance. Easily remember. Transportation of goods, starting point of goods. Transportation of passengers, starting point of passenger. Service on board a conveyance, starting point of conveyance. Okay. Then, next, telecommunication. Telecommunication, fixed line. Fixed line, landline. Location where landline is installed. Okay. What if it is postpaid mobile? Billing address. Logically we need to take that. Prepaid, online recharge. Location of recipient. Suppose you are doing recharge through a dealer, location of the dealer. Okay. And these are the points. First, general provisions we discussed. Immobile property services. If property in India, location of property, property outside India, location of recipient. Then event related, admission, always location of event. Organizing, event location, if event outside India, then location of recipient. Transportation of goods, starting point of goods. Transportation of passenger, starting point of passenger. Service on board a conveyance, starting point of conveyance. Telecommunication, fixed line equipment location, mobile postpaid billing address, mobile prepaid dealer address, online recharge, general provision. That is location of recipient and the records of supplier. Advertisement services to government, each state where the advertisement is provided. Every state where the advertisement is provided. But this is when advertisement service in general or to government? To government. And there are food and beauty. Food, beauty, training and performance appraisal. Total 4. Food, beauty, training, performance appraisal. What will be taken? Location of performance. Means wherever the service is performed. What are the 4? Food means restaurant, catering. Then beauty treatment, cosmetic surgery, etc. Then training. Then training means corporate training, workshops, etc. Performance appraisal, evaluating the performance of the participants, like acting as a judge in reality show, etc. For these 4, what should be taken? Location where the service is performed. Wherever it is performed, that will be taken. Over pa. That's it. This is what you need to remember. Easy. So the B2B, B2C confusion you will get only in case of TOT. Training and performance appraisal, organizing an event, transportation of goods or passengers. In that case, what you should do? You should take B2B means always location of recipient. So that's why we don't have to remember that separately. B2C provisions only you remember. Got it? So all the points we covered, and we will see some questions on this. Automatically you will get the confidence. Place of supply What's the page number, pa? Page number 56, you see. Mr. Radheshyam, a chartered accountant, registered in Delhi, wished to purchase an office in Bengaluru. Mr. Radheshyam took financial services from ICICI Bank registered in Chandigarh, in which he is account holder, to procure loan for an office property situated in Bengaluru. He paid 20,000 as processing fee for this loan to bank. What is the place of supply for the bank in this situation? Did we study any specific provision for banking services? In this list we studied any banking provisions? No. So that's a general provision. What will be taken as place of supply? Location of recipient. What is the location of recipient? B2B only, na? Radheshyam, chartered accountant, registered in Delhi. B2B. So what will be taken? Delhi. Easy. Then number 2, Mr. Hira, a registered person in Gurgaon, avails architect services. Architect service means property related service. What are the services in relation to immobile property? Can you give me some examples of services? Architect service, next. Construction service, next. Renting of immobile property, interior decoration, real estate agent services. You got it? All these are examples of service in relation to property. Okay, it's architect services. Of Sweet Homes Private Limited, registered in Mumbai for a property situated in London. What will be the place of supply? Location of? Generally for property services, location of property. But here the property is outside India. So location of recipient. What is that? Gurgaon. Gurgaon. Then only 2 places we have this special point. What are the 2 places? Immobile property services, organizing an event. Okay. Then if NM Shipping Company located in Chennai charges ocean freight charges for transport of goods to California for a customer located in Bengaluru, the place of supply of service shall be transport of goods. B2B, B2C we need to check. Correct? Is it B2B or B2C? B2C. Because they gave customer located in Bengaluru. They did not give registered person. So, B2C, what should be taken? Starting point of goods. What is the starting point of goods? So, located in Chennai, charges freight for transportation of goods to California means from Chennai only the goods are taken. So, what should be taken? Chennai. That is starting point of goods. B2C, starting point of goods to be taken. Starting point of goods. Then 4, Mr. X, a resident from Pune, conducts training for employees of P Limited, being a registered person under GST, based out in Chennai at a resort in Darjeeling. The place of supply in this case is training. We should check B2B or B2C. Is it B2B or B2C? B2? Ayo. B2B, P Limited registered person, B2B. X conducts training for employees of P Limited, a registered person. So B2B. For training B2B, what should be taken? Location of recipient. What is the location of recipient? Chennai. P Limited is registered person under GST based out in Chennai. So Chennai will be taken. Got it? So 3 places. First you need to check B2B, B2C. If it is B2B, directly location of recipient. Sorry. In this case, if it is B2C, Darjeeling. Why Darjeeling? Location of performance. 4 places we need to apply location of performance. What are they? Training. First food, beauty, training, performance appraisal. Okay. Next. 5. A in Delhi has been awarded a contract by B in Karnataka and B does not specify any details of supplier of goods in the contract. So A in Delhi has been awarded a contract by B. So A is the supplier, B is the recipient. A himself chooses C located in Rajasthan as the supplier and asks C directly to send the goods at the Karnataka site. Bill to ship to. A does not have any warehouse or does not store goods anywhere else in this state. Thereafter, A uses the goods for installation at site. A does not have any other contract for installation in Karnataka. What is the place of supply in the case? For transaction between C and A and between A and B. First, C we will look. C is delivering the goods to B in Karnataka. Where is C located? Rajasthan. So C of Rajasthan is delivering the goods to B in Karnataka, correct? And raising invoice to A of Delhi. So invoice to A in Delhi. So the first transaction is between C and A. What is it? Bill to ship to. For bill to ship to, what should be taken as the place of supply? Billing address. What is the billing address? Delhi. So for transaction between C and A, Delhi should be taken. Am I right, pa? Okay. C to A, place of supply is Delhi. Okay. Then A will definitely raise invoice to B. Why? Goods are delivered to B on behalf of A. Means A has to raise the invoice to B na. I told you in bill to ship to transaction there will be two supplies. One between the original supplier and the billing address. Second between billing address and the shipping address. So A will raise invoice to B. And what is it? What is it? Location of installation. It's not supply involving movement of goods. Installation at site. What is the installation at site? Karnataka. That will be taken as the place of supply. So therefore option A is the answer. Is it clear? Suppose if it is not installation, then what we would have done? Ending point we would have taken. What is ending point? Then also Karnataka. Correct? So option A is the answer for this. Then look into sixth one. A located in Bengaluru, Karnataka facilitates supply of food grains between B of Kerala and C of Japan. B supplies goods to C and on completion of the transaction pays commission to A. What is the place of supply in case of A? A is acting as an intermediary. What he is doing? Connecting the seller and buyer, means agent. For agent, is there any specific provision? No. So what should be taken? General provision. So what is the general provision? Location of recipient. What is the location of recipient? Not Japan. Not Japan. Because commission B is paying B supplies goods to C and on completion pay commission to A. Means B is the location of recipient. Is it clear? Where is B located? Kerala. So Kerala will be taken. It is general provision. Why general provision? For agent services we don't have any specific provision. See, that is the confidence you should be having. You should know what are specific provision, so that the balancing cases it will be general provision. That's why I told you 90% if you don't know anything and if you apply general provision also 90% your answer is correct. Okay, because many places we are applying general provisions only. Next, Grand Wedding Planners Chennai, wedding planner organizing an event, is hired by Mr. Ramesh, unregistered person based in Hyderabad, to plan and organize his wedding at Chili's, Africa. What is the place of supply? B2B or B2C? For organizing an event we need to check B2B, B2C. B2B or B2C? B2C. What should be taken? Location of event. But the event is? So, what is the location of recipient? Hyderabad. So Hyderabad should be taken as the place of supply. Then ABC, a statutory body located in New Delhi, commissions ST located in Mumbai for an advertisement on Pradhana Mantri Awas Yojana to be displayed in cinema halls in Chennai and Hyderabad. What is the place of supply with respect to commission? For advertisement service to government. Government includes central government, state government, local authority, statutory body, anyone. Advertisement service to government. What should be taken as a place of supply? Each state where the advertisement is provided. Where and all advertisement provided? Chennai and? So Chennai and Hyderabad will be taken as the place of supply. Next. Aflatoon Spares Private Limited, located and registered under GST in Haryana, supplied spares to Mr. Lakshmi Khurana, an unregistered person located in Rajasthan. Mr. Lakshmi Khurana booked the courier himself with Black Dot Courier, registered under GST in Delhi, for delivery in Rajasthan. Black Dot Courier picked up the goods from Haryana and handed over by Aflatoon Spares Private Limited and delivered the courier in Rajasthan while passing through the state of Uttar Pradesh. Determine the place of supply of service provided by Black Dot Courier Private Limited to Mr. Lakshmi Khurana. First service is what? Transportation of goods. They may beat around the bush to confuse us, but you be clear, it is transportation of goods. What we need to check? B2B or B2C? Lakshmi Khurana is the recipient. Registered, unregistered? Unregistered. So transportation of goods. Transportation of goods. B2B or B2C? What should be taken? What is the starting point of goods? Starting point of goods, from where they are picking up? Picked up the goods from Haryana. So Haryana is the place of supply. You understood? They will give lot of data. Okay. So it's like, now your mom will make upma and give. When she give upma, definitely you wanted to eat what you want to eat only. Correct? In that upma, if cashew nuts are there, that cashew nut only you will eat. Upma and a little bit you will eat and you will throw that. Correct? Because not everyone likes upma. Therefore, like that they give lot of data. Everything will be there. Nonsense also will be there. We need whatever we need to take. That alone you take and arrive at the answer. Then Mr. Javed, because see, who need Aflatoon spares? What spare parts they are selling? Why FOB basis is given? All those things is irrelevant for us. Then Mr. Javed, an unregistered person residing in Hisar, Haryana, went to Delhi for seeking admission of his child, Mr. Arjun, in CA Intermediate. Mr. Javed got the demand draft generated at ICDI Bank, located and registered under GST in Sahibabad, Uttar Pradesh, against cash for depositing the registration fee to ICI. Mr. Javed does not have a bank account in ICDI Bank, and the bank does not have any policy of KYC requirement for customers requiring demand draft and not having account with any of its branch in India. Okay. Finally, what is the place of supply of service provided by ICDI Bank? First, bank, do we have any specific provision? So, general provision. As per general provision, B2B, B2C. B2B or B2C? B2C. Location of recipient in the records of supplier, not available. Location of supplier, what is that? Uttar Pradesh. Why location of recipient not available in the records of supplier? That's what they gave, beating around the bush, that KYC requirement is not there. So name, address of the recipient, that is Mr. Javed, is not available, and they are not even account holder, like that they have given. Means location of recipient not available in the records of supplier. Clear here? Then next, look into question number 1. Question number 1. X Limited of Mumbai, Maharashtra receives an order from A Limited of Surat, Gujarat for the supply of certain goods. The price quoted by X Limited being inclusive of freight. X Limited arranges for the transportation of goods to Surat. The delivery of goods is taken by A Limited at Surat. Determine the place of supply of goods and nature of transaction. Supply involves movement of goods or does not involve movement of goods? Involves, because they are sending the goods, correct? Then what should be taken? Ending point. Assuming that it is a B2B transaction, what will be taken as the place of supply? Ending point. What is the ending point? Surat, Gujarat. Would your answer be different if A Limited has arranged the transportation? See, whether supplier is arranging transportation or recipient is arranging transportation, but supply involves movement of goods. So what should be taken? Ending point should be taken. So the answer will remain the same. So next question number, we'll see some recent questions. Question number 17 you take. 17. With reference to GST law, determine the place of supply with reasons in the following independent cases. Miss Kanika of Kolkata, West Bengal, visited to Jodhpur Law University, Rajasthan, and paid her college fees by purchasing a demand draft from a bank located in university campus. Miss Kanika did not have account with the bank. Banking services, again what should be taken? General provisions. So location of recipient. Location of recipient. So that will be taken, and recipient not available. So location of supplier. Location of supplier of service, that is Rajasthan. Mizu Mission Limited, registered in the state of Andhra Pradesh, supplied a machinery to KN Wind Farms, registered in the state of Karnataka. However, the machinery was assembled and installed at the windmill of KN Wind Farms, which was located in the state of Tamil Nadu. Where is it assembled and installed? Tamil Nadu. So Tamil Nadu will be taken as the place of supply. 10(1)D, assembly or installation at site. Okay, this much direct the questions will be. What people will do is that they will not read and go. As they will not read and go, they will find it difficult. If you properly read and go, mostly the questions will be direct only. Okay, next you see question number 23. Question number 23. Garima, having its permanent residence in Bhavnagar, Gujarat, purchased a car from Kiara Motors of Jaipur, Rajasthan, to take the advantage of lower registration charges and road tax. Garima took the delivery of car from Jaipur and returned with car to her residence in Bhavnagar, Gujarat. Jaipur car is purchased and she is only bringing it back to Gujarat. Supply involves movement or does not involve? Does not involve, because she took the delivery there itself. So buyer is going to the seller's place and takes the delivery there itself. So therefore supply does not involve movement of goods. Then, so what will be taken as the place of supply? Location of goods. Location of goods. If it is B to B. But here Garima, we don't have any information. Address of Garima, record in the invoice issued by Kiara Motors, mention only the name of the state, that is Gujarat. So it's not B to B. So B to C. B to C, what we will take? Location of recipient in the records of supplier. What is the location of recipient in the records of supplier? Gujarat. Sir, entire address not there, only Gujarat is there enough? Yes. Just the name of the state is mentioned, that is sufficient. Garima is an unregistered person, whereas Kiara Motors is registered. What if Garima is registered? B to B. So location of goods, where the goods is located in Jaipur, that only will be taken. And determine the place of supply for supply made by Kiara Motors to Garima, that will be Gujarat. Place of supply is Gujarat. Then next, question number 27. Briefly examine the place of supply in the following independent cases. Miss Shanti, unregistered resident of Gujarat, went to meet her parents at the native place Patna, Bihar, and buys a medical insurance policy for her parents from an insurance company, M&T Insurers of Patna, registered in Bihar. The location of recipient of service in the records of M&T Insurers is Patna. Insurance service, do we have any specific provision? So that is location of recipient in the records of supplier. What is the location of recipient in the records of supplier? Partner. And it is not B2B, B2C. Yeah, unregistered. So B2C, location of recipient in the records of supplier. So partner will be taken as the place of supply. B. Lakan Singh Transports Private Limited, GTA, registered in Noida, Uttar Pradesh, is hired by Ram Trade Links, registered supplier in New Delhi, to transport its consignment of goods from its warehouse in Delhi to the house of a buyer located in Roorkee, Uttar Pradesh. For goods transport agency services, correct? Is hired by Ram Trade Links. So GTA services means transportation of goods. Should we check B2B, B2C? Yes. Is it B2B or B2C? B2B. What will be taken as place of supply? Location of recipient. So Ram Trade Links registered in New Delhi. So New Delhi will be taken as place of supply. Then Mr. Karan, Mumbai, takes a post-paid mobile connection in Mumbai from the service provider Freesia Limited and gives his residence address at Mumbai as the address for billing with the said company. Post-paid mobile billing address. What is the billing address? Mumbai. Mumbai will be taken as the place of supply. Understood? Then say this. Question number 28. Bindusar is an employee in Galgotia and Sons working at its Mumbai Maharashtra office. Mr. Bindusar is unregistered under GST law. His family is located in Bareilly, Uttar Pradesh. His son requires a laptop for his school project on urgent basis. Therefore, Bindusar places an order on Amazing.in e-commerce platform, that e-commerce circular, okay, for supply of laptop of latest configuration for his son, which is to be delivered at his residential address located in Bareilly, Uttar Pradesh. First. So, Bindusar, while placing an order on e-commerce, provides the billing address of his apartment in Mumbai. Okay. Billing address is Mumbai, but his delivery address will be Bareilly, Uttar Pradesh. What should be taken? Billing and delivery address do not match. So, delivery address. As per CBIC circular, in case of supply of goods through e-commerce platform to an unregistered person, location of recipient in the records of supplier should be taken. If the billing address and delivery address match, the address will be taken, billing address only will be taken. If the billing address and delivery address does not match, then the delivery address will be taken in this case. So accordingly, in this case, Bareilly, Uttar Pradesh will be taken as the place of supply. Clear, pa? So majorly we discussed, but repeated questions I did not touch. These are the type of questions you get, and this extra, there is some rules related to place of supply. This is for apportionment. So far not tested in exam. I don't think so it will be tested in exam. But in short I will tell you, you remember, just 10 minutes we will take time in this, listen. That is advertisement services to government, page number 78. Page number 78. And what we are going to learn in this is that, please concentrate, pa. Usually, if the place of supply is in more than one state, we need to apportion the value between the states. Like overheads chapter in costing, when we have a common overheads, we divide between the production department, service department on some basis. Na? For example, rent, floor area and power based on number of lighting points or kilowatt hours, like that. So some basis of apportionment we need. That's what we are trying to understand. Please listen. Advertisement services to government. What is the place of supply? Each state where the advertisement is provided. Suppose if it is advertisement on train they will do the stickering. Advertisement on train, see the length of track in each state. For example, the train is going from Chennai to Mysuru. See the length of track in each state and you divide it based on that. Got it? So, for example, Tamil Nadu, Chennai to Mysuru means 3 states it is touching, Karnataka, Andhra Pradesh and Tamil Nadu. Tamil Nadu, how much is the track distance? Andhra Pradesh, what is the track distance? and Karnataka, what is the track distance? That will be given in the question itself. You need to take that and you need to divide. Okay. Advertisement on train, length of track. Suppose if it is advertisement on train ticket, number of stations in each state. Suppose if it is advertisement on television, viewership data, number of viewers in each state. What if the channel is telecast in more than one state? First you divide it between the channel based on viewership. Thereafter you divide it based on population census. Suppose if it is advertisement on internet, deemed to be provided all over India because you cannot control the moment it goes to internet. So across the country, means all states we should divide. Yes, all states we need to divide. Suppose if it is advertisement through SMS, take the telecom subscriber data. Who will give telecom subscriber data in each state? So TRAI will give, you take that. Apart from this five, any other case, it will be expenditure ratio, matching concept. That's what your account says. Revenue recognition. Recognize your revenue based on your expenditure. So therefore, expenditure ratio. Then suppose if it is immobile property services, listen, accommodation services, package tour, package tour 60,000 collected for a South Indian trip. Now what we need to do in this case, see the number of nights stayed in each state. Number of nights stayed in such property in each state should be taken. For example, 3 nights in Kerala, 2 nights in Tamil Nadu, 1 night in Andhra Pradesh, like that only package tour will be. So 3:2:1, you need to divide between 3 states. Suppose if it is accommodation in a houseboat, so you boarded a houseboat, the boat moves from one state to another state, then see the number of hours in each state, based on that it should be divided. And any other service in relation to immobile property, general, what you will take, any service in relation to immobile property, area, carpet area of the immobile property in each state. Example, you provide repairs and maintenance service in relation to a property, 3 properties of a person in 3 different states. See the carpet area of the property in each state and you divide. Basically what we are doing is that revenue recognition. We are taking the revenue which is in total and dividing between the states. Then suppose if it is event related services, organizing an event, simple, location where the event is held. For example, what if the event is in more than one state? Nowadays people wanted to have reception in one place, wedding in one place, correct? Lot of functions will be there, pa. So before that engagement, reception, then marriage, thereafter sangeet, haldi, like that, different things will be there. Only for first night they did not plan it. So therefore these different events which will be conducted in different states, people lot of money they spend. One event organizer, you are the event organizer, and the events are in different locations. How will you divide your revenue? Simple, see the expenditure. For conducting the wedding in one place, what is the expenditure? For conducting reception in one place, what is the expenditure? You recognize your revenue based on the expenditure ratio. That is organizing an event. Then suppose if it is telecommunication service or internet service, wherein the installation, fixed line, wherein it is installed in multiple locations. For example, one leased line I am putting for a bank and I am connecting the bank branches in multiple states. Now I have to see how many circuit points in each state, and based on that number of points lying in each state, and I need to divide. Clear? Then that is what you need to remember related to the rules, IGST rules related to place of supply. And look into this, there are some illustrations. Look into illustration 1. Parth of Pune, Maharashtra enters into agreement to sell goods to Bakul of Bareilly, Uttar Pradesh. While the goods were being packed in Pune Godown of Parth, Bakul got an order from Shreyas of Shimogga, Karnataka for the said goods. Bakul agreed to supply the said goods to Shreyas and asked Parth to deliver the goods to Shreyas at Shimogga. You are required to determine the place of supply in this case. So whenever you get a question like this bill to ship to question, you put it like a chart. So then only you will be able to write it properly. First, who is the supplier? Parth. Where is that Parth located? Maharashtra. And he got an agreement to sell goods to Bakul. Bakul of what? Bareilly, Uttar Pradesh. And there is another person, Shreyas. Shreyas is in Karnataka. Now Parth will raise invoice to Bakul and will deliver the goods to Shreyas. Means it's a bill to ship to transaction. So what is the supply between Parth to Bakul? Billing address will be taken. What is the billing address? Uttar Pradesh. So first case, transaction between Parth and Bakul, place of supply is Uttar Pradesh and it is an interstate supply because supplier in Maharashtra, place of supply Uttar Pradesh. So first case it will be Uttar Pradesh. Okay, va? Now there will be second supply between whom? Bakul and Shreyas. Bakul will raise in turn invoice to Shreyas. And what is the place of supply in this case? It is supply involving movement of goods. Why supply involving movement of goods? There is a goods movement from one place to another place. But sir, Bakul is not moving the goods. Nowhere I said the movement of goods should be by supplier. Movement of goods can be by supplier, movement of goods can be by recipient, or movement of goods can be by any person. What we need to see is that supply involving movement of goods. Yes, supply involving movement of goods. So what should be taken as the place of supply? Ending point. What is the ending point? Karnataka. So terminate for delivery, that is Karnataka will be taken as place of supply. Understood? Next, illustration 2. So starting point of an aircraft is Chennai, starting point of goods is Mumbai, starting point of passenger is Delhi, means a passenger boarded in Delhi, and ending point of the aircraft is Dubai. With respect to passenger ticket, B2B, what will be taken as place of supply? Location of recipient. B2C, starting point of passenger, that is Delhi. For services on board a conveyance, what will be taken? Starting point of passenger, starting point of conveyance. Conveyance, that will be Chennai. And for goods sold on board a conveyance during the journey, what will be taken? Starting point of the conveyance, passenger, goods. Goods. Okay, be careful. Accordingly, you need to determine. Then this is the illustration I told you, train. So advertisement on train, what we need to do? We need to take the length of track in each state and divide it between 3 states. You got it? Then suppose if it is train ticket, see the number of stations in each state and you need to divide. Suppose if it is advertisement on TV, we need to divide between all channels, which is based on the viewership data. After every channel, suppose if every channel, one channel, second channel and fifth channel is in 2 states, then you divide it based on population census. Then suppose if it is advertisement in internet deemed to be provided across the country, advertisement through SMS, see the telecom subscriber data in each state and you divide it based on that. Any other mode of advertisement, expenditure ratio. Suppose if it is repairs and renovation service to property, then it is not accommodation, it is not accommodation houseboat, any other case, area of property. Say they have property in multiple states, see the carpet area in each state and you divide it based on that. For calculation and all, don't ask me to do, you yourself can do. If you have calculator in this, you need to know what is the base of apportionment. And next, Club Mahindra tour operator service. So 3 nights, total 6 nights. See the number of nights stayed in each state. And next, if it is houseboat, see the number of hours in each state. Then suppose if it is telecommunication services, telecommunication service, each state where the circuit is installed. For example, Karnataka 4180 circuit points, AP and Tamil Nadu, in that ratio it needs to be divided. And these circulars are not there. Not even one circular is there, pa. Okay. So you don't have to bother about the circulars. And only this point alone you see. Place of supply in case of advertisement. This first circular is not there, second circular is not there, and fourth is not there. Just this advertisement point alone you need to know. Listen, please listen. In case of advertisement services, do we have any specific provision? Advertisement to government we have, but advertisement to others? So, general provisions. Now listen, I have a property. I have a property. On the top of that property, you wanted to place a hoarding. I have a property. On the top of the property, you wanted to place a hoarding. I allowed you to place the hoarding. You placed it. You paid me some money. What service it is? Advertisement service, or renting of immobile property service? Renting of immobile property, it's not advertisement service, because I am giving my space to you to keep your hoarding. So therefore it is renting of immobile property. Now you own a hoarding there. Now what you will do? You will put the advertisement of a client in that hoarding. Now for you it is renting of immobile property, advertisement service. Advertisement service. So general provisions. Is it clear, pa? The contract between the property owner and the advertising company, location of immobile property is the place of supply. Suppose between the advertising company and the client, it will be general provisions. Okay. So we completed place of supply fully. Okay, done. Got the confidence? Now today we have seen so far composition scheme, value of supply, time of supply and place of supply. Okay, and we'll take a break and we will see TDS TCS provisions. Okay, TDS TCS provisions and the other topics. Thank you. At what time? 2:15. Saripa. Okay. Okay, we'll start. Say this, we'll start with this TDS TCS question. TDS TCS, there is one concept. Please take page number 151. Page number 151. Listen. TDS refers to tax director at source, TCS refers to tax collector at source. Whenever I am making supply to a person, notified recipient, that notified recipient will be deducting TDS at the rate of 2%, and that 2% TDS, when they are deducting, they will remit it to government against our permanent account number, our GSTIN, so that we can take it as TDS credit in our cash ledger and we can utilize it for payment of GST. For example, you are that notified recipient. I will make sales to you, 2,50,000 rupees. The contract value should exceed. So therefore, I am making a sales for some 10 lakhs. 10 lakhs into 2%. What is 10 lakhs into 2%? 20,000 rupees. You will be remitting as TDS against my GSTIN, and it will be reflected in my electronic cash ledger. Tomorrow I need to pay GST on this 10 lakhs. At the time of payment of the GST, this 20,000 rupees will be reduced. That is the concept of TDS. So what is the purpose of TDS? Again, to catch the supplier if he is reporting lesser turnover, because if you deduct 2%, then for 2% if it is 20,000, for 100% it is how much? Then reverse working they need to do. Suppose if the turnover, if I have reported less than 10 lakhs, then they will give a notice to me asking me to pay GST on the differential amount. So in order to catch the supplier, if he is making a suppression of turnover, they brought in the concept of TDS and TCS. So look into TDS under section 51. So when TDS will be applicable? Whenever supply is made to the notified recipient. So who are the notified recipients? Government, that is central government, state government, local authority or union territory, government society, public sector undertakings, government body or authority where government invests more than or equals to 51%, and registered person who is receiving metal scrap from another registered person. So supplier is registered, recipient also registered. When they supply metal scrap, it is covered under RCM, okay, and it is also like liable for TDS. RCM point we don't have, TDS alone you remember. That is supplier who is making supply of metal scrap to another registered person, it is chargeable to TDS. So tell me who are the notified recipients where TDS is applicable? Number one, supply by any person. Two, notified recipient. Who are the notified recipients? Government department, central government, state government, union territory, local authority, then government society, public sector undertaking, government body or authority in each equity is more than or equals to 51%, and supply of metal scrap by one registered person to another registered person. So these cases TDS is applicable, and what is the rate at which TDS is applicable? At the rate of 2%. And there is non-applicability of TDS when the supplier is unregistered. TDS is not applicable. Why? Because we don't have to bother about that supplier, na? So that's why TDS is not applicable. Or the supplies are exempted or non-taxable, then also TDS is not applicable, because GST itself is not there. What's the point in identifying the turnover? So if the supplier is unregistered, TDS not applicable. If the supplies are exempted or non-taxable, also TDS not applicable. Where the value of supply under the contract does not exceed 2,50,000, then also TDS not applicable. So it is a limit for TDS, the contract value of the supply. Is it the invoice value or contract value? Contract value of the supply means the total value of supplies under the contract should exceed 2,50,000. Whether this 2,50,000 is including GST or excluding GST? Excluding GST. Okay. Then supplies between notified recipients other than metal scrap, that is between government department and PSU, or PSU and government society, between them, that is we have seen the notified recipients now, between them if there is any supply, TDS is not applicable. However, if it is metal scrap, TDS is applicable. For example, PSU is selling metal scrap to government. Even though between PSU and government there is no TDS, but that is not applicable in case of metal scrap, so TDS will be applicable. That is what? Supplies between notified recipient other than supply of metal scrap. Then whenever recipient is liable to pay GST under RCM, then also TDS is not applicable, because the liability is completely on the recipient and they don't have to find the supplier for that reason. And next, location of recipient and place of supply not in the same state. What does it mean? If the location of recipient is in Tamil Nadu, place of supply is also in Tamil Nadu, so then TDS is applicable. If it is in different state, TDS not applicable. Why is it like this? Concentrate. I am a supplier who is doing construction service located in Tamil Nadu, and government of Andhra Pradesh is having a building in Tamil Nadu for which I am doing the repairs or construction service. Location of supplier Tamil Nadu, place of supply also Tamil Nadu, it is intra-state supply. Chargeable to what GST? CGST and Tamil Nadu SGST. But where is the recipient located? Andhra Pradesh. They cannot deduct 1% towards the Tamil Nadu SGST because they are in other state. So as the recipient is in the other state, TDS itself is not applicable. Is it clear, pa? What is the place of supply in this example? Tamil Nadu. What is the location of recipient? Andhra Pradesh. So when place of supply and location of recipient is in two different states, TDS is not applicable. Location of recipient and place of supply not in the same state. These are the 6 cases where TDS is not applicable, very important for theory. So they have already tested this. List out the situations where TDS is not applicable like that. They will ask this question. Then look into the next one. TDS is computed on the amount remitted to the supplier by the recipient. For example, I am raising you invoice for 1,50,000 plus 18% GST. But you are giving me 1,30,000 rupees plus GST. I am raising invoice for 1,50,000 plus GST, but you are giving me 1,30,000 plus GST. Now TDS is computed by you on 1,50,000, 1,30,000, only on 1,30,000, not on 1,50,000. Why like that? TDS is computed only on the amount remitted by recipient to supplier. Then next, TDS is not applicable if it is an intrastate supply and recipient is in another state. Already we discussed that. And look into computation and compliance. First we are discussing TDS related provisions, but then we will see TCS. So computation and compliance, TDS will be deductible at the rate of 2% and it will be payable by recipient to government. What is the time limit within which they need to deposit this TDS? 10th of the month following every month. Along with that they need to file one return. What is that return? GSTR 7. So TDS deducted shall be payable. So TDS is computed on value of supply excluding GST. TDS deducted shall be payable to government and they need to file a statement. What is that statement? GSTR 7 shall be filed by 10th of the month following every month. Also there is something called as GSTR 7A, that is a certificate. TDS certificate needs to be given, but they have not given any time limit for that. Then what is the late fee for delay in filing? GSTR 7 late fee 25 rupees per day subject to maximum 1000 under each act. Suppose if the delay is 10 days, so 10 into 25, 250. 250 under CGST and 250 under SGST. Suppose if the delay is somewhere like 60 days, 60 into 25. What is 60 into 25? 1500. But maximum will be only 1000. So 1000 under CGST and 1000 under SGST. So that is the late fee for delay in filing return, 25 rupees for each day of delay subject to maximum 1000 under each act. And are they required to file any annual return? No. Annual return is not required to be filed by them, and only TCS deductor is required to file annual return, not the TDS deductor. And what is the rate at which they need to pay interest? Why they need to pay interest? Simple pa. If there is a delay in filing return, means there is a delay in payment of tax, because at the time of filing return only they are going to remit the TDS, means they are going to file the return late, definitely there is a late payment of TDS also, so interest will be payable. What is the rate of interest? Always remember, whenever we need to pay interest to government, the rate of interest will be 18% per annum and it should be counted from the due date till the date of payment. What is the due date? 10th of the month following every month is the due date. So from 11th it should be counted till the date they are making the payment. Interest needs to be computed. Interest at the rate of 18% per annum is payable for the period of delay in payment of TDS and TCS. Also there is a general penalty of up to 25,000 rupees. So this is on account of contravention of provisions. They need to a penalty. How much penalty pa? Up to 25,000. This is about the TDS TCS points. First we completed TDS. Now again go back to the first page of this. We will see TCS related provisions and now we will compare so that you will understand. First, TDS is applicable whenever the supplies are made to notified recipients. But when TCS is applicable, whenever supplies are made through e-commerce operator, the e-commerce operator will deduct TCS. So who will deduct TDS? TDS, notified recipient. Who will deduct TCS? E-commerce operator. Okay. So supply to notified recipient, here supply is through e-commerce operator. If supplier and e-commerce operator is same person, then TCS is not applicable. For example, you take Agio app, Agio. So they are Reliance app only na, Agio. So they are selling garments, their own garments through their own app. Whether TCS is applicable? No. Suppose if they sell garments through Myntra or Nykaa, then applicable. Okay. So supplier should be different from the e-commerce operator, and such e-commerce operator should not be mere agent like payment gateway or logistic operator, etc. Suppose Paytm, Razorpay, PhonePe, through which you will make the payment. So whether we will call them as e-commerce operator? No, they are just the payment gateways. E-commerce operator means they should undertake the delivery of goods or services like Amazon, Flipkart, Meesho, BookMyShow, District, Zomato. These are all examples of e-commerce operators where they undertake to deliver the goods or services. Then next, section 52, e-commerce operator will deduct TCS at what rate? 0.5%. So TDS rate is 2%. TCS rate is 0.5 CGST, 0.5 SGST, or 0.5 is the total? 0.5% is total. In that 0.25% will be CGST, 0.25% will be SGST. Same way TDS rate is 2%. In that 1% will be CGST, 1% will be SGST. And when TCS is not applicable, first point same, if the supplier is unregistered, that is common between TDS and TCS. So TDS and TCS both will not be applicable if the supplier is unregistered. Also, second point is same, if the supplies are exempted or non-taxable, TCS is not applicable, TDS also not applicable. Then see the third point, that is supplies which are notified under 9.5, because I told you 9.5 and section 52 are mutually exclusive. Whenever e-commerce operator is paying GST under 9.5, they are not required to deduct TCS. So whenever notified service are provided under 9.5, TCS not applicable. Then payment is not collected by e-commerce operator. Only if payment is collected by e-commerce operator, TCS is applicable. Sometimes the payment will directly be given to the supplier and e-commerce operator will just do the delivery. In that case, TCS is not applicable. Is it clear? When TCS is applicable? Only when the payment is collected by e-commerce operator. So tell me, what are the cases where TCS is not applicable? 4 cases. Supplier is unregistered, supplies are exempted or non-taxable, and 9.5, supplies covered under 9.5, payment not collected by e-commerce operator. Do we have any threshold limit for TCS? No. For TDS we had, what is that? The contract value should exceed 2,50,000. Like that we don't have for TCS. TCS will be applicable always. Even if it is a transaction which is of 5,000, 10,000 also, TCS is applicable. But TDS only if the contract value exceeds 2,50,000. Then next, TCS is computed on what? TCS is computed on sales made during a particular month minus sales returns during that month, because in e-commerce sales returns will always be there, correct? So if you take Myntra, lot of people purchase the garments in Myntra only for one reason, that they will accept returns, correct? And they go to an extent where they buy from Myntra, they do the photo shoot, thereafter they will return that, okay? So Myntra should deploy an AI tool just to identify their Instagram account, okay? Wherein if this dress if you are wearing and putting photos, then return not allowed, you understood? Something of that sort they should bring. Too much power, because this itself they are taking as a duty. Daily they will post one photo. In every photo, one new dress they will be posting about it. And will they invest on this? No. All these are buy, wear, dress put. Even they go to the extent of going for function also. They will hide the tag, etc. That's why Myntra now has given big tags and all. One big tag they have given. You cannot fold it and all. So that also people are identifying different ways. So sales returns is major in e-commerce business. That's the reason why. So what we need to do, for example, this month 10 lakhs is the sales and 3 lakhs is the return. So 10 minus 3, 7 lakhs. On that 7 lakhs TCS will be computed. Is it clear? And also remember this point, while computing GST, the income tax TDS TCS, will it be included or not? Income tax TDS will be included, but TCS will not be included. While computing TDS and TCS under GST, GST will not be included. Means the value will be excluding GST. So both places, TDS also excluding GST, TCS also excluding GST. Is it clear, pa? What about income tax TDS TCS? That is different. This is different. Don't get confused between this and that. This TDS TCS is under GST. That TDS TCS is under Income Tax Act. We have TDS TCS in both the places. Okay. So while computing the GST, whether TDS and TCS should be included or excluded, irrelevant. GST, TDS, TCS, irrelevant. Okay. While computing TDS, TCS, whether GST will be included or excluded, excluded. Then next, payment towards the contract value excluding GST minus returns during the month. This TCS deducted shall be payable to government, in which return GSTR 8. TDS will be GSTR 7. TCS will be GSTR 8. By when they need to, in case of TDS, by 10th, TCS also by 10th. Both the returns, the time limit is same. 10th of the month following every month. Means I have to remit the TDS, TCS to government also by 10th of the month following every month. And in case of TDS, there is something called as certificate in GSTR 7A. There is no such requirement in case of TCS. And see the late fee. In case of TDS, what is the late fee? TDS return late fee 25 rupees per day, subject to maximum 1000. But here 100 rupees per day, subject to maximum 5000. Why such a difference, sir? Who is required to deduct TDS? Government. That's why lower late fee. You understood? Whereas who is required to deduct TCS? E-commerce operator. Private people only, na? Let them pay. So 100 rupees per day, subject to maximum 5000 under each act. Then, whether TCS deductor is required to file an annual return? Yes. That annual return is GSTR 9B and they have to file it by 31st December of the succeeding financial year. And both cases, there is interest on account of delay in payment and there is general penalty. And this TDS TCS, which is deducted by notified recipient and e-commerce operator, will be reflected in the supplier's GSTR 2A and it will go to electronic cash ledger, not electronic credit ledger. It will go to electronic cash ledger. You all know that the balance in cash ledger can be used for payment of any liability, tax, interest, penalty, fee, any liability we can use. So say this, TDS TCS deducted shall be reflected in GSTR 2A of supplier, which is reflected in the electronic cash ledger and is used for payment of GST liability. It can also be used for payment of interest, penalty, late fee payable. And can the TDS return be rectified? No. TDS return cannot be rectified, but TCS return can be rectified. So GSTR 7 cannot be rectified, but 8 can be rectified. What is the time limit for rectification of GSTR 8? Same time limit for what we have seen for credit note and ITC. What is the time limit for availment of ITC? 30th November of succeeding financial year or date of filing annual return, whichever is same time limit. 30th November of succeeding financial year or date of filing annual return, whichever is earlier. So total in 5 places we have the same time limit pa. What are the 5 places? Number 1, time limit for availment of ITC. Number 2, time limit for issuance of credit note. Number 3, time limit for rectification of GSTR1, GSTR3B and GSTR8. All these places the time limit is same. That's what I have given. Same time limit for availment of ITC, credit note, rectification of GSTR1, GSTR3B, even rectification of GSTR8. Then next, look into this illustration to understand how TCS will work. Okay, how TCS will work. First, there is a supplier Xiaomi and e-commerce operator Amazon. Whenever the supplier is listing their product and selling through Amazon, they have to pay a listing fee or commission. So say the contract to enter, the contract to sell the mobile with a commission of 1000 plus GST at 18%, which means for every mobile sold by Amazon, Amazon will receive 1000 rupees as commission plus 18% GST on that. They will be recovering it from the supplier. And a buyer placed an order for mobile with Amazon. Amazon informed Xiaomi and they have packed the mobile and they send it to Amazon with an invoice of 10,000 plus 28% GST, that is 12,800 rupees. Amazon will do delivery of the mobile to the buyer and will collect 12,800 rupees from the buyer. All the conditions are satisfied. Supplier is registered, payment collected by e-commerce operator and the supply is taxable. So therefore Amazon is required to pay TCS. At what rate they need to pay TCS? At the rate of 0.5%. 0.5% of what they need to pay? 12,800, 10,000. I told you, while computing TCS, exclude GST. So therefore, excluding GST, how much is the value? 10,000. So on the 10,000 into 0.5%, 50 rupees they will pay as TCS. Plus, they are getting a commission of 1000 rupees. On that they need to pay GST 18%. So GST payable on commission 180. So this will be the liability of e-commerce operator. What is the liability of e-commerce operator pa? GST on commission and TCS. Okay. And now this commission, GST on commission and TCS will be deducted and remitted the amount to the supplier. So what is the amount remitted to supplier? How much e-commerce operator collected? 12,800 minus what is their commission? 1000 minus what is the GST on commission? 180 minus what is the TCS? 50. So therefore what is the balance amount pa? 11,570. That 11,570 will be remitted by e-commerce operator to supplier. Now supplier should pay GST on 11,570? No, not like that. So already they know what is their liability. How much is their liability? 2,800. So they need to pay 2,800 minus this GST on commission paid by e-commerce operator. They will raise invoice to the supplier. So supplier can take ITC of this 180. So what is the input tax credit available? 180. And what is the TCS credit available? 50. So say this, ITC on commission paid 180 and TCS credit will be 50. So they will deduct this 180 and 50 and they will pay the net liability of 2,570. Got it? So this is how the supplier's liability will be, e-commerce operator liability will be, and definitely they can make a superb question on this because that much potential is there. Okay. And in my test series I have included one case scenario MCQ related to this computation of TCS etc. and all. Then look into this, and I have made the question paper in such a way that even a student who studied superbly also will fail in that. Like that I created a question paper. I will give it to you. Okay, I will give you the question papers. If you are able to solve the questions in that question paper and if you are able to pass in that, which means full marks you will get, 50 out of 50 you will get. Okay, like that. Got it? Because students were asking, sir, all easy questions only, sir, easy questions only, sir, like that. That's why, so little bit standard should be there. No, that's fine. Now say this. Then clarification on TCS liability in case of multiple e-commerce operators in one transaction. Sometimes there will be multiple e-commerce operators because in ONDC network, that is developed by government, what happens, multiple e-commerce operators can list their products. For example, there are a lot of sellers who listed their products through Meesho, and these sellers may find it difficult to again list it with Amazon, but Meesho can list those products with Amazon and can sell the goods to the various buyers. You got it? So now the sellers don't want to list it everywhere, because if I list it in 10 places, I get orders from 10 places. I will not be able to pack it and deliver to all the 10 places. That's why for me it is convenient with one e-commerce operator. So that's why I have listed with one e-commerce operator. That e-commerce operator in turn lists the goods with other e-commerce operator to reach the ultimate buyer. Then there are multiple e-commerce operators in the transaction. Now which e-commerce operator will deduct TCS? Amazon or Meesho? Seller side e-commerce operator. Who is seller side e-commerce operator? Meesho. They will deduct the TCS. So read that. Such e-commerce operator who finally releases payment to supplier is liable to deduct TCS. So which side e-commerce operator pa? Supplier side e-commerce operator. Suppose if the seller is only having the e-commerce platform and they are listing it through Amazon, then which e-commerce operator will deduct TCS? Buyer side e-commerce operator, that is Amazon. If the seller and seller side e-commerce operator is same person, then literally we have only one e-commerce operator na, that is Amazon. If the seller and seller side e-commerce operator is same person, then recipient side e-commerce operator is liable to deduct TCS, and every e-commerce operator will be reducing the commission, whatever commission that they are charging. Each e-commerce operator involved is required to pay GST on the commission earned by them. Okay, say this. There are total 4 sellers A, B, C, D who listed their products with e-commerce operator 1 Meesho. Again, e-commerce operator 1 listed with e-commerce operator 2, and we have buyers X, Y and Z. Now in this process what happens is that first the buyer will make payment to e-commerce operator 2, and e-commerce operator 2 will deduct a commission of 15%, and again they will be giving money to e-commerce operator 1. E-commerce operator 1 will deduct a commission of 25% and they will make the payment to seller. Now while making the payment to seller, they will also deduct TCS. Got it? Then filing of nil GSTR 8 is not mandatory, but filing of nil GSTR 7 is mandatory. What is 7? TDS. For example, you are a TDS deductor, you don't have any transaction in a month, even then are you required to file return? Yes. You are a e-commerce operator, no transaction during the month, are you required to file GSTR 8? No. Filing of nil GSTR 8 is not mandatory if there is no transaction in a particular month. Then second point, supply made in October month, that is invoice raised, but the payment collected in November month. Now TCS should be remitted for which month? October month or November month? Concentrate. I am a seller. You placed an order with me on 28th October. I dispatched the product on 28th October and it is a COD order, cash on delivery order. 28th October if I dispatch, it might be received by you on 3rd November. Possible? 28th October I dispatched pa. You are receiving it on 3rd November and the e-commerce operator will collect money from you on 3rd November. Am I right? Now e-commerce operator should remit the TCS 0.5%. Whether he need to remit it for October month or November month? October month. Why? I raised invoice for which month? So e-commerce operator also should remit TCS for October month, otherwise there will be a mismatch. I will raise the invoice for October month. If he remit the TCS for November month, definitely there will be a mismatch between my return and their return. Agreed. That's the reason why e-commerce operator should not remit the TCS in the month in which payment is collected, but they need to remit the TCS for the month for which supply is made. You got it? Read it. Supply made in October month, but payment is collected in November month. TCS to be remitted for October month. Net value of taxable supplies made during a tax period. That should be the criteria. Then whatever balance in credit ledger that cannot be used for payment of TCS. So TCS payment can be made through credit ledger. Impossible. So TCS is payable by e-commerce operator. E-commerce operator will have some input tax credits. Yesterday we discussed. So e-commerce operators will have lot of inward supplies like this platform development charges, app development charges, app maintenance charges, like that. On that they will have ITC. Can they use ITC for payment of TCS? No. TCS means it should always be paid in cash. And TCS deductor shall have two GSTIN. One for payment of regular liability and another for payment of TCS. So TCS liability separate GSTIN, and they will have the regular liability also. They will pay GST on commission and other charges. For that, for example, in this case, Amazon is liable to pay GST on commission, is also required to pay TCS. This is their regular liability. GST on commission is regular liability. They will report it in GSTR1 and GSTR3B. For that reason, they will have one GSTIN. And for payment of TCS, there will be another GSTIN. Means e-commerce operator will have two GSTINs. One for payment of regular liability, another for payment of TCS. And basically, what is the meaning of e-commerce and who is an e-commerce operator? E-commerce means any supply of goods or services including digital products over digital network or electronic network is known as e-commerce. What is e-commerce? Supply of goods or services or both through digital network or electronic network. That is e-commerce. Who is e-commerce operator? Any person who owns, operates or manages this digital or electronic facility or platform is known as e-commerce operator. Not necessary that they need to own it. They can maintain it or they can operate it. They will be called as e-commerce operator. Then look into tax implications on e-commerce operator. There are popular e-commerce model. Online marketplace model. Amazon, Flipkart. What will happen? I am a seller. I list the product in e-commerce website, Amazon or Flipkart. They receive the order. When they receive the order, they will inform me. I will deliver the product to them and they deliver it to the customer. Whereas inventory-led model, like that one model is there. In inventory-led model, what will happen? I will not send the product every time. I will maintain my inventory with them. Example, Zepto and Blinkit. In that case, the inventory is maintained by them. Correct? Means they will purchase. Yes, they will purchase. Have you seen Blinkit and Zepto stores? They will have a warehouse. They keep everything in that warehouse. And they will be delivering it in minutes. So for that they will maintain the inventory. Means they will procure it, sir. Yes, they will procure it and they deliver. Direct sales model. Supplier is only having an app through which they will deliver the goods. So Max, Ajio, etc. Now tell me, out of these three models, in which place TCS is applicable? Only first place. Only first place TCS is applicable. Other two places TCS not applicable. Why? Direct sales model, seller and e-commerce operator is same. Inventory-led model, seller and e-commerce operator is same. So therefore, in the second case, no TCS. In the third case also, no TCS. Only in the first case, TCS is applicable. Okay, Papa? This point also can be tested in exam. Because with the advent of lot of e-commerce businesses, they can connect this and they can ask. You be careful, only when the supplier is different from e-commerce operator, TCS is applicable. Next, look into this. Supply of goods or services through e-commerce operator is divided into 3. Supply of goods through e-commerce operator. Example, Amazon. Who will pay GST? On goods, who will pay GST? Supplier, e-commerce operator. What you had in the afternoon? You did consume anything? Weed, meth, cocaine, etc. No, na? What I told you, only 4 services through e-commerce operator will pay. What are those 4 services? HATE. All other cases, who will pay GST? Okay, correct? Please pa. Exam time actually is 2 o'clock to 5 o'clock exam time. If you are like this, Sang, you understood? Clear? The exam time for 2 to 5. See, this 2 to 5 you practice like this from now on, tomorrow onwards. That is 2 to 5 you should not sleep, you should be active. And this is only going to impact in the exam also. And they have strategically kept, because I know, I like many people ask the examination committee, why are you keeping exam in the afternoon? Keep it in the morning. 10 to 1 is a super time. 3 hours only, no. You keep 10 to 1. Because if you keep 10 to 1, so people, that is a peak time. Morning they get up and by afternoon they can take rest and again prepare in the evening. Why are you keeping 2 to 5? They are telling only when we keep in 2 to 5, we can cut down the pass percentage. So for that we wanted, you understood? Strategic, that is also a strategic timing, you understood? Because of which only strategic timeout will happen, you got it? So therefore 2 to 5 is the deadly time wherein every person will get sleep during this time, 2 to 5. And exactly that time only they are keeping CA exams. Okay. So my suggestion to you, for 1 month, you need to practice like 2 to 5 you should not sleep. 2 to 5 you should be fully active. Okay, va? And take rest from 11 o'clock in the bottle. So you need to take rest somewhere like 11 o'clock or 11:30 to 12:30 like that. But definitely not between 2 to 5. Please pa, it's a humble request to all of you. Start practicing it. Illana, like this only you will tell. That is, whenever there is supply of goods through e-commerce operator, who will pay? E-commerce operator. Supplier will pay GST. So supplier will pay GST, not e-commerce operator. Then e-commerce operator will pay GST on what? Commission. E-commerce operator. No, that HAT okay. In this case, e-commerce operator will have liability on what? They get a commission. E-commerce operator is not your father-in-law to do everything free. They get a commission. On that commission, they will pay GST. Plus, e-commerce operator is also required to pay TCS. So, GST on supply by the supplier. Whereas, e-commerce operator shall pay GST on commission and other charges. Now, second. Supply of notified services through e-commerce operator. Who will pay GST? E-commerce operator. Supplier has any liability? No. Then supplier will show it as what? Exempt supplies. Supplier will just show it as exempt supplies. There is no liability on supplier. GST payable by e-commerce operator. That too, how they need to pay? Using credit ledger or cash ledger or both? Only through electronic cash ledger. Only through electronic cash ledger. Next, supply of other services like Book My Show through e-commerce operator. Now, who will pay GST? Supplier. Then e-commerce operator will pay GST on what? Commission and other charges. They receive no. That is, first they collect some money from the theatre, and from us also they will collect internet handling fees like that and all. Okay. So therefore, e-commerce operator will pay GST on commission and other charges. Nowadays they have reduced it because of district app. Okay. So so like that district app came. When district app came, they started giving lot of offers. So automatically book my show reduced. Otherwise now 100 rupees, 120 rupees like that and all internet handling fee they used to put on 2 tickets, 3 tickets. Okay, literally like you are taking book my show as one of the person along with you to the theater. So that much they used to collect. Got it? So that all those charges they need to pay GST. E-commerce operator shall pay GST on commission and other charges. Then when a person is supplying their goods or services through their own platform, that is direct sales model, it is not called as supply through e-commerce operator, and it is normal supplies. Also agents like Paytm, PhonePe, OLX are not called as e-commerce operators. They are just listing platform. OLX is a listing platform. For example, you purchase something in OLX. Will the OLX be responsible? No. You are buying something from a seller. How OLX will be responsible if you tell, no, that product I did not like, so because of you only I purchased like that? Can you blame OLX? No. It will tell, boss, any shit also if you list it I will sell. So for me it is not there. So any product you can sell, definitely you cannot call them as the e-commerce operator because they will not undertake the delivery. Next, so usually, no, it happened. So one of my friend, iPhone 17 Pro Max at just 49,999 rupees only like that, one link came. So that idiot, so you should have thought, how 49,999 only? He clicked on that link, he made the payment. So one PhonePe link came. So he made the payment and he did not receive the mobile and is complaining to PhonePe. So what PhonePe will do? Anyone can send the money through PhonePe. They are not held responsible. So therefore, Paytm, PhonePe, OLX, etc. are not called as e-commerce operators. Then, what is the registration requirement in case of e-commerce operator? This point also I told you in 9.5. So every e-commerce operator is compulsorily required to get registered. Correct? Every e-commerce operator is compulsorily required to get registered, whether they are paying GST under 9.5 or deducting TCS under section 52. What about supplier of goods through e-commerce operator? Supplier of goods through e-commerce operator compulsorily required to get registered. However, if they are making only intra-state supplies, they are not compulsorily required to get registered. When they should register? Only when aggregate turnover exceed threshold limit. So supplier of goods through e-commerce operator, if they make only intra-state, not through e-commerce operator in more than one state, means they should be operating only in one state, and they have obtained UEN. What is UEN? Unique enrollment number. UEN means unique enrollment number. Then they are required to register only when aggregate turnover exceed threshold limit. Other cases, compulsory registration. Remember pa, supplier of goods through e-commerce operator is compulsorily required to get registered. However, if 3 conditions are satisfied, they are not compulsorily required to get registered. They need to register only when aggregate turnover exceed threshold limit. What are those 3 conditions? They should be making only intra-state supplies. They should not be making supplies through e-commerce operator in more than one state, which means intra-state only I am making, but I am doing business in 3 states. Possible? I am doing intra-state only, but I am doing business in 3 states. Yes, I am doing business in 3 states. Within the 3 states, I am making intra-state only. You understood? Even then, it is not possible. This point is not applicable because I should be making supplies through e-commerce operator only in one state, and I have obtained UEN. What about supply of services through e-commerce operator? No compulsory registration. They need to register only when aggregate turnover exceed threshold limit. And see this, complaints to be followed by e-commerce operator when the supplier is unregistered. When the supplier is unregistered, supplying goods through e-commerce operator. You tell me as an e-commerce operator, what are the compliances you need to follow? Your e-commerce operator, I am unregistered seller, selling goods through your platform. What is it you need to ensure? That I have obtained UEN. So without obtaining your UEN, I should not supply. Correct? First you need to ensure that I have obtained UEN. Next, I should not make interstate supplies through your platform. So if you have any customer outside the state, you should not allow them to buy the product. Correct? Then will you deduct TCS or no TCS? Yeah. Supplier is unregistered. So no TCS. And are you required to report these details also in GSTR 8? Yes. Whether you deduct TCS or not, the goods are sold through your platform, so you need to report these details. So what are the 4 complaints as per? Number 1, you should allow supply of goods only after unique enrollment number, and should not permit supplier to make interstate supplies, not required to deduct TCS, should declare the details in GSTR 8. Okay, va? But when you read a question, accordingly you need to write this. When you read a question, you need to know what you need to write. So they will give like this. As an e-commerce operator, what is the complaints that you need to follow whenever an unregistered person is supplying goods through your platform? Like that they will ask. So you need to write these 4 points. Okay. Now, what if there is a supplier who is under composition scheme making supply of goods through your platform? What are the complaints that you need to follow? Number 1. Composition scheme already registered, don't write UEN and all, okay. You should not allow them to make interstate supplies, because a person opting for composition scheme, if make interstate supplies, they are disqualified from composition scheme. So you should ensure that they are not making interstate supplies. Will you deduct TCS or not TCS? Yes, because composition scheme means they are registered. Composition scheme means they are registered. So therefore you should deduct TCS and should declare the details in GSTR 8. Then look into this illustration. Sapna Education Private Limited is receiving supplies through e-commerce limited. An e-commerce operator has provided the following supplies during December 2020 through e-com limited. See, e-com limited is the e-commerce operator and various suppliers are supplying through their platform. Supply of goods taxable at 12% by registered supplier. Tell me whether TCS is applicable or not applicable. Supplier is registered, supplies are taxable, payment is collected by e-commerce operator, yes. So therefore whether TCS is applicable, very much yes. But on what TCS will be computed? 4,50,000, very good. 5 lakh minus 50,000 sales return. Number 2, supply of goods taxable at nil rate by registered supplier. TCS is applicable or not applicable? Why? Nil rated or exempted, TCS is not applicable. Supply of housekeeping service by unregistered supplier. TCS is not applicable. Why? Very good. 9.5. In case of housekeeping services by unregistered supplier, it is a notified service under 9.5, where liability to pay GST is on e-commerce operator. So TCS is not applicable. So in both the cases, TCS is not applicable. 4th case, supply of other services by registered supplier. TCS applicable. So 5 lakh minus 50,000 plus 1 lakh 50,000. How much? 6 lakhs. 6 lakhs. On 6 lakhs, what is the rate of TCS? 0.5%. So 6 lakhs into 0.5%. 3,000 is the TCS. All this transaction happened for which month? December. Means what is the due date of payment of this TCS? 10th of January. And when are they making the payment? See there. Determine the consequences if the said amount is paid and return is filed on 15 January. How many days delay? 5 days. For 5 days, what are the consequences? Interest they need to pay for 5 days. Calculate. What is the amount on which interest is payable? 3,000. 3,000 TCS into 18% into 5 by 365. How much? So that is 7 rupees rounded off. And next, late fee 100 or 25 or 100. So 5 into 100, 500. Maximum 5,000. So 500 under CGST, 500 under SGST. That is a late fee. You got it? Like this, they will connect TCS late fee interest provisions. Okay. Then, with this we completed TDS TCS. Please look into some questions related to this. Page number 137. Page number 137. In which of the following cases e-commerce operator is required to get registered? Services covered under 9.5, liable to deduct TCS under 52, aggregate turnover in financial year exceed threshold limit. All of the above. If they are liable to pay GST 9.5, they need to register. If they are liable to deduct TCS, they need to register. Normally also, if aggregate turnover exceed threshold limit, they need to register. Whether Amazon, Flipkart, etc. required to pay GST? Yes. On what? On commission or value of goods supplied by them? Commission. Got it? Next. Which of the following does not constitute taxable supply as per 7 read with 9? Supply by taxable person to taxable person, non-taxable person to non-taxable person, taxable person to non-taxable person, non-taxable to taxable if notified, does not constitute a taxable supply. Okay, simple pa. Non-taxable to non-taxable if notified, definitely it will attract pa. Okay, so one second. Non-taxable to taxable, if notified, everywhere there will be taxable supply only, because see, unregistered person to unregistered person, if notified, definitely there will be tax. And who will pay GST if notified? Recipient. But the recipient is non-taxable, means they need to register and pay GST. Correct or not? Maybe in the given option it is apt, because here taxable person if notified means they will pay GST under RCM. Out of the given options, B is the valid. So even though B is not 100% correct, but compared to other options, B is the apt option. Okay, because when unregistered person is making supply of notified goods or services under RCM to registered person, it is RCM. To unregistered person also it is still RCM, and the recipient has to compulsorily get registered. But in the given options, B is the apt one. What is e-commerce covered in GST? Supply of goods and or services on an electronic platform for commerce other than supplies of e-commerce operator himself. Supply of goods or service on electronic platform including the supplies of e-commerce operator. Supply of goods or services on an electronic platform for commerce, e-commerce. Which one pa? Definitely all of the above is not the answer. What is it I told you? What is e-commerce covered in GST? That is mostly what products we have seen. Supplier and e-commerce operator should be different. So when it is different, which case it is different? Other than supplies of e-commerce operator himself. Because if the supplier and e-commerce operator is same, it is not supplies through e-commerce operator. Correct? That's what I told you pa. Supplies through e-commerce operator means supplier and e-commerce operator should be different. Correct? So in these two examples, supplier and e-commerce operator are same. That's the reason why it is not covered under GST. What is covered under GST? Supply of goods or services through e-commerce operator, means e-commerce operator should be different from supplier. Then next, which of the following services provided by e-commerce operator is notified by government on which tax is paid by e-commerce operator? Transportation of goods, is it notified? Is it notified for 9.5? That is e-commerce operator is paying tax, means 9.5 they are asking. Tell me which one is notified for 9.5. Transportation of goods is notified for 9.5. No. Transportation of passengers. Service by way of providing accommodation in hotel and hotel is registered. No. That is also not notified, because accommodation services the supplier should be unregistered. Service by way of housekeeping such as plumbing, carpentry, etc. and the person supplying such service is not liable to be registered. Yes. HATE, for H and A supplier should be unregistered. Transportation of passengers by air? No. that is not covered. Only transportation of passengers by roadways. I told you Ola, Uber, Rapido, that is only covered. Next, in which of the following supply of goods or services made exclusively to government departments, agencies, etc. and persons notified under section 51, TDS is required to be deducted? The amounts given below are inclusive of GST wherever applicable. Assume all other conditions for deduction of TDS are fulfilled. Health Department executed a contract with a local supplier registered under GST to supply medical grade oxygen of 2.6 lakhs and is making full payment. 2.6 lakhs is inclusive of GST. Take out GST, 2,60,000 into 100 by 118. How much? 2,20,000 something, which does not exceed. So TDS is applicable or not applicable? So no TDS. Then second, government school is making payment of 3.5 lakh to a registered supplier for supply of cooked food as midday meal under the scheme sponsored by central or state government. Sir, government school is making payment to a registered supplier for supply of cooked meals, catering services to category 1 institution is what? Exempted. When the supply is exempted, whether TDS is applicable or not applicable? Not applicable. So no TDS. We discussed now catering services, transportation, security within premises, housekeeping within premises to category 1 educational institution will be exempted. Municipal Corporation of Kolkata purchases a heavy generator from a registered supplier in Delhi. Now it is making a payment of 5 lakh for such purchase. So Municipal Corporation of Kolkata purchases a heavy generator from a registered supplier, means definitely TDS will be applicable because the supplier is registered, and the payment of 5 lakh. So excluding GST it is more than 2,50,000. And where is the supplier located? Delhi. And the recipient is located in Kolkata. Place of supply is also ending point Kolkata. All conditions are satisfied, so TDS is applicable. Finance Department in Delhi is making a payment of 3 lakh to a registered supplier of printing and stationery in Delhi. Supplier is registered and value is more than 2,50,000 because 3 lakhs excluding GST is more than 2,50,000 only, into 100 divided by 118 is 2,54,000. So more than 2,50,000. So definitely TDS is applicable in this case. So in which case TDS is applicable? 3 and 4. Option D is the answer. 3 and 4. Then see this 7. Vikas Nigam Limited, a public sector undertaking, has placed an order to Bharati Steels registered in Bokaro, Orissa for supply of 70 iron shields, each costing 12,000 excluding GST. However, the supply will take place in 3 lots containing 10 shields, 20 and 40 on different days. Determine whether a tax is required to be deducted under GST law by Vikas Nigam Limited on the above order. Okay. What is the number of items? 70. What is the value of each item? 12,000. What is the total value of supply under the contract? Don't see transaction wise. Don't see transaction wise. Even though they deliver 10, 20, 40, don't see it separately. If you see it separately, 10 into 12,000, 1,20,000 does not exceed 2,50,000. So no TDS. And 20 into 12,000, that is 2,40,000. It does not exceed 2,50,000. So no TDS. Then 40 into 12,000, that will be 4,80,000. So on that case only TDS will be applicable. Like that you will think. Wrong answer. No, it is not the way. So whenever we are entering into contract, we should not see the delivery value. We should not see the invoice value. We should see the contract value. What is the total value of supply under the contract? It is more than 2,50,000. So for all these 3 supplies, TDS is applicable. No TDS will be deducted. Wrong. TDS is deducted on third lot of 40 shields only as value exceed 2,50,000. Wrong. See how beautifully they are giving, and it is like, see, CA exams is like horror movie. In horror movie, we will think one person as the villain, but actually that person is not villain. Someone who is next to us only will be villain. You got it? Like that, they will give options so nicely, so beautifully like that. Be careful. That is not the correct answer. Everyone will think 40 shields value exceed 2,50,000. Idudanda like that they will write. No. TDS will be deducted on entire order of 70 shields. TDS is to be deducted on supply of second order. No. So option C is the answer in this case. Then this question number 1 already we discussed. It is there. Next, look into question number 8. Question number 8. As this is a newly added topic, so we don't have much questions in this, but definitely going forward they will be asking. Mohan, a registered person in Salem, Tamil Nadu, makes intrastate supply of taxable goods amounting to 13,57,000 inclusive of GST to a PSU. Consideration for the same is received in equal installments from PSU. Tax rate applicable CGST 9%, SGST 9%, IGST 18%. What will be your view with respect to applicability of TDS provision as per section 51 regarding the above transaction? See, what is the total value of supply under the contract? 13,57,000 into 100 divided by 118. That will be 11,50,000, more than 2,50,000. So TDS is applicable or not applicable? Applicable. But TDS is computed on what? Amount remitted. How the money is remitted? Equal installments. So in every installment we need to take, and whatever is the equal installment, say for example it is over 10 installments means divided by 10. If it is 5 installments divided by 5, every installment TDS will be computed. So TDS is not computed on 11,50,000 at a time. Every time they make the payment, at the time TDS will be computed. What is the period by which TDS is required to be deposited to the government account? So by when? 10th of the month following every month in which the TDS is deducted. Say this. Aggregate value of supply 11,50,000 as the value of supply under the contract exceed 2,50,000. TDS is deductible because supply to PSU is notified. However, TDS computed on the amount remitted by PSU to Mohan based on each installment. Such TDS is deducted each month should be remitted through 7 by in GSTR 7 by 10th of the month following every month. Clear? Next one. Question number 9. Mr. Boluram, a supplier located in Meerut, UP, supplied the bed sheets, pillow covers and blankets to government agency registered in UP under a contract. The total contract value is 4,61,000 excluding GST, and it should be bifurcated between these three. Is government agency required to deduct tax at source while making the payment to Mr. Boluram under section 51? If yes, determine the amount of tax to be deducted at source. Now, what is the total value of supply under the contract which exceeds? Even though they are supplying separately, but what is the total value of supply under the contract? It exceeds 2,50,000. Correct, Appa? They may raise 3 separate invoice, 3 separate supplies, anything okay, but we should not see all those things. We should see the total value of supply under the contract. It exceeds 2,50,000 and definitely TDS will be applicable. And what is the rate at which TDS to be applicable? 1%. And he is also in UP and government agency is also in UP. So it's an intrastate supply. Ending point is in Uttar Pradesh. So CGST, SGST. So how much? 2,40,000 plus 1,53,000 plus and 4,610 SGST. TDS towards CGST and TDS towards SGST. Clear here? So remaining all small questions only. So we completed this. Then look into Accounts and Records chapter. Page number 174. Page number 174. This is a theory chapter, but not necessary that they have to give it only at the end, because nowadays CA Institute is playing so smart that they know that theory questions every student will give it in choice, because last question you have to write any 2 out of 3. So first question compulsory, and the third question they used to give theory question, but now what they have done, they will give it like a situation. There is one person who started the business and he wanted to know what are the various accounts and records to be maintained. As a tax consultant, comment on what are the accounts and records to be maintained, like that. In a normal question, part A will be practical question, part B they will give it like this. So that if you want to write that part A, you have to write, and part A will be easy question. So if you need to attempt that question, definitely you need to know theory also. Okay. So listen, what are the accounts and records to be maintained by every registered person as per section 35? As per section 35, they are required to maintain the following accounts and records. What are they? Remember the mnemonic I formats. I for inward supplies. Don't write I formats, but write the points. Inward supplies. Inward supplies from whom? From suppliers, along with name, address and details of the suppliers with supporting invoices. Correct? Supporting invoice, debit note, credit note and other documents. Purida pa? Don't write inward supply alone pa. So this mane, tene, ponmane, garnish and all you need to do. This is the heart, but don't write that alone. If you write that, they will not understand. So therefore you need to write the full explanation about it. That and all you know now how to. Napa. Auditing you have to study that way only. Auditing you have to study the keywords. Then garnish here and there you need to. So then automatically you will get marks. Like that, don't write only inward supply. You write the extra information for that. Inward supplies along with name, address and details of the suppliers with invoices, debit notes and credit notes issued by such suppliers. Okay. Second, all accounts and records pertaining to F. So first you remember what is I formats. I, inward supplies. F, foreign trade. Foreign trade means import and export. O, outward supplies. Then R, RCM purchases. That is what are the inward supplies on which you need to pay GST under RCM. Then M, manufacture records, related records. A, advances received, paid and adjusted. T, tax details. Tax details means input tax and output tax. And S, stock details. Okay. So this you don't write like this. You have to write in the full form. First, a registered person under section 35 of CGST Act is required to maintain the following accounts and records. Number 1, all accounts and records related to inward supplies along with name, address and details of the suppliers with the tax invoice, debit notes and credit notes issued by such suppliers. Number 2, all accounts and records related to import of goods or services and export of goods or services along with the relevant documents. Next, number 3, all accounts and records pertaining to outward supplies along with name, address and details as applicable with respect to the customers along with invoices, debit notes and credit notes issued to such customers. And next step, then R, out of the inward supplies we need to separately maintain inward supplies on which GST is payable by the recipient under RCM under section 9394 of CGST Act. You got it? Next, M, all accounts and records related to manufacture and production of goods with the details like process accounts, process accounts. What are the process? Various process and utilization of inputs in the process, like that we need to write. Okay. Then A, all accounts and records related to advances received from customers and advances paid to suppliers and adjustment of these advances with respect to payment of GST. Next, tax details. All accounts and records pertaining to tax paid on inward supplies and tax payable on outward supplies. Then yes, all accounts and records related to the stock of goods along with the addresses of the location where such stock is stored. Clear? So then it will be like an answer. If you write only this, it is not an answer. Some key points you have written and went like that, they will not give marks. Okay. Next, in case of a person opting for composition scheme, this T and S not required, only I for ma. So this tax details and stock details is not applicable. Then as per section 35, where these accounts and records should be maintained, these records should be maintained by every registered person in principal place of business and records pertaining to additional place of business in each additional place of business. For example, I am having place of business in 3 places, Chennai, Coimbatore and Madurai. Chennai is my principal place of business, Coimbatore and Madurai is my additional place of business. In Chennai, I need to maintain accounts and records of Chennai, Madurai and Coimbatore. But in Coimbatore, only Coimbatore. In Madurai, you got it? In principal place of business, they need to maintain all accounts and records. But in additional place of business, they need to maintain accounts and records pertaining to such additional place of business. Then, what is the period for which they need to retain the accounts and records? Remember 6 years. 6 years pa. 6 years they need to maintain accounts and records. 6 years means 6 into 12, 72 months. From when? From the due date of filing annual return for a financial year. For example, financial year 2025-26, they need to maintain records up to when? For financial year 25-26, you see the due date of annual return. So what is the due date of annual return? 31st December 2026 plus 6 years. So that is 31st December 2032. Till that date, we need to maintain the accounts and records pertaining to 25-26. Is it clear, pa? 6 years from the due date of filing annual return for the relevant financial year. Suppose for this financial year, you went for an appeal. Say in that financial year, officer passed one order and you are not happy with that order, and against that order you will go for appeal. When you go for appeal against that order, what will happen? So the court will give the decision 1 year from the outcome of that decision or 6 years from the due date of annual return, whichever is later. Okay. Now you have a homework after this batch. What you need to do? You sit for 1 hour or 2 hours, you take a sheet and you write all the provisions in GST where it is whichever is later. Yeah, whichever is earlier, by default you will remember. Everywhere whichever is earlier by default, because by default it is whichever is earlier. Only whichever is later you need to remember, so that you will not get confused. Otherwise, sitting in the exam hall, how much ever good preparation yours will be, but after seeing the question paper, that too DT portion, you will not understand anything. Why am I alive like that and all you will feel. Okay. So therefore, whichever is later, you remember and go for exam. Same way, usually the provisions will be whichever is higher. Many places it is whichever is higher. In a government needs more money, so whichever is higher. But in some places it will be whichever is lower. That also you separately remember and go, because always by default it is whichever is higher. You follow this for GST, income tax, even law. These 3 places you please make a list of it, so that it will be like a revision. One way it is like a revision. Second, this 1 day before the exam, you can quickly go through that and go for exam, because in MCQs they will play there only. Even though you know the answer, But after seeing that options, you will get a doubt, whichever is lower or whichever is higher, like that. So that's why, so it is better to make note of all those things and go. Got it? So here whichever is later, that is 6 years from the due date of filing annual return or 1 year from the disposal of appeal, whichever is later. Then every transporter or warehouse keeper, even though not registered, should obtain unique enrollment number and maintain necessary records. In entire GST PA, 4 places they need to obtain UEN. Number 1, every transporter. Number 2, warehouse keeper. Number 3, supplier of goods through e-commerce operator making only intrastate supplies. We studied. And number 4, every person who want to generate e-way bill. Unregistered person who want to generate e-way bill. Somewhere you make note of this. So UEN is required in the following cases. What is UEN? Unique enrollment number. Unique enrollment number. Unique enrollment number, that is UEN, is required in the following cases. Unique enrollment number is required in the following cases. What are the cases where UEN is required? Number 1, transporter. Transporter, registered or unregistered? Unregistered. For unregistered people only UEN is required. For registered people, UEN is not required because already they have a GSTIN. So UEN is only for unregistered people. So that is common. Transporter. Number 2, warehouse keeper. Next, supplier of goods through supplier of goods through e-commerce operator. If they are registered, anyhow they will have a GSTIN. If they are unregistered only. Number 4, person opting for generation of e-way bill. So if I am an unregistered person but I want to generate e-way bill, I have to get a unique enrollment number. So all these people are unregistered people, but they need to get unique enrollment number in the portal, and just it is like kind of identification number. But UEN is different from UIN. There is something called as UIN, unique identification number. Who will get that unique identification number? Embassy, consulate or UN agencies. So we have UN agencies like UNESCO, UNICEF, WHO, etc. Then embassies and consulates in India. They are called as foreign diplomatic mission in India. Their outward supplies are actually exempted. Their outward supplies are exempted. But on their inward supplies, they are required to pay GST. We studied in exemption chapter. Services by notified organizations, EPFO, ESIC, there we discussed foreign diplomatic mission in India. So their outward supply is exempted, but they will have some inward supply on which they pay GST. That GST paid on inward supplies, they will get refund. In order to claim the refund, they will take unique identification number. That is different. Don't get confused between UEN and UIN. Okay. UIN is required in case of UIN, that is unique identification number. Unique identification number. Unique identification number, that is UIN, is required in case of UIN is required in case of UN agencies, comma, embassy or consulate. UN agencies, embassy or consulate. Okay. Now, rather than asking a generic question, what are the various accounts and records to be maintained by a registered person? If they ask like that, you write this. But suppose if they ask a specific question, what are the accounts and records to be maintained by agent? What are the accounts and records to be maintained by works contractor? Like that and all they will ask. Then what we need to write in that case? That's why I gave one table in the next page. For every question, same answer. You understood? For every question we write the answer. We learnt only one answer, pa. We write that answer only. Little bit trimming we will do. Okay, see there. Suppose if they ask what are the accounts and records to be maintained by a manufacturer, what you will write? I format. Same story. I formats. Extra what you need to write? I told you. Manufacturer means process accounts and details of waste and byproducts. These are the other records they need to maintain. Process accounts means your process costing. That. So different process, we prepare a process account na, that, and details of waste and byproducts. Next, what are the accounts and records to be maintained by a trader? Everything except manufacture. Now trader will not do manufacture, so everything except manufacture related records. What are the accounts and records? But there don't write manufacture, then you will not give marks. Okay, then they will understand you whatever hack you followed. Got it? Don't show your ignorance there. Okay, then what are the accounts and records to be maintained by a service provider? Service provider, why manufacture required, not required? So I formats except manufacture. Extra, service provider should also maintain how the inputs and input services are utilized for providing output service. Details related to goods or services utilized in outward supply. For example, I am a service provider and what I should do, I am purchasing paper. How much of the paper is used in making books and selling it as books? How much of the paper is used in making books which are given as a video lectures or sale of lectures? Because books given as a part of lectures will be covered under GST, but books given which is sold separately will be exempted from GST because books are exempt from GST. And therefore, if I give it along with the lectures, it will become mixed supply and the highest rate will be coaching. So 18% will be applicable. Whereas normally when I am selling books, no GST on that, it is exempted. So now the paper is common enough for me. So printing is common. So I have to maintain that inventory record separately. How much of paper, how much of printing is used in sale of books, is used in sale of lectures. Like that I have to maintain the records as a service provider. Are you maintaining, sir? I am maintaining. Whether others are maintaining, sir, I don't know, pa. Not everyone will know GST, na. We don't know. If you want to complain, you can complain. Then next, say this. So that's why lot of times people will have a fear when income tax department come or GST department come. Why will people be afraid? For any person, for how much ever perfect they may be, at least one mistake they will do in income tax and GST. That's why big people and all also will be afraid of income tax raid, GST raid, because they can identify easily. They can identify because not everyone will read every provision. They will also read summary book and will go. So that's why they might not be knowing. Say this. Composition scheme, and some coaching centers are there in Chennai. What they do is that CA coaching fees and all, they will put it under BCom fees and escape from GST. I am not talking any particular person, just like that. Okay. Then what are the details, accounts and records to be maintained by a person opting for composition scheme? What records, pa? I pharma. This TS is not required. What are the accounts and records to be maintained by a person who is a agent? I formats everything, but with respect to each principal, they would have got a contract copy in an agency contract. That details of authorization from each principal and statement of account. They will share account statement. In consignment chapter you would have studied. The consignment agent will share account statement with the consignor. Like that with every principal we will share account statement, that also to be maintained separately. Then works contractor, what are the accounts and records to be maintained? Works contractor is a service provider. Therefore, manufacture related records is not required. So, I-Pharma except manufacture, and all these records should be maintained separately for each contract, plus payment received with respect to each contract. Why? For recognizing the contract profit, we need the expenditure incurred till date divided by total expenditure degree of completion. So, based on that only we recognize the contract profit. Okay. AS7 construction contracts. So, in order to recognize the profit based on the expenditure ratio, so we need to know about the expenditure for each contract separately. That is why payment received with respect to each contract they need to maintain separately. Registered transporter, I formats except manufacture plus along with the details of goods transported. Now concentrate. What are the records to be maintained by unregistered transporter? Now your department, your GST department, you tell me what you expect from an unregistered transporter. I am an unregistered transporter. What details that you need from me? Think, just think and answer. Whose goods I am transporting? Correct? Means GST of consignor, consignee. Next, what goods I am transporting? Correct? From where to where I am transporting? Am I right? In between, did I store any goods anywhere? Am I right? These are the details plus the vehicle number, vehicle details through which I have transported. So, see there. Description of goods, consignor details, consignee details, vehicle details, delivery address and storage address. Easy pa? Next, as a registered warehouse keeper, what are the records I need to maintain? I formats except manufacture. Correct? And suppose if I am an unregistered warehouse keeper, what details you expect from me as a GST officer? Whose goods I have deposited, means details of depositor. Next, description of goods, value description, everything together. Next, good. What is the date on which it is deposited? What is the date on which it is removed? Next, whether there is any loss during this stage. Correct? See there. Description of goods, value of goods, details of depositor, date of deposit, date of disposal, goods lost or destroyed. Got it? These are the records to be maintained by unregistered warehouse keeper. We covered everything pa. If they ask any kind of question, you will be able to answer based on this table. Okay. Next. You need break or can I continue? Up to 5 o'clock. Yes, no. Fine. I'll stop this discussion now. We will do mighty 50 questions. So that problems and solutions means you will be active. Even if break is not there, you will control. Correct? Then say this. Now, any target completed. Today we completed our target. So that's why we will do mighty 50 questions pa. You all got the booklet, and a small request, small favor I want from you pa. That is, we printed 500 books thinking that 500 people will come. Yes, 500 people will come, but did not because of these rains etc. and all. So therefore, those who are listening to this class in online, and you also, please collect it and give it to your friends or your known people. Anyhow I printed, I have to throw it waste. Instead of throwing it, it will be beneficial for the people. Can you do it pa? Pa edo Tarun sir vande, he is using us for marketing, distribution, like that and all, don't think. Okay. Definitely that is not the intention. If you feel like that, don't take. Okay. Otherwise, definitely you will know a lot of friends who might be doing CA intermediate. So please give it to them. Can you do it? Okay. The problem is that I cannot use it for May 26. This is only for Jan 26. I cannot use it for May 26. Moreover, for May 26, based on Jan 26, I will change the questions. How I am making these questions is that out of my research. The research is simple. I'll see the RTPs. I'll be tracking of each and every RTP, past exam question, how they are asking. Some questions, some amendments they will ask. Some amendments they will not ask. So on that I will coin the questions and I will be giving. That's why many students feel like at least 2-3 questions will come from IT 50. Okay. But it's all because of the research only, nothing else. Okay, say this. Look into the question number 1, MIT 50 questions for Jan 26 exam. Question number 1 is a comprehensive question. Whenever you get a comprehensive question, that is computation of net GST payable, you need to prepare the answer in 4 statements. First statement is statement containing the GST payable on outward supplies under FCM. Second statement is your RCM, inward supplies RCM liability. Third statement will be input tax credit. Fourth statement will be net GST payable. You need to prepare the answer in 4 statements. First is FCM liability. Second is RCM on inward supplies. Third is ITC. 4 is net GST payable. Say this question 1. Measures all-in-one, a partnership concern and a registered supplier under GST is engaged in providing various services under one roof. The concern provides the following information pertaining to supply made or input services availed by it during the month of March 2022. First, provided direct selling agent service to Y Bank. Is it inward or outward? Outward. So I told you first you need to identify that. Is it inward or outward? It is outward. Okay. The second thing is that direct selling agent, do we have any exemption? No. It is taxable. But is it covered under RCM? Yes. What are the conditions for RCM? Supplier. For direct selling agent, what is the condition for RCM? Supplier should be other than body corporate or firm. If supplier is body corporate or firm, it's not covered under RCM. Here who is the supplier? Partnership firm. So as the supplier should be other than body corporate or firm. As the supplier is firm, definitely it will be FCM. Okay, wow. Sir, when it is RCM, sir, the supplier should be other than body corporate or firm. Then only it is RCM. But here the supplier is firm. That's why it is FCM only, RCM not applicable. Then number 2. So therefore outward FCM means you know where it will be coming. In the first statement. Second, provided security services to ABC Private Limited, a registered person under GST. Inward or outward? Outward. And security services, do we have any exemption? Yes, to education institution, but it is not education institution, therefore it will be taxable. And is it FCM or RCM? For security agency services, supplier should be other than body corporate and recipient should be registered person, therefore it will be covered under RCM. Then provided recovery agent services to JAN Limited, a financier in motor vehicles. Inward or outward? Outward. It is outward. And recovery agent, do we have any exemption? No, we don't have any exemption for recovery agent services. However, recovery agent service is covered under RCM if the recovery agent is providing services to bank, financial institution, NBFC. But here to whom they are providing? A financier. means not to a bank, financial institution, NBFC. So FCM or RCM? FCM. Provided renting of motor vehicle to Amaze Tours Limited and supply value included cost of fuel. So is it inward or outward? Outward. Outward. And renting of motor vehicle, we have exemption, 4 exemption. To state transport undertaking? No. And to local authority? No. To GTA? No. To a person providing transportation to education institution? No. It's not there in the renting of motor vehicle exemption, so taxable. For renting of motor vehicle, if 3 conditions are satisfied, it will be RCM. What are the 3 conditions? Supplier should be other than body corporate. Is supplier other than body corporate? Yes. Partnership firm. Recipient should be body corporate. Yes. And what is the rate of GST? Go to below. Rate of tax for both inward and outward supply is GST, SGST 9% each, except renting of vehicle, for which the rate is, which means that condition also satisfied. For renting, the rate of GST should be 5%. All the 3 conditions satisfied. Supplier should be other than body corporate, recipient should be body corporate, rate of GST 5%. If all the conditions are satisfied, it will be RCM. So it is RCM in this case. Then paid sponsorship to Preeti and Company, CA firm, for an event organized by them to create GST awareness. Inward or outward? Inward. My dear Kumuttais, you are paying money, means you are recipient. You got it? You are paying money means you are recipient. The one who pay money is recipient. Clear or not? The one who receive money will be supplier. Paid means what? You are paying money. So you are the recipient. Means that is your inward supply. Okay. Sponsorship. Sponsorship services. Who is the supplier here? Preeti and Company is the supplier. And all-in-one is the recipient. And sponsorship services for recognized sporting event is exempted. Is it recognized sporting event? No. So therefore it will be taxable. And what are the conditions for RCM? Sponsorship service. Supplier should be other than body corporate. Yes. Supplier Preeti and Co. CA firm other than body corporate. Recipient should be body corporate or firm. So here it is firm. Therefore it will be RCM. You know why you need to identify this inward, outward? Because outward RCM is not taxable in your hands. But inward RCM is taxable in your hands. It will change. Outward RCM is taxable in your recipient's hands. So it will not be added to your liability. Whereas inward RCM will be taxable in our hands, on which we need to pay GST under RCM irrespective of the input tax credit. That's why we need to identify properly. Next, avail representation service from PB and Co., a law firm towards consumer court case. Inward, outward? Inward. Availed. Availed means received. Received. Avail representation service from PB and Co., a law firm towards consumer court case. And advocate services or firm of advocates to business entity whose turnover during the previous year does not exceed threshold limit. Correct? Is exempted. If it exceeds threshold limit, then it will be taxable. Now tell me, is it taxable or exempted? See the question and tell me. Is this service taxable or exempted? Taxable. So therefore it will be covered under? Sure? Last low twist irukku parupa. All-in-one commenced its business from February 2022. Now they are in March 2022. Means what is their turnover during previous year? 0. Advocate services to a business entity whose turnover during the previous year does not exceed threshold limit. Therefore it will be exempted. Okay. So blindly don't write. Read. Okay. So aggregate turnover during the previous year does not exceed threshold limit. How can you say, sir? They started business this year only, then previous year is 0. So definitely it is exempted. That is given here. All-in-one commences business from February 2022 and this detail is March 2022. Next one, imported cloud storage service from Google Incorporation for storing its data. Import of services. Inward, outward, inward, inward. And we learn import of service always. We don't have to check taxable exempted. Import of service will be always RCM. So therefore it will be taxable under RCM. The moment you see import of services, always it will be RCM pa. We discussed now, sir, CG, go salads. I for what? Import of services. Whatever I have striked off is the exemptions related to import of service. But import of service point can be tested in exam and it will be RCM. Okay. Now, determine the GST liability of all-in-one for the month of March by giving necessary explanation for treatment of various items. Rate of tax for both inward and outward supplies CGST, SGST 9% each, except renting, and all supplies are intra-state unless specifically applicable. First, we will take outward data. GST liability on outward supply. Direct selling agent services, it will be FCM. So how much is the value? 4 lakhs into 9% and 9%, 36,000, 36,000. Understood now? Second, security services, RCM, so don't add it to the liability of all-in-one. And third one, recovery agent services, 1 lakh will be FCM. So 1 lakh into 9%, 9%, 9,000, 9,000. And renting of motor vehicle, outward under RCM. So don't add it to liability of all-in-one. So we will not take this. Next, this is total GST on outward supply, 45,000 and 45,000, CGST, SGST. Then next, inward supply. Understood up to this? Inward supplies. Only 4 outward supplies pa we have given treatment. Then we have 3 inward supplies. First inward supply, are they required to pay GST under RCM? Yes. So on that 40,000 into 9%, 9%, 3,600, 3,600. Legal services is exempted. But writing the answer is not important. How you are writing is important. So these notes and all you have to read once. Like one thought process it went na to answer taxable, exempted, FCM, RCM. That thought process you have to write. That is what they are expecting. You write only the answer. Say for example, you got these numbers. For numbers, you will not get marks. Maybe some 4 marks like that you will get if it is a 10-mark question. But for writing these explanations, why it is taxable, why it is exempted, why it is FCM, if you see everywhere in detail I gave the explanation. This is how you need to present it in the exam. Is it clear? Next, so legal service, why it is exempted, you have to write the reason. And next, last we have import of services. So import of service will be covered under RCM. But even though they gave that everything is intrastate supplies, that word is given na, all supplies are intrastate unless specifically applicable. Now what a student will do normally, CGST, SGST like that they will take. But you missed one point. What is that? Import of goods, import of services will be deemed interstate. So always it should be IGST. So import of service should be kept under IGST column. You got it? So what is the import of service value? 60,000 into 18%, that is 10,800. So total 3,600, 3,600 and 10,800 is their inward supply liability. Okay, Papa? And in this question, we are not going to compute the net GST payable because that is not asked. Determine the GST liability of all-in-one for the month of March 22. That's it. They did not ask us to compute net GST payable, so we are not going to do the computation of net GST payable. Okay. Beyond this, whatever is not asked, you don't do. Don't waste your time. Whatever is asked, that perfectly you write, that is sufficient. Understood this first question? Then look into question number 2. Sundar is HRD head of Infosys for the year ending 31st March 2021. CTC of Sundar as per employment agreement is as follows. Salary 2 lakh rupee per month, so total 24 lakhs. Residential accommodation, conveyance facility, so total cost to the company is 33 lakhs. On January 1st, Infosys gifts a new car to Sundar worth 12 lakhs. Gift of car is not covered by CTC as well as employment agreement. Means, is it a perquisite or gift? Gift. Definitely the value of gift exceed 50,000. So is it supply in the hands of Infosys? Yes. In the hands of Infosys, it will become supply under 71C as the value of gift exceed 50,000. What if it is covered under CTC? That is as a part of employment agreement, then it will come under perquisite. And whatever perquisite which is given by employer to employee will not be subject to GST because employee to employer in the course of employment is excluded from supply. However, under income tax it will have an impact. Under income tax it will have an impact because that will be taken as perquisite and we will add it to their salary and they will pay income tax on that. But under GST there won't be any impact. Is it clear? Sir, if gift is given, then under GST also impact is there, income tax also impact is there. Very much, yes. So GST also impact is there. And because of this gift which exceeds 50,000 rupees like that and all, in income tax also we need to add na. Correct or not? So income tax also it will have impact. Next. Look into the next one. Sundar owns a commercial flat. He has given it on rent to Infosys, monthly rent being 3 lakhs. What is this? Commercial flat means renting of commercial property to a company. Is it supply under 71A? Yes. And we don't have any exemption for renting of commercial property. Only one exemption is there, that is accommodation services point. But here it will be taxable. Then discuss whether GST is applicable. Determine the amount of GST liability. Assume that GST rate is 28% for car and 18% for others. First, rent received on account of renting of commercial flat by Sundar to Infosys. What is the treatment of that rent received? First, it is supply under 71A. Why supply under 71A? Renting is an activity for consideration in the course or furtherance of business. So supply under 71A, and it will come under supply of services by employee to employer. Correct or not? Not in the course of employment, but in the course or furtherance of business. Supply under 71A. Hope you remember one chart we discussed. Services by employee to employer, that forensic audit example, that and all I told you. So it is in the course or furtherance of business of employee. So supply under 71A and it will be taxable. And what is the rate of GST? 18%. Attract GST liability. GST at the rate of 18% is payable. Salary received. What is the treatment of salary received? As per 7 subsection 2 read with schedule 3, it is excluded from supply and it will not attract any GST. Then see here, GST at the rate of 18% is payable on the assumption that Sundar is registered. Suppose if Sundar is not registered, he is not required to pay GST. So that's what. Presume that Sundar is not opting for the benefit of threshold limit. Third, residential accommodation conveyance facility provided by Infosys to Sundar. What is the treatment of this? Residential accommodation conveyance. Is it part of CTC? Yes, it is part of CTC, which means it comes under perquisite. So anything which is given by employer to employee which forms part of employment contract shall not be treated as gift. Shall not be treated as gift. Thus it will not attract any GST liability. Both accommodation as well as conveyance facility, it will not attract GST liability because both are part of employment contract. Gift of car by Infosys to Sundar. What is the treatment of this gift of car? as it is not covered under employment agreement and not part of CTC, it is treated as gift, and as the value of gift exceeds 50,000, it will attract GST, and entire value of gift attract GST or beyond 50,000 attract GST? Entire amount. So therefore such gift will attract GST at the rate of 28% on full value of the car. This question is based on that chart which we discussed. Two charts we discussed na in supply chapter, employee to employer, employer to employee, like that. So based on the two charts I made a question like this. Like this you can expect a question, not a task so far, so there is a chance of asking. See, all these are probable questions pa. Probable questions means these are all the questions which they can make, so far not asked. So far asked already they are in practice manual. So what are all probable I have given in Mighty 50. You got it? Not that these questions are there in my practice manual, maybe one or two might be there because it is not tested, but all other questions are probable questions which can be tested in exam. Then look into question number 3. Question number 3. X Limited is located in Ludhiana. It is GST registered with aggregate turnover of 20 crores. It is in the business of manufacture of cast glass. It has received the following services from different persons during December 2021. Service by Department of Post by way of express parcel post, value of service 40,000. What is your answer? Taxable or exempted? Department of Post, what are the exemptions? Inland letter, postcard, envelope less than 10 grams. Is it that? No. So it will be taxable. And Department of Post will be always FCM. So who will pay GST in this case? Department of Post. Definitely X Limited will not pay. The question is, discuss the applicability of reverse charge to the above transaction. RCM not applicable, so this will be FCM. Okay, Vapa? Next. Why FCM? I told you. Services provided by government to business entities usually RCM, but in 5 places it will be FCM. What is that? Department of Post, airport or port, transportation of goods or passengers, Indian Railways, and renting of immobile property to unregistered business entity. Next. Number 2, for transportation of goods, X Limited paid 1 lakh to Indian Railways. For Indian Railways, transportation of goods, do we have any exemption? Yes. If it is notified goods, it is exempted. Is it given as notified goods? No. So, taxable. And who will pay GST? Indian Railways. Covered under RCM or not covered under RCM? Not covered under RCM because Indian Railways always FCM. So, RCM not applicable, and Indian Railways is always chargeable to GST under FCM. Then next. Number 3, X Limited GST registered has taken commercial property on rent from the Punjab government, for which company pays a rent of 2 lakhs. Punjab government. First, for renting of immobile property by government, do we have any exemptions? That specific exemptions? No. General exemptions also not applicable. First general exemption not applicable, second general exemption applicable, but the value should not exceed 5,000. But here the value is 2 lakhs. Upper general exemption also not applicable. So it will be taxable. Are you understanding? So neither specific exemption nor general exemption. So taxable. Whether renting of immobile property is covered under FCM or RCM? RCM. Only renting of immobile property by government to unregistered business entity is FCM. But here it is registered business entity. So due to that reason, it will be covered under RCM. So recipient shall be liable to pay GST. Next one, X Limited has taken security services for factory complex from the Mumbai government, for which payment of 50,000 is made. Do we have any exemption for security here? No. And government providing security services not covered under specific exemptions, not covered under first general exemption as well as second general exemption, because the value is 50,000. So due to that reason it is taxable and it is government services to business entity. Definitely it is RCM, not covered under that 5 na. Not covered under that 5. Department of Post, Airport or Port Transportation, Indian Railways, renting of immobilier property to unregistered business entity. So generally government service to business entity will be covered under RCM. So therefore it will be covered under RCM. Then X Limited has taken security services from Task Force Security Limited, a private sector company for which payment of 95,000 is made. This is from a private, means security agency services. Security agency services, is it covered under FCM or RCM? What are the conditions for RCM? Supplier should be other than body corporate. But here Task Force Security is a body corporate. So therefore it will not cover under RCM, it will be FCM. Supplier will charge because security service provider is a corporate, body corporate. Then look into question number 4. Charm Limited registered under GST in the state of Jharkhand manufactures cosmetic products and appointed Mr. Handsome of Mumbai, who is registered under GST in the state of Maharashtra as their Del Creditor agent. To sell their products, being a Del Creditor agent, he agrees to raise invoices in his own name and also guarantees for the realization of payment from customers to Charm Limited. Basically, what this Del Creditor agent is doing, the Del Creditor agent is going to give the, make the sales, but first he will make the payment to the supplier, that is principal. For example, you are a Del Creditor agent, you will first make payment to me, I am the principal, you will first make payment to me and then you will recover the money from your customers. Okay. So being a Del Creditor agent, he agrees to raise invoice in his own name. And you are an agent acting on behalf of principal. Why you are an agent acting on behalf of principal? Because you are raising the invoice in your own name. So remember, any transaction between principal and agent constitutes supply under 7(1)(c) if the agent is acting on behalf of principal. Again I am repeating, any agent, principal agent transaction, that is transaction between principal to agent or agent to principal involving only goods, because principal agent transaction should be only goods, then only it will come under 7(1)(c). So you can see this in supply chapter, we discussed that is any transaction between the principal and agent, it will become supply under 7(1)(c) only in the context of goods, not in the context of services. 7(1)(c) principal and agent transaction only in the context of goods. And when the principal agent transaction will become supply, if the agent is acting on behalf of principal. When an agent is acting on behalf of principal, if the invoice is raised by the agent in his name, then the agent is acting on behalf of principal. If the principal is raising the invoice to the agent, principal is raising invoice to the buyer, then the agent is not acting on behalf of principal. But when agent is acting on behalf of principal, the invoice should be raised by the agent in his own name. It should not be in the name of principal. If it is in the name of principal, that agent is not acting on behalf of principal. If that agent is not acting on behalf of principal, then between principal and agent it is not a supply. But here see there what happened. So Charm Limited is the principal, Mr. Handsome is the agent, and the agent is raising invoice in his own name, means the agent is acting on behalf of principal or not acting on behalf of principal? Acting on behalf of principal. So that is this. We have a CBIC circular which says that when an agent is acting on behalf of principal, you can see that information here. Page number 24. When an agent is termed as acting on behalf of principal, an agent should represent principal in all respects. Page number 24 you take in revised book. When an agent is termed as acting on behalf of principal, an agent should represent principal in all aspects and raise the invoice in their name or accept the invoice in their name, that is agent's name. then only the agent will be acting on behalf of principal. Is that clear, pa? Next, what about a del creditor agent? Apart from normal money received by the del creditor agent from buyer, del creditor agent will also get interest. Why he will get interest? Because as a customer, the customer will not pay money on time, but del creditor agent will first make payment to the principal and then recover it from the customer, correct? Del creditor agent will first make payment to the principal, pa, then recover it from the customer. Means literally del creditor agent is giving a finance facility. As del creditor agent is giving a finance facility, so del creditor agent collects an interest from the customer. What is the treatment of that interest? Is that interest covered under interest on loans, advances, deposits and it is exempted, or is it interest on account of delay in receipt of consideration? Now, there was a confusion. Suppose what del creditor agent will tell, sir, I gave a finance, sir, I collected this interest, so it is interest is on loan, sir, so therefore it is exempted. What GST department will tell, no, this interest he is getting because he is going to collect the money late, so this interest is on account of delay in receipt of consideration and it will be taxable. Finally, some solution is required, for which CBIC gave a clarification. See that clarification in page number 27. See that clarification in page number 27. Whether interest received by del creditor agent is chargeable to GST. If the del creditor agent is raising invoice in his name, pa, you are the del creditor agent, you raised invoice in your name, means to your customer, you are only the supplier, because they don't know me. They don't know me, they know only you. So therefore you are the supplier to the customer. So whenever you collect the money late, that is on account of delay in receipt of consideration, so that interest will be taxable. Okay, va? Read it. If del creditor agent is raising the invoice in the name of the principal, or if del creditor agent is raising invoice in their name. Suppose if del creditor agent is raising invoice in their name, what is the treatment? That interest received by del creditor agent is taxable. Why, pa, it is taxable? Because that interest, what you have got, is on account of delay in receipt of consideration, because for your customer, you are only raising the invoice, which means you are the supplier, so that interest is on account of delay in receipt of consideration, therefore it is taxable. Suppose, if you did not raise invoice, I only raised invoice to the customer, then in that case, you are mere financier, correct? So whatever interest that you collected will be on account of loans, advances, deposits, and that will be exempted. If the del creditor agent is raising invoice in the name of the principal, then interest collected by del creditor agent is exempted under interest on loans, advances, deposits. Now coming back to this, del creditor agent is raising invoice in whose name? Own name. Means the interest collected by del creditor agent will be taxable or exempted? Taxable. Now continue this. Question number 4. CHAM Limited, registered under GST in the state of Jharkhand. That's why I skipped all those points, because I gave this question. I want to connect in this question. CHAM Limited, registered under GST in the state of Jharkhand, manufactures cosmetic products and appointed Mr. Handsome of Mumbai, who is registered under GST in the state of Maharashtra, as their del creditor agent to sell their products. Being a del creditor agent, he agrees to raise invoice in his own name and guarantees for realization of payment from customers to CHAM Limited. In order to realize the payment from customers on time, he extends short-term transaction-based loan to them and charges interest for the same. Mr. Handsome provides you the following information carried out during the month of March. Outward supply, goods sold by Mr. Handsome in del creditor agent capacity. On this 2,80,000, Mr. Handsome will pay or CHAM Limited will pay? Ayo, who raised the invoice? Who raised the invoice? Del creditor agent. Then that idiot only will pay GST, na? If you raise invoice, why I will pay GST? You only will pay GST. நானே மொக்கையா கேட்கிற கேள்வி அதுல திருப்பி தப்பா சொல்றீங்க. So who will pay GST? Who raised invoice? Del creditor agent. Then del creditor agent only will pay GST. Who is the del creditor agent? Mr. Handsome. So therefore GST on 2,80,000 will be payable by Mr. Handsome, del creditor agent. because they are only raising invoice. Interest earned from above customers for short-term credit facility provided for timely payment of dues. So what about this interest collected? Taxable, because the invoice is raised by the del creditor agent. The interest collected by del creditor agent is on account of delay in receipt of consideration. So this 20,000 also taxable in the hands of del creditor agent. Both are outward supply. Both cases it will be FCM. The del creditor agent, Mr. Handsome, has to pay GST. Commission bill raised on Charm Limited. Now you are getting a commission. Of course, on that commission also you need to pay GST, and in respect of DCS services, that is also taxable in your hands because you are an agent. So as an agent you get a commission, on that commission also you need to pay GST. These are the outward supplies. Let's see. All these first two is intra, third one is inter. Let's prepare the table. Computation of gross GST payable by Mr. Handsome. Sale of goods. Sale of goods. They have to pay GST. How much? 2,80,000, and it is given as intra. So CGST 9%, SGST 9%. Interest earned from customers. Interest earned from customers is also chargeable to GST. Correct? At what rate? Same rate, because it is included in the value. Usually interest, wherever it is taxable based on original supply. So what is the original supply here? Sale of goods 18. So therefore interest also at the same rate. So into 9%, 9%. What about the commission? It is given as interstate. So therefore it will be IGST into 18%. You understood their gross liability? Over. Now inward supply data they got. See, if the agent is raising invoice in their name, then the agent is acting on behalf of principal. Now the principal who is sending the goods to the agent, in the hands of principal, will it become supply? Yes. 7.1c. 7.1c. Principal is just sending the goods. He is not getting money now. He will not get money now. Only when the agent is selling, the money will be received by principal. So principal is sending the goods to the agent, and the agent is acting on behalf of principal, which means it is supply under 7.1c. 7.1c without consideration. Correct? See that. Interstate supply of goods received from Charm Limited, since being a DCA, no consideration was paid. Even then it will become supply. Why it will become supply? Because of 7.1c, principal agent transaction, where the agent is making supply on behalf of, that is, agent is acting on behalf of principal. So therefore for principal it is a supply. On a 7.1c, the value needs to be determined, because 7.1c no consideration, that they gave in the question itself. The value under section 15 is 2 lakhs. So therefore how much is the value of inward supply made by Mr. Handsome? 2 lakhs. And that is interstate, means IGST. So see the inward supply statement. Second statement, computation of ITC available to Mr. Handsome. Inward supply of goods from principal. They are receiving 2 lakh worth of goods, on which 18% they pay 36,000. Can they take ITC on that? Yes, definitely they can take ITC. We don't have any restriction. Now look into the next one. Received training in marketing and distribution from Charm Limited as per DCA agreement, free of cost. Company charges 75,000 for such training when they provide the same to others. Now what is it? Service. So will they pay GST on the 75,000? Why? Only? Super Tala, super amazing. This is what you should, okay, very good, brilliant, keep it up. Because only supply of goods is covered under 7.1c, and services is not covered under 7.1c. Only supply of goods. Service is not there. For 7.1c, in case of principal agent transaction, only goods. But this is what? Services. Even though it is without consideration, first of all, it is not a supply. They may give value. See how beautifully I told you, na, horror movie example. They gave value 75,000 when they provide the same to others. So if you miss that simple point that services, first of all, it is not a supply, then you would have taken 75,000 into 18% and you would have calculated. And first of all, it is not a supply, so on that GST is not paid. So inward supply of services from principal, no GST. So therefore total ITC is how much? 36,000. And now gross liability 27 and 5,400. This 36,000 will be utilized for payment of this liability. IGST credit should be utilized first for IGST, then for CGST and SGST. Any manner, any proportion, we will divide it equally. So what is the total credit we have? 36,000. From 36,000 we need to first pay 5,400. 5,400 balance 30,600 divided by 2, 15,300, 15,300. So net GST payable will be 11,700, 11,700. Clear? And you need to give the notes accordingly, why it is chargeable to GST, why it is not a supply. That is the explanation I have given. But to the extent possible, you give this explanation inside the table itself. Whenever you are writing the answer in exam, try to give these explanations inside the table itself, so that you may not forget to write. Then and there you will write. Even while reading also, the evaluator will read and there itself they will give the step marks, okay, due to that reason. And this is the flow, this is the flow of transaction. This is not to be written for exam, this is just for your understanding. Just go through this flow once, so that you will understand as to how the transaction is structured. So first, Charm Limited principal, Mr. Handsome is Del Creator agent and there is a customer. Invoice for 2,80,000 is raised by Del Creator agent. As invoice is raised, he is acting on behalf of principal. And when he send the goods, he will be receiving from customer price plus interest. This interest will be included in value under 15(2)(d). And Charm Limited is giving the goods to Mr. Handsome, that is supply 7(1)(c) and the value will be 2 lakhs. But when Charm Limited gives services without consideration, that is not a supply. Based on this, so in exam sometimes when you read the question, you are unable to decode it or write it. Sometimes you write a chart like this, so that you will understand what is inward supply, what is outward supply. You got it? And because if you mess up answer, even though you know the concept, but you will not be able to write, means that's too much. That's why when you get a question like this, like lot of transactions are there, so complicated it is, sir, you just put it, who is supplier, who is recipient, what is happening. So you will get an idea. Thereafter you know what and all will be outward supplies, what and all will be inward supplies, and accordingly you can prepare the answer. Next, look into question number 5. The Resident Welfare Association of Blue Heaven Housing Society in Delhi provides the following information with respect to various amounts received by it in the month of January 2021. Monthly subscription collected from member families 8,500 rupees each from 100 families, 8,50,000. What is your answer? We discussed services provided by Resident Welfare Association to its members where the maintenance charges does not exceed 7,500 rupees per month per member is exempted. But in this case, it exceeds 7,500 rupees. So therefore, it should be taxable. Electricity charges levied by State Electricity Board on the members. So bill is in whose name? Members' name. The same was collected from members and remitted to the board on behalf of members. It will be included or not included? Not included, because the bill is in the name of the members. paid by the association, recovered it from the members. We saw one clarification that will not be included in the value. It is like a pure agent concept. So therefore it will not be included in the value. So don't take. Only this 8,50,000 so far. Electricity charges levied by State Electricity Board on the association in respect of electricity consumed for common use of lifts and lighting in the common area. Means it's a common area expenditure pa. And bill is in whose name? Bill is in whose name? Association name. But what association did? It collected the said charges by apportioning them equally on what basis? Actual basis. This point also I told you in that circular. What is that? If the electricity charges is in the name of the association, bill is in the name of association, and if they recover on actual basis deemed as pure agent, even that amount also not included in the value. What if they collect it on ad hoc basis? Then it will be included. Proceeds from sale of entry tickets to a cultural program conducted by association in the park of Blue Heaven Housing Society. Entry tickets to cultural program, do we have any exemption? No. We have few entry tickets exemption, but that is not applicable for any cultural program, so it will be taxable. Proceeds from sale of space for advertisement in members directory, from members 1 lakh and from non-members 2 lakh. Related to this, sale of space for advertisement, do we have any exemption? No. So therefore definitely it will be taxable. So how much will be taken? 8,50,000 plus 40 plus 3 lakhs. For the second point and third point, you give the explanation. You need to give the explanation as to why it will not be included in the value. Then next, question number 6. Samsung Electronics sells a smartphone to a customer with 1 year manufacturer warranty. During the warranty period, we discussed ITC, warranty, etc. During the warranty period, the customer experiences a defect and visits an authorized distributor who replaces the defective smartphone with a new one from their own stock. Samsung later replenishes the distributor's stock without charging any additional amount. Additionally, at the time of purchase, the customer buys an extended 2-year warranty from third-party service provider Warranty Plus, not from Samsung, from a third-party supplier, which begins after manufacturer's 1-year warranty expires. You are required to, number 1, determine GST liability for Samsung on replacement of defective smartphone under manufacturer's warranty. First, Samsung is sending a new phone to the dealer because the phone is not working. As the phone is not working, a new phone will be sent from where to where? Manufacturer to the dealer. Will it become supply? No, because it is sent under replacement during warranty. So it is not a supply. Then this movement of goods should be under the cover of a delivery challan because it is not a supply and they are not required to pay GST. Now for this smartphone to be replaced, they can take ITC on their inward supplies. Yes, because we have seen in CBSE circular, whenever we are replacing the components or parts or entire product during warranty period, ITC is not required to be reversed, because to make this phone also they will have some raw material na. Whether they need to reverse the ITC on that raw material? No, they can enjoy the ITC on that raw material. You read the answer. As per circular, the replacement of defective smartphone falls under manufacturer warranty, which is part of original supply of goods. Since GST has already been paid at the time of initial sale of smartphone, no additional GST is applicable when the Samsung replaces defective smartphone. The replacement is considered part of the original transaction and therefore Samsung is not required to charge GST or reverse ITC on this replacement. Okay, va? Either they are not required to pay GST, also they are not required to reverse ITC on their inward supplies. Second part. Explain the GST implications for Samsung when it replaces the distributor stock with a new smartphone. So directly when manufacturer is replacing also same treatment. What if they are replenishing? Replenishing means what? The manufacturer will send it to the dealer and now dealer will do the replacement. Okay, wow. Sir, first case manufacturer is only doing replacement. Second case dealer is doing replacement. Then what is the implication for manufacturer? Simple, they are just sending the smartphone. Read the answer. When Samsung replenishes the distributor stock with a new smartphone to compensate for the replacement made by the distributor, the replenishment is done via delivery challan without any monetary consideration. According to the circular, since there is no consideration involved in the transaction, it does not constitute a taxable supply, and as no GST is payable on replenishment, and Samsung is not required to reverse ITC for this transaction. Then third, discuss the GST treatment for the extended warranty provided by warranty plus, considering it was purchased at the time of original sale but from a different supplier. What is the treatment of this extended warranty? Sir, same time, same supplier only, it should be composite supply. As it is from a different supplier, even though at the same time, it will be treated as what? Separate supply and chargeable to GST at the rate applicable to warranty. Correct? In this scenario, the customer has purchased an extended 2-year warranty from a third party service provider warranty plus, which is separate from the manufacturer warranty. Since it is provided by different supplier, then it is treated as a separate supply of service and GST will be charged on the value of extended warranty as a service distinct from original supply of goods. And whatever rate of GST applicable to extended warranty should be taken. Then analyze how the GST liability would change if the extended warranty was purchased from Samsung directly at the time of original purchase. Then what will happen? This extended warranty will be treated as composite supply along with purchase of smartphone, and the rate of GST applicable to smartphone will be taken on warranty also. So if the extended warranty had been purchased from Samsung directly, then this would be considered as a composite supply as per CBSE circular. Actually, it is not a composite supply because it is optional warranty. Optional warranty means what? Either if you want you can pay or not pay, means it is not naturally bundled. Even though it is not naturally bundled, but as per the circular, it will be treated as composite supply. When the extended warranty is not part of the same transaction, it forms part of a composite supply. In this case, principal supply is smartphone, and the GST rate applicable to the smartphone will also apply to extended warranty. Therefore, Samsung would charge GST at the same rate as the smartphone on entire transaction including the extended warranty. Okay, Papa? Next. Why it is not composite supply? Simple, pa, it is not naturally bundled. Every customer will get the warranty. Will every customer go for additional warranty? No. Means without additional warranty also you can buy the smartphone. Yes or no? Means one can be supplied without the another. So it is not naturally bundled, but through circular they are telling that it is a composite supply and chargeable to GST at the rate applicable to principal supply. If this circular is not there, we would not taken it as composite supply. We would not have taken. Then look into question number 7. Determine the value of taxable service in respect of services of transportation provided by Om Shri Transport Agency, a goods transport agency. And see the note. Om Shri Goods Transport Agency is registered person under GST who has opted to pay tax on service supplied by it under forward charge. So they are going to pay GST. First one, transportation of salt and food grains. What is your answer? It is notified goods, therefore it is exempted. Consignment of books transported in a single carriage. Books are exempted, pa. Books are exempted. So therefore 1,50,000 is also exempted. Correct? Like that we don't have any provision in Indian GST law. So it is taxable. Okay. Just because the books are exempted, that does not mean GTA service is also exempted. For GTA service only notified goods is given. Those notified goods if they transport, then only it is exempted. Transport of color TV sets to XYZ Limited, a registered entity, taxable. Transport of auto spares to Mr. A, an unregistered person, exempted. Why? If the recipient is individual, HUF, AJP or a trust who are unregistered and not having a factory, therefore it will be exempted. Transportation of military equipment, exempted. Freight collected for transporting small consignment for a person who paid 700 rupees for each consignment, but we don't know whether they are registered, unregistered, etc. So therefore it will be taxable. Transported goods of local authority who took registration only for deducting TDS, exempted. If the recipient is government, central government, state government or local authority or government agency which is registered only for deducting TDS, then it is exempted. So what are the taxable? 1,50,000, 3,55,000 and 10,000. So total value of taxable service will be 5,15,000, and you need to give the explanation as to why it is taxable or exempted accordingly. Next, look into question number 8. Comment on the liability to get registered under GST law in the given independent situations for a financial year. Your answer should also include relevant provisions of law, notifications or circulars. Miss Riddhima is exclusively engaged in the export of ready-made garments from the state of Rajasthan, and her export turnover during the year is 17 lakhs. Apart from export turnover, she has earned interest on bank fixed deposits for 2 lakhs also. Now listen, we have threshold limit for registration. What is a threshold limit for registration? If you are doing business in a single state, and that single state is in MMTN, what is the threshold limit? 10 lakhs. Then if you are doing business in multiple single state, but that single state is in U-stamp, then the limit will be 20 lakhs. These 2 points we discussed already. So look into your revised book, page 137. If a person is engaged in business in only one state, and if that one state is in MMTN, that is Manipur, Mizoram, Tripura, Nagaland, page number 137. So if a person is doing business only in one state, and if that one state is in MMTN, Manipur, Mizoram, Tripura, Nagaland, the limit will be 10 lakhs. Let it be both goods or services. If they are doing business in one state and that one state is in U-stamp, that is Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya and Pondicherry, then it will be 20 lakhs. Let it be goods or services. All other states, the limit will be 40 lakhs if they are engaged in goods. If they are engaged in both goods and service or services, it will be 20 lakhs. Okay, Papa? So 40 lakhs limit. For example, you are in Tamil Nadu or Karnataka or Andhra Pradesh or Maharashtra. What is the limit applicable for you if you are engaged in supply of goods? 40 lakhs. Suppose if the person is engaged in business in multiple states, they are doing business in different states, and in the different states, one of the state is a special category state and taxable supplies are made from that state. Means one of the state is in MMTN. For example, I am doing business in 3 states, Tamil Nadu, Karnataka, Nagaland. Means one of the state is a special category state and taxable supplies are made from that state. Then the limit will be 10 lakhs. One of the state is in MMTN and taxable supplies are made in that state, then the limit will be 10 lakhs. Suppose if none of the state is in MMTN U-stamp, I am doing business in multiple states, not even one state is in MMTN U-stamp, and if I am exclusively engaged in supply of goods, then the limit will be 40 lakhs. All other cases, the limit will be 20 lakhs. And while doing the limit of 40 lakhs, if I have interest income, it's okay. I will still be treated as engaged exclusively in supply of goods. See this special point number 2. The limit of 40 lakhs is applicable only in case of exclusive supply of goods. However, interest income is allowed. Means even if I have interest income, still I will be treated as exclusively engaged in supply of goods. Now, coming back to this, Miss Riddhima is exclusively engaged in export of ready-made garments and her export turnover is 17 lakhs. Apart from export, she has only interest income. Still, she will be treated as engaged in supply of goods. That bank interest alone is exception pa. If you have only interest income, even though interest income is services, but still it will be treated as exclusively engaged in supply of goods. So what is the applicable limit to her? Where is that she is doing business? Rajasthan. For Rajasthan, what is the applicable limit? 40 lakhs. Is Rajasthan in MMTN? No. Rajasthan in USTAM? No. So other states, exclusive supply of goods. What is the limit? 40 lakhs. And what is her turnover? 17 and 2, 19 lakhs. So required to get registered or not required to get registered? Required to get registered. Why, sir? There are some cases where a person is compulsorily required to get registered. I creations, section 24. Take page number 138. Take page number 138. There are some cases where they are compulsorily required to get registered. In that, I creations, I for interstate supply of taxable goods and export is interstate supply. Export is interstate supply. So therefore, compulsorily required to get registered. Where we studied export as interstate supply, deemed interstate supply. So export is interstate supply. So interstate supplier of goods is compulsorily required to get registered. So like that, what are the other cases, sir? Please complete that. I for interstate supplier of taxable goods other than handicrafts. Then C for casual taxable person other than handicrafts. R for recipient who is liable to pay GST under RCM. E, two e-commerce operators we discussed na. One e-commerce operator who is liable to pay GST under 9.5, another e-commerce operator who is liable to pay TCS. These two people are compulsorily required to get registered. Then agent, every agent making supply of goods or service on behalf of principal is also compulsorily required to get registered. Then TDS deductor, then ISD, input service distributor. Input service distributor takes the credit and distributes the credit. They are also required to get registered. O for two O's, OIDR supplier and OMG supplier. What is OIDR? Online information database access and retrieval services. That is online services pa. Online service provider located outside India and online money gaming supplier located outside India. N for non-resident taxable person. S for supplier of goods through e-commerce operator other than who is making intrastate supply. So tell me who are compulsorily required to get registered. I creations, I for interstate supplier of goods other than handicrafts. C, casual taxable person other than handicrafts. R, RCM 9.3, recipient paying GST under RCM 9.3. ICRE, e-commerce operator paying GST under 9.5 or liable to deduct TCS 52. ICREA, agent making supply on behalf of principal. T, TDS deductor. I, input service distributor. O, OIDR supplier and OMG supplier located outside India. N, non-resident taxable person. Last, S, supplier of goods through e-commerce operator other than making only intrastate supplies. So because of this, in the first case, whether she is required to get registered or not, yes pa. Export of goods is treated as interstate and she is compulsorily required to get registered because her aggregate turnover, irrespective of aggregate turnover, the person is required to get registered. Next, second. Ajanta Enterprises is exclusively engaged in trading of exempted goods under GST in the state of Haryana and has not taken GST registration. Is it so? No need to take GST registration. Yes. A person who is making exclusively exempted supply, total 4 people are not required to get registered. They are exempted from registration. I told you already. Number 1, if they are exclusively engaged in making exempted supplies, or exclusively engaged in non-taxable supplies, or exclusively engaged in RCM supplies, or an agriculturist. Correct? So as this person, Ajanta Enterprises, is exclusively making exempted supplies, so they are not registered. During the turnover, during the year, its turnover from exempted supplies 47 lakhs, and Ajanta Enterprises also sold one old generator for 1.25 lakhs during the year. That is not exempted. Sale of old generator is not exempted. So if they make exclusively exempted, correct? Exclusively exempted, then only they are exempted from registration. What if they make both taxable and exempted supplies? If a person is making both taxable and exempted supplies, then above exemption is not available. So as they make one taxable supply, so their turnover exceeds the threshold limit. How pa? What is the maximum threshold limit? 40 lakhs. Here already exempted 47 plus 1.25, 48.25. So therefore, that Ajanta Enterprises is liable to get registered as aggregate turnover exceeds the threshold limit. Okay. Next. Third, Mr. P, and why 40 lakhs is the threshold limit, sir? Simple. Haryana, other than MMT and U-stamp, and they are exclusively engaged in supply of goods, so the limit will be 40 lakhs. Mr. P has presence in 2 states, one in Haryana, other in Rajasthan, 2 states. He is registered in Rajasthan even without crossing the threshold limit. Okay, voluntarily he got registered in Rajasthan. His turnover during the year in Rajasthan is 32 lakhs and Haryana is 5 lakhs. Is he mandatorily required to get registered in the state of Haryana also? So he is doing business in 2 states. Whether any one state is in MMTN, U-stamp, so the applicable limit will be 40 lakhs. Applicable threshold limit is 40 lakhs. And 32 plus 5, that is 37 lakhs. So therefore, whether he need to get registered in other state also. What is your answer? No, not required to get registered. Listen pa, when a person is registered in a state and he is making taxable supplies in another state, he need to register in that state also. Okay va? When a person is registered in a state, whether voluntarily he registered or compulsorily he registered or because his aggregate turnover exceed he registered, the moment he is registered, in every state from where he is making taxable supplies, he need to register. So see this, a person who is voluntarily registered in one state need to obtain registration in other state from where he makes taxable supplies only if aggregate turnover exceeds threshold limit for registration. In that case, Mr. P is not liable to obtain registration from Haryana since the aggregate turnover does not exceed the threshold limit. But sir, you said differently. I'll come. So whatever I said is as per law, but whatever information given here is as per study material. Which we need to follow, sir? Study material. Even though as per law, section 22 says every person who is liable to get registered is required to register in every state from where he makes taxable supply, like that it is given. As there is a contradiction in that point, in reality, there are different interpretations. ICA clearly mentions that just because you are voluntarily registered in one state, you don't have to register in other state if your aggregate turnover does not exceed threshold limit. So please follow this only for your exam. Okay, Papa? This is a very, very important point which is not yet tested so far. So definitely they will be testing it. Either like a question like this or separately also they can make a question on this. Then you understood this third point. Then fourth one, Mr. John is engaged in the business of buying and selling of shares. Buying and selling of shares means transaction in securities on his own account from the secondary market, and income from this activity is assessed as business income under Income Tax Act. During the year, his total sales turnover from shares was 90 lakhs. Is he required to register or not required to register? Not required to register. Why? Sir, first of all, shares are neither goods nor services. So he is not engaged in any supply. So therefore not liable to get registered. He is not engaged in making any taxable supply of goods or services. Okay. It may be business income under Income Tax Act, but under GST first it should become supply. Then fifth one, Baba Private Limited engaged in cultivation of land in Tamil Nadu and sold agricultural produce out of cultivation of land to the extent of 75 lakhs. They employed hired labor to cultivate and harvest various crops. Now tell me whether they are exempted from registration or required to get registered. Say this. An agriculturist to the extent out of cultivation of land is exempted from registration, then they should be exempted from registration, sir? No. Who will be called as agriculturist? Individual or HUF? A company cannot be called as agriculturist. Who can be called as agriculturist? Only individual or HUF. Either they are doing or through their family they are getting it done. Then only agriculturist. If they give exemption to company also, then almost every company will book their income under agriculture income only, na? You understood? So agriculturist means only individual or HUF. So as it is a private limited company, they may do agriculture. See, they may do agriculture. Whether companies are allowed to do agriculture in India? Yes. For example, Reliance is doing agriculture and is the largest exporter of mangoes from India. Got it? So they can do. Company can do agriculture, but they are not treated as agriculturists for the purpose of tax. Okay. So agriculturist means only individual or HUF, but not others. As per section 23, an agriculturist engaged in supply out of cultivation of land is exempted. In the present case, such exemption is not available as the cultivator is other than individual or HUF. And what is the applicable limit for them in Tamil Nadu? 40 lakhs. And here they are doing 75 lakhs. So definitely they are liable to get registered as aggregate turnover exceed threshold limit. Good question, no? Covers every point in registration. All the points in registration are covered in this question. It's a very good question. Question number 8. So we completed up to 8 questions. The remaining questions we will see in tomorrow's class. And tomorrow what we are going to discuss, the remaining topics, registration, we are left with registration, tax invoice, e-way bill, and even payment process, returns, these topics. And that to the extent possible by afternoon we will complete, and afternoon onwards we will see the remaining questions. Okay, thank you. We'll meet tomorrow. 8 o'clock. Tomorrow morning 8 o'clock.